covering late last week, and the effects of Treasury Secretary Scott Bessent's buybacks or lack thereof, and the influx of money into gold. So those are the main rotations right now, and we're going to be tracking those throughout the day. As always, if you have questions, pop them in the comments if you're seeing this recording, or if you're live, we can talk right here. Get those best 6 stocks in the link in the description down below for August, best AI stocks, and you'll get my recommended newsletters after you submit your email. You'll be able to sign up for those as you wish. You'll get those stocks sent straight to your email. Let's get going. So big news is still going to be PCE tomorrow. There's a lot of attention on Jackson Hole as well. But most people who are trading actively are definitely going to be looking to what happens tomorrow, whether they're taking positions or not. And of course, they're going to be looking at the treasury yields. So let's get cooking here.
A yield that even Kevin Warsh says that he's not concerned about. Is there some signal to be gleaned from that, that it does seem like it's an administration that's so concerned about long-dated yields?
Yeah, they have to be with, I'll repeat, inflation where it is. Oil prices, I mean, they're down today, but they're higher than they were at the start of the year. And then, of course, the debt and the deficits crossing that $40 trillion mark, $1 trillion on interest. That is problematic and is part of the reason the bond vigilantes are out there saying enough is enough. And interest rates have been creeping higher.
Bob, you're going to stick around with us. We have the opening bell to get through. That's Bob Dole of Crossmark as your equity futures rally just moments away from the opening.
I also want to check in on crude oil as well. That's going to be important for sure. It's always important, but particularly with the D-Day comments, whether that has any bearing in reality or not, the Trump calling for economic D-Day for Iran, cutting them off instead of using force. So that's a major market mover. Just looking at the price of oil in general. So definitely going to pay attention to that. Do want to jump into the charts real quick while everyone's on commercial here. So let's make sure we can actually see the charts, huh? So here's the deal. We're kind of in no man's land, right? We're definitely in no man's land. So we're going to see how we open in just a moment. But then when we look at, so that's the SPY, when we look at oil, we are also down a little bit, but not in a spot that's healthy for bulls or bears. And then when we look at Bitcoin, we're pretty extended, you could say, but also the volume is massive. So market is going to open in just a few. There's definitely going to be attention on Bitcoin, of course, but IBIT being that main way to play Bitcoin through an ETF, IBIT, but I don't think that you have to treat it, or anyone has to treat it like a buying signal or anything like that. I mean, sure, there's a ton of volume. We did have that Clarity Act conversation late last week, and the CFTC Commissioner Paul Selig saying basically we're going to go through with making things healthier for crypto companies regardless. But let's tune in the opening bell, and yeah, we'll take a look at where things gap to in just a moment. So here goes.
Be far worse. Haven't even gotten to the suggestion that we change the name of Lake Ontario today, Jim.
Yeah, look, I mean, I think the president thinks that you can poke and it's not a bear, or maybe it's a teddy bear. I do think that the saving grace here is that nobody's talking about anything that will be put in place until January.
Yeah.
So you've got a lot of time to maneuver, and a lot of times to dilute. Maybe the president will get involved with another thing that takes his time away from this.
Carl, forgive me for trying to figure out what exactly was at stake, or were we trying to achieve here? You go back.
Hegemony.
The jobs, right? I mean, that was always one, manufacturing jobs, I guess, to a certain extent. But
Here we go.
the trade deficit is bad if we have it with another country. I don't. At this point, it's hard to remember.
They've not played the card. They have the card, but just we're not domestically self-sufficient. We're continentally North America self-sufficient. You pull into and they say, all right, shut the tap off. I can't believe the party hasn't done that. It just says, oh, guys, turn it like this. Remember,
Vanderbilt.
righty-tighty, lefty-loosey, turn it righty-tighty, and then the United States will be on their knees, David.
Got it.
Got it. That means got it means he's texting someone and he's just betting that got it is right.
Let's get the opening bell here at the big board on Wall Street. It's the government of Puerto Rico. Governor Jennifer Gonzalez Colon doing the honors at the NASDAQ in Times Square. It's Vanderbilt celebrating the inaugural cohort of students at its new campus in New York City. And at SIBO in Chicago, it is the SIBO floor operations team, Jim. As we're not really moving around much on an index level, this 7,700 level's been we've been pretty pinned to it for several weeks.
Yeah.
Okay. Let's do our own homework here. So starting with the SPY. Yeah, we're up slightly. Too soon to say. Oil is where it was just a second ago when we looked at it. And then IBIT is opening slightly down, so not too much to talk about there. The dollar slightly down and the 10-year treasury slightly down. No massive moves. QQQ slightly up, and again, looks good. Let's see what we have for a little bit more topical Fed speak, broader economic info. Sorry, guys.
Tip the hat to the more bullish, hawkish folks on the Fed that are concerned about inflation, or will he just stifle and not say much at all? I think the latter. Markets won't particularly appreciate that.
And this maybe brings us back around to where we started, Bob. Just how much has his life been complicated by what the Treasury is embarking on?
Great question. Certainly, that's an issue that he's got to deal with. Look, I think he's trying to buy some time till the 5 committees he set up can come back and report here in the next few months, and then maybe he'll chart a course that we can understand and get behind.
What about earnings? To Danny's point, we're almost at the end of it. I think around 87% of the S&P 500 companies have reported. Earnings are strong, but why do you think stocks aren't rewarding the beat so much?
That's a great question. First of all, the amount of the beat remains strong, but I note that the 2027 estimates, next calendar year, as of July 1st, the estimates were up 17%, only up 13% now. That's still a good number, but you don't like the direction. I think the market's starting to say, how much stronger can earnings get? And then back to what we've been talking about, if interest rates are going to continue to creep higher, can I sustain a multiple of 20 or higher?
To that point, Bob, do we need to start paying attention to the cost of capital for all of these tech giants who have started to spend more, whether it be the direction that treasuries are moving in, be it Broadcom seeing their CDS spreads blow out? Does this represent a challenge for them as they embark on this path of not just spending, but of borrowing?
Yeah, great question. And I think the answer is yes. We do need to keep our eye on it. Look, a year or so ago, they were financing all this out of cash, and then it was bonds, and then it was stocks, and then it was, we call it circular financing, and then it was, trust me, I'll find the money. So, yeah, I think we have to watch carefully at how much these companies are borrowing to support, in some cases, sales from other people of their own products.
Going back to where we started, you argue that attempts to cap treasury yields could ultimately weaken the dollar. What would be the catalyst in your view that would bring bond vigilantes back?
So my view is they're already they're warming up, if not already singing a song. There's no question that with the level of debt and the level of accumulation of additional debt, the level of interest rates, the bond vigilantes have to be waking up and not be happy.
To what degree are there even vigilantes, though,
Bond
at this
vigilantes.
moment, Bob, considering all the fundamental pillars to why yields are moving higher? Is this not just a market that perhaps instead of vigilantes, it's just underscored by more price-sensitive investors when central banks and even the Fed have pulled back in their involvement in this treasury market?
Now, I don't disagree with you at all. I think there is a key part of what's going on in the market that's looking at those very things. Decent economy, inflation that's
Someone was
not
rumoring
down to the
Citadel was
Fed's
shorting
level or looking
bonds.
like it's going to get there anytime soon. Oil prices stuck at much higher levels than where we started the year. And then this incredible cost to maintain our debt. That's all got to lean on fundamental fixed income investors and say, how much of this paper do I want at these interest rates?
Let's go to inflation. Inflation has cooled, but you point to liquidity, bank lending, and government spending as reasons it could remain sticky. What, in your view, is the market missing?
Treasuries hold gains before auction. So, by the way, these are notes from me yesterday. Looking at this Bitcoin stock, these remain the big events. But if we just go to treasury yields right now, blah, 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 blah. That's CNBC.com, not live TV. Running a little sluggish this morning. There we go. Okay, still complete. All right. Yeah, if we just look at markets, bonds. We go bonds. Here's treasuries. Yeah. So that 5 number will be important. But it's not there right now. It's not there right now. Put that right here. And it's not really moving either. So it doesn't seem that important, right? Guess we could take a look at what's happening in the market here. As far as big movers, John Target, really. You know what? I think let's just look at industry here. Get rid of some of these stocks from yesterday, but yeah, we'll just look across industries in just a minute. Just tune in to see if anything else is popping in that's that pressing. I don't think so. Let's see here.
NVIDIA's
Mary
earnings tomorrow
Daly
face
did her
a
best to
high
try to
bar.
reduce
We
the
discuss with
inventory before
Mandeep
she sold it
Singh
to
next.
them.
This
Dick
is
said the
Global
inventory
Open
was clean.
Interest.
Now, what that tells me is that there's a new inventory problem. It's not there was a reload of inventory, and I wonder whether that.
So does that just mean there's a broader lack of demand for these shoes?
I think inventory keeps getting kicked around, and I'll
The trade that will make your day. This is what it's all been for. The daily commutes, the endless market monitoring, tracing patterns,
Nike, which is
tracking flows,
once again in danger of
auto-quoting,
getting a 38
coffee
handle, Jim.
working orders. This is the trade you've been waiting for. And with next generation speed, automation, and integration, this is the new fixed income EMS that will make sure you win.
I don't know about
Bloomberg
these.
Trade
situation. Now,
Expect more from their execution
Oh, there we go. I was
analysts.
talking about Target.
Was
Some
laughed at
see
when he got
heroes.
the job.
Others, only egos.
Sorry.
Why?
We-
Because he was
Too
from
much
Target,
noise.
and people thought, how can someone from Target possibly change?
That was the whole
Target?
thing. We need a set of fresh eyes.
Right, fresh eyes. Well, you know what? He's changed like 10,000 items. He's done some good things. Now there is an element that I'm not talking about a particular Target costume.
I'm not sure
That's why it's down.
this guy has anything.
What?
There's a costume, but I don't want to really.
A Costco?
I don't. Yeah, okay, let's leave it at that.
Oh, God.
Nobody has
have
any
some
idea what
they
you're
have
talking
some-
about.
They have some merchandise that was inappropriate.
Who?
Target.
You're talking about Target. Yes. This
But
was
I
a
don't-
controversy
But I
yesterday.
don't know if I want to go
I don't know if
beyond
this is
that.
related to
It's
the
so-
stock
build
price.
anything on it?
It's so heinous that I can't figure out who decided to sabotage Target. It's heinous. It's horrible. It's disgusting. And that's all I have to say about it. 'Cause
Okay.
Yeah, I don't know if this is why Target is down. I mean, if you didn't see the costume, it's definitely not good. But yeah, it's definitely not good. We'll put it that way. I don't know if this is pulling the stock down though. This is the costume. Here's the statement. Drew backlash. And then we got this wrong. We're deeply sorry. So everyone saw this. But yeah, I mean, obviously the earnings were really good. It was also maybe a little bit of a, it's kind of like the AI trade where companies say, you know, AI is causing us to lay all of our employees off. And really, like, they kind of were looking for a reason to lay employees off. So it's kind of like that on a, you know, faster feedback cycle where if we look at the chart, I mean, this thing had run a lot. So for it to pull back here is not super unexpected. You can draw your own conclusions, but to me, you know, it doesn't seem like this would do that. It's definitely bad, and it's a huge customer base. But and it brings up an important point. I mean, do you want to buy the stock right now? Probably not today, right? So it does have sentiment repercussions for sure. It's just that you can see how this person just got absolutely ratioed by people who were, you know, supporting the apology. It's also possible this didn't get as much reach in general. So, you know, what's there really to say? Let's look at the market, because this is just one piece. All right, so here we go. Here's the SPY. And crude oil is definitely down now. Bitcoin's down slightly. But importantly, here is the SPY. So, all right, so oil, these stocks are down. There's nothing here. Pretty big move down for XOM, ExxonMobil. Dow Chemical is down. This fertilizer stock is down as well. Some strength there now, but CTVA is moving up, but did pull up a lot yesterday. Into some of these additional chemical stocks here. This is at an interesting spot for sure. It's hard to say with chemical stocks, how much staying power they have, how much momentum. Maybe during like right after the Iran war started, when everyone was worried about fertilizer, that was pretty important, but I don't know right now that it's that important. So selling off there. Copper is showing strength still. These names are tough. Very tough. SCCO pulling back a little bit. Gold showing strength too after a little bit of a gap down here. So a lot of strength around the board, as well as Franco-Nevada mining company. Should look into whether they do silver or what. KGC is a gold miner. He's coming back a little bit. And then steel not really moving up. Aerospace not really moving much, if at all. Coming back some. And then as we move into electrical components, some sell-offs as well. In after gaps. Bloom Energy holding notably, and John Deere coming back pretty significantly. Maybe with Target, one of that recent earnings basket. MDSN is notably holding here. We get into some trading companies here. Coming back, and ADP up, but not strength. Too much strength. FedEx coming back a little bit. And then these oil stocks are not that interesting. Uber looks strong here. Definitely. And then other transportation names. Rivian still doesn't look great here. See what else is going on here. Airbnb still looks pretty strong. Booking looks good. Expedia already went. And I mean, Chipotle had a very strong close yesterday. At some point, this is going to take a breather, I think. But looks pretty good right now. Dash grinding up on not super high volume. Not sure about that one. Same with QSR in this bucket. Pretty nice little shelf here after a little pause after earnings. Yeah, so that's about it for the food stocks. Yum definitely moved up, just getting over the 200. Amazon's holding. And Melly appears to be going. So, strength in Argentina, 5 holding some. BJ's gap down pretty significantly. And there's Target gapping down pretty far. Beverage companies coming back a little bit. Not sure if that's related. General Mills is on here now. Kind of at a strange spot. Mondelez really coming down. And Estee Lauder holding here so far. Definitely has had quite a run so far. I wouldn't be surprised if it cooled off a little bit. Wow. I mean, I'm not gonna take a look at this healthcare stock, but and then here's Hyperliquid, some strength after a gap down. So pretty incredible strength out of that coming into earnings. Get rid of that capital markets stock. Software maybe starting to bottom. And then the crypto name, the massive volume, the Ethereum treasury, BMNR. You know, it still doesn't quite feel like it's quite stumped yet, especially over the weekend. Who knows? Salesforce earnings are coming up. And Palantir is looking very constructive now. So keep an eye on that. SAP for the first time is looking like it might actually cool off a bit here. It's been on a crazy run. Looks like Zoom earnings just came out. Nope, they're going to be this afternoon. Security names developing a shelf. Microsoft, a little bit of strength there. And opto names are all over the place. This Motorola Solutions is just holding pretty impressively. Dell may be finding a shelf there as well with HPE. And Tap is holding there. And SanDisk, after that big volume, holding. A lot of selling volume yesterday, but gapping up. It's a good sign. But not a lot to do in the semis space, unless you're buying into moving averages. So that's pretty much the market around the horn here. SWKS, something happening there. AT&T taking a little break. Maybe Verizon finally taking a little break. Maybe not. It's tough with these ones that just grind. But maybe AT&T slightly weaker. It's hard to say there. This Fox A is really just building sideways. See how that develops, or if it develops. Live Nation looks pretty strong, and then Spotify still looks strong. So that's pretty much it around the board here. Check back in with the broader conversation, but not really much to do, honestly, today. I mean, there will be stuff to do, but I don't see it. 32.8, 39. Really close there. What else here? $49.3, $43.2. Definitely moving in that direction. And then 72.6, 66.1. It's high up there. So definitely gave these room to breathe. But gotta let these be right now, for the most part, unless there's an intraday opportunity. But let's see what they're talking about here. PCE tomorrow, etc. Okay.
Get Claude to do your taxes. Let's see how many people use Claude for their taxes. Yeah, with like the numbers that I've been getting. Oh, man.
Mad Money, 6 p.m. Eastern Time. We'll get some new homes and conference board after the break.
Okay. TV is terrible. I think what we want to do is see if we can figure out what's happening with gold here. Because, I mean, that's always the big unknown, is these metals, they don't behave like individual stocks. They just don't. So, keep an eye on those. For sure. Wonder if there's anything cooking on the tube. I don't know if you guys see anything here. A little slow to load this morning, but I mean, Palantir looks strong. What are these guys talking about? There's a lot of viewers.
You, just you, building your app on Base 44. Describe it. and it's real. One thought
Okay,
leads.
here we go. Here we go.
See it on the scanner, so I was wondering about that. But it has bounced nicely off $4. So DAIC may be worth a look for some of you guys out there. Yeah. I didn't even realize you had it up on your screen.
It's
so
got,
what are you looking
I don't
at?
know.
What are these guys talking about?
It was delisting. It was delisting risk. They got like a
delisting risk.
I don't know that was the story I saw. Like more delisting risk. We have numbers coming in and happening now. But before we get to that, just very quickly, I said it makes more sense to go with a tight stop on.
I'm definitely gonna give this a you know, like a minute.
Try to hold this one too far against. So we got in where the only red has come into the game, but this one looks like it's still heading to the upside. We'll allow it to make a lower high, but we got to get to the desk.
SMCI and Q NASDAQ.
We actually have a couple numbers here. So we've got new home sales, 607,000. That's going to be below the prior print of 628,000. It's also going to be below the forecast here of 620,000. So lower than expected. 20,000. So lower than expected, lower than prior number here for new home sales for July. New home sales month over month.
I've actually heard this
lower than expected. We also
this trade the pool is actually like one of the better ones. Just saying.
Below the prior print of 90.2 and that forecast here of 90.9. So consumers a little bit less confident than what we were expecting. SPY though still higher on the day, a little bit below though that pre-market high and where we open. NASDAQ holding up pretty well. This low here, session low from early this morning around 710.80 could be coming into play in a matter of seconds. Let's talk about earnings, because earnings are definitely in focus here today. And I think the biggest mover at earnings by far is going to be Dick's Sporting Goods. If you're seeing some weakness in Nike and wondering why, this is very likely the culprit. You're going to miss here on Q2 EPS.
I don't know.
On sales. They maintain aspects of their
Who
guidance.
cares about Dick's Sporting Goods?
For fiscal 2026, specifically with regards to Foot Locker, which they acquired.
Oh, AMD.
Other earnings and focus.
Raymond James upgrade.
NVIDIA, CrowdStrike, CRM, IREN, Affirm, and speaking of NVDA, AMD, its peer in the chip sector, is in focus here after getting upgraded by Raymond James to strong buy with a $641 price target. Make sure to like, make sure to subscribe. Stick with us. For now, we're going to send you over to Sean and Neil.
Yeah, definitely make sure you do hit that like and subscribe, and also pay attention to this offer. Here's a trader offer that you cannot refuse. These markets have been extremely active lately, and that of course creates big momentum, which in turn creates big opportunity. But to take advantage of these conditions, of course, you need to be sized properly, and you need discipline and access to capital. And that's where Trade the Pool comes in. Instead of being limited by the size of your own account, traders can access firm capital and use their strategies to manage their own risk. No more fear of blowing up your personal account. No more moving your stop loss too early because you're worried about your savings. This is what we call limited risk trading. So if you want to take advantage of volatility in today's markets, make sure you do that without risking your own capital. And please visit tradethepool.com for more information regarding their offerings. So we want to say a big shout out to Trade the Pool and their continued support here of Trader TV Live.
I'll check them out. I'll do a breakdown in a second. Well, not a breakdown, but we'll look at them.
There in the, on the market, and with that housing drop was enough to break through 213 on NVDA. So that exits that trade, and it was a banger and a chicken dinner winner. So we're really happy with the way that trade wound up basing out for us. So let's just keep the momentum moving now, and hopefully to the high side of this trade as well for NVIDIA. If you guys are still in this, I still like the trade. It's just not really sure.
I'm not sure we need to talk about NVIDIA right now before earnings. I mean, that's a little crazy, I think. What we can do is look at these risk limits. See how feasible this actually is. I've done this before. It'd be interesting to take a sort of refreshed approach to it. So let's take a look at this. Trade the tradethepool.com, right? Allow the cookies. So if we go to, what does limited risk trading mean, right? What does that even mean? Because obviously, I think they mean you're going to lose not much on an absolute dollar basis, but you wouldn't lose much anyway if you were trading your own money, right? So this is the rules. This is the important part. 6% target. Okay. Yeah. So this is not what you want. You don't want to do things in a single day. This is what you want. So this is a 15% target. So it's a little more of a stretch goal. Say you have 30,000, your profit target is 45K. This is the challenging part. The max drawdown is 7%. It's not crazy. So 30,000, you can lose 21K. That's fine. No holding through earnings. Max or flex? Max, you must open and close at least 5 separate positions. Okay. Your best trade cannot account more than 30% of the profit target. I believe your profit target is 4,500, right? We said for a 30K account, it was 4,500. Your best trade must not exceed 1350. Okay. What else? You can trade all the stocks. And you have a little over 3 months. Some tips, and then comparing. You pay $300. Yeah. This is the question. Once you're funded, your account will be scaled once you've reached a 10% profit target based on your buying power. Example, with a 50K funded, reaching a 5,000 invalidated profit qualifies you to. For funded flex programs, you must achieve at least 3 profitable days. Gain 5% or more. I don't know what the flex really means. See when you got once I've hit the target. Pretty much. Restrictions for overnight positions. Okay, so this is normal. People with a $5,000 account. 25,000 exposure. I don't know what the exposure means. Oh, yeah, we don't need to be trading during the overnight session. Okay. Seems pretty normal. Right? Seems pretty normal to me. Swing. I don't know how that changes things when you click these various things. It costs a little more when you're a beginner. Oh, I see. The day trading one goes up quite a bit. So they allow you to day trade quite a more, maybe, because you're not actually trading the stocks. You're trading like synthetic, they're mirrors of the stock. They're basically their derivative of the stock, or they trade you among the other people who are also trading. I don't know how it works, but I'm pretty sure that's how they can give you all this. It's interesting they don't have, oh, I see, once you select the price. Huh. Swing trading is definitely what you would want. But I don't get, why would you pay $800 in order to trade $40,000? That's what I don't get. Right? And you only get 70% of your gains. This doesn't make any sense. Because if you're able to make 15%, if you're able to make 15% on $40,000, right? That's $6,000. I guess if you lose 3%, you're paused for the day. If you lose 7%, that would be 400 times 7. $2,800 is your max loss. You have a little over 3 months. So you can lose 28 and you have to make 6. Is that right? Lose 28, you have to make 6. You can lose a little less than half of what you make. So you definitely have to get going a little bit of a run there. Right? If 100 days, and then you only get 40K, or I don't get it. You must reach a profit target equal to 15% of your account's buying power on both the flex and max. That's what we just calculated. We just calculated this. The only difference between these the flex is a little more flexible. No time limit. Whereas the max has a time limit. Can trade at almost any. Actually spot trading. Yeah, this is the important part. How much profit do I need to reach in order to scale my funded account to the next level? This is the important part. So once you're funded, your account will be scaled once you've reached a 10% validated profit target based on your account's buying power. So it's what we pretty much just said. Or before it's 15 to get funded, and then once you are funded, you have to make that 10%. And then the process repeats every time you hit a new 10% profit target. It's still a little nebulous, isn't it? It's like, so obviously if the price of the stock goes down, I mean, if your funded account value goes down, they can remove your funding, I would think. And then it doesn't say how much they increase it if you gain that 10% profit target. Evaluation review, funded account, scaling criteria, a new account, new parameters, according to the circumstance and program type. The volume of any opening trades must not exceed 5% of the trading volume of the previous one. Okay, that's fine, whatever. Big stocks. I don't know where the... Oh, this part's important. All right. It's not actually that important though, because we have to even assume that they're going to give you more money than you would just get yourself by trading this way, right? Scaling. All right. A newly funded 200K flex account earns 20K valid profit, fulfills the criteria. New accounts open with a starting account trading balance of 224, the tier balance of 210, previous tier balance plus 5%, plus 14K of rollover profit. The max drawn on is 12K, meaning the minimum equity is 210. If the user is 10 additional, then it becomes 234 from 224. Maximum split primate is 70% of the new profit. User requests a payout of 5. A new account is again created. The starting balance is 227. All right. So I don't think you actually get any benefit except what this basically does is what this basically does is say, if you're able to trade well, we'll skip you from the 20 to the 200K. I'm pretty sure. And take 30% or take 30% of your profit. That's what this offers. It's important to say what this actually offers. So, yeah. It's kind of like skipping a year, but it also might take you a year to even pass their challenge, which may have rules that aren't quite what you're trying to achieve as well. So it's definitely different, interesting as like an academic exercise. But I mean, 200K, because if you have literally no money, like $1,000, but you can hit 200K in August. I guess it's more like a year and change. But yeah, a year and change. But the thing is, if it takes you a year and change, this is your account, right? Whereas when if it takes you a year and change to pass their challenge, then it's not your account. You're just getting, I mean, you'll be building up an account, assuming you stay in their challenge. But if you have a little bit of a hiccup, you'll then be back here. So doesn't totally make sense. But if you're just trying to like find a way to get forced into paying attention to high liquidity names based on having a bigger account, then maybe there's something there.
SEC civil complaint. No news that I'm seeing since, but you do have a 2.2%.
Yeah. That's the trouble with these trading things, is it just sort of influences you to look at names that are very illiquid. I would say
75. Hopefully that can come through on SpaceX.
For sure.
SpaceX. Pretty choppy this morning. I mean, not much going on. So we're just going to.
Yeah. It's interesting. Well, what are they doing on Bloomberg?
Still ahead, Bloomberg's Lisa Abramowitz sits down with United Airlines CEO Scott Kirby on 10 new destinations across
United Airlines. Let's see. CNBC maybe is what we want to do here. Let's see.
Is because we're not financing data centers, and we're not financing GPUs or TPUs. We're financing customer contracts to investment-grade counterparties that have boxes and chips attached. And that fundamental underwriting should give the broader markets comfort that for the vast majority of this build-out, contrary to what folks may hear, we're actually just underwriting a stream of take-or-pay cash flows from an investment-grade counterparty. And that's why this has broad market applicability.
What about, is there crowding out? Are there other projects that otherwise would get?
That's bullish.
Not?
So it's a really good question, Carl. I think so far it has not been a question of crowding out. It's been a question of optimization. And so sitting in the seat that I do, helping clients across capital markets, JP Morgan's own balance sheet, private markets, what have you, it's been almost a marginal question. If a client were to execute in a given securitization market, maybe it's 25 basis points more efficient from a pricing perspective than an alternative market. And we're helping those issuers navigate those trade-offs day in and day out. But what we're not necessarily seeing is that, investors are reaching complete capacity, and so they just will not do future digital infrastructure. What we're doing is helping clients solve for that most efficient dollar. Now, what informs that efficiency decision is how the markets react to their capacity constraints. So if I do feel like, for example, I'm a portfolio manager and I have a lot of digital infrastructure, maybe my threshold price is slightly higher to do the next transaction, but that capital remains available at scale.
I would love to get your thoughts on what NVIDIA announced a couple weeks ago.
I have no idea what he just
Joking
said.
that it's the Bank of NVIDIA now creating this financing mechanism for compute, for chips. What do you think about that, given that it sounds like you're mostly operating in kind of the investment grade, underwriting, pretty secure counterparties? This is something a little different. It's largely for borrowers who couldn't otherwise tap the traditional capital markets and are finding a way to pay for chips and compute. What do you make of a chip maker doing something like this, and what do you think it means for just the system overall?
Broadly speaking, yes, the bulk of concentration activity, JP Morgan's own balance sheet has been in these investment grade fact patterns. But in my role in investment banking, we have an opportunity to advise on every part of the balance sheet, inclusive of equity, right? And so whether that was our roles advising Lambda on its Series D, or Nscale on its Series C, CoreWeave on its IPO, we've had a remarkable front row seat and opportunity, thanks to our clients, to be able to see not just how debt capital is formed, but how equity capital is formed. And I think, without saying, anything non-public, it's very clear that the goal of that announcement was to form a very robust ecosystem for all types of offtake, relying on value creation from the AI factory. And because of the investment grade fact pattern so far to date, it's been most simple to finance that part of the balance sheet. But today, we are very encouraged to see all sorts of financial institutions taking part in all kinds of value creation opportunity around the ecosystem. It is my view that, the equity markets are very excited to view, GPUs and other emerging accelerator architecture as long duration, real capital assets, right? 18 months ago, the capital markets weren't so sure. Now, CoreWeave's most recent earnings report, they've got an A-series recontracted through 2029 at a profitable level, right? So we're seeing a lot of encouraging data points. And we think that should enable the formation, even more broadly, of equity capital. This announcement, obviously a landmark one, moving in that direction.
Yeah, and we'll get NVIDIA's earnings tomorrow, so hopefully we'll...
Looks like I was a little delayed there, but if we look at CoreWeave, it is
powering that industry. That's RXO.
Oh yeah, semi trucks. If we look at CoreWeave, it's behaving a little better than it was. I mean, not since earnings, but if we go way back here, it basically was a real pain for months, just grinding up. Typically what you want with a computer is for it to load. Okay, so there we go. Yeah, like this was obnoxious. Just got absolutely smoked. I mean, it's just only a few handful of months after the IPO, but yeah, you know what? I take it back. It's not performing well. I think I would just ignore everything that guy said. Nothing about this looks like something I would want to buy. But why would you buy that when you could buy SanDisk, right? Which, sure, it was part of the Leofold drama, but it popped right back up, and it's holding here. And there's a level, ton of volume here after earnings. I see no reason to look at CoreWeave as compared to SanDisk. Personally. By the way, these stocks, I can zoom down on these, are sort of, for today, ones that look a little unsteady. I mean, they could go up more, but I think the bias would be for these to take a little breather. Dash, maybe less or so. Kind of like it could chug along some more. But these other ones could probably take a breather. Yeah. So let's take a look at maybe some old-fashioned news. Let's see, reports. What are we at here? Like actual written news, I think is what we want to see here. Just in case there's anything major market moving, which I don't think there is. The FT updates like once a day or less, so I canceled my subscription. But obviously Twitter is basically a cesspool. Yeah. Sometimes there's some interesting stuff that's sort of contra. Like Dix, I think, just had an earnings reaction that was pretty poor. Yeah, so I mean, if you want to wake up in the morning, you can, but I mean, the liquidity's there. It's just kind of a short-term opportunity there. Best not to worry about stuff like that and just say, hey, what can I hold for at least a couple of days? I mean, geez. But you will get smart Alex who are talking about quick daily opportunities. Yeah. All right, so Bloomberg. How do we get rid of this stuff? There's really nothing that exciting on Bloomberg. I don't think Canada stuff really matters. China and Iran being sort of mixed together. That's an interesting take. And then Druckenmiller says the bond buy wasn't good. What's new? Famous trader says don't print money. I don't think there's anything. Oh yeah, and this new home sales is not bullish the consumer. But anyway, I think there's not really too much moving the market right now. I mean, you do have PCE tomorrow. But that's pretty much it. This is so delayed talking about the Kospi now. And then the FT is go Europe. Yay. Yeah, so we can pretty much ignore this entire paper. Except for the AI theory. They're pretty good with like AI theory when that does happen. When they do have insight into that. It's kind of interesting, but that's for rich people. Okay. So yeah, as usual, we can just sort of ignore the FT. The Wall Street Journal's behind, and Bloomberg's really the only one that's paying attention. But even there, I don't know how much is actually going on. So what that means is this is the golden goose here. Bloomberg Television.
And they said NVIDIA is key, and then you also have said probably 4
NVIDIA
times
is
in the show that
tomorrow,
it broke
so
a
who
6-day
cares?
losing streak, or was it a 7-day?
7-day losing streak. Wow, I said it 6 times, and you still can't remember me, Isabel? I'm just kidding.
You
I'm
need to
just
say
kidding.
it 8 times for me to remember.
Anyway,
but yes, it's really an interesting market. I mean, you're seeing stocks
I'm
rising,
gonna
declining oil prices, and bond yields.
get
I think it's just a
completely
wait and see
parched
for
here if I
NVIDIA
don't
and
get some
Jackson
more
Hole.
water.
It is, and there's
So,
this question about financing. To your
Let me get
point,
that for just a
yields are
second
moving
here.
higher, or at least they're steady at a high level. The CDS spreads for Broadcom have blown out. So will NVIDIA snap what has been, I'll say for 7th session losing streak, its longest since 2022. So Isabel, we will get those quarterly results after the close tomorrow. What else are you looking at in terms of single name movers?
There's also Zoom and Intuit. They report earnings after the bell today, Danny, and this is again a test for the software space that has been heavily scrutinized by the rise of AI. So we'll also get Salesforce and CrowdStrike earnings this week, and you see the stock there both down in the red by more than maybe 1.5% to 2.5%.
And it's definitely not a good sign that Thoma Bravo, the giant and private equity software names, is starting to have more concessions when it goes to its lenders to try to find debt. We should probably get a check on crypto stocks after Bitcoin touched $80,000 for the first time since May. Isabel, the debasement trade, it's back, baby.
It's definitely back, Danny, and this is the concept that maybe because the fiat currency is weakening, fine, pile into gold and pile into others. And of course, pile into Bitcoin, or as Tom Keene would say, BitDog.
Oh, the problem isn't just what the Treasury doing, it's what Iran is doing. What the U.S. is doing to try to combat Iran too with economic warfare.
That's an ever-changing headline and ever-developing. And coming up, we have the U.S. ramping up economic pressure on Iran.
America is no longer managing the Iranian threat. We are ending it.
all right. AI. What I'd like to do is take a look at some ideas from last week, if I may. So that's going to be a little bit arduous for sure. But, you know, sometimes that's what it's like. You guys can see the chart on the right. I'm going to bring up a chart on the left that's just about, yeah, thanks for reminding me that account is not usable. It's real helpful. I'm going to bring up maybe last Friday. Let's just get this cooking here. Fortunately, you can only see, oh, the chart's taking up half the screen. Move it over here. And then separate this and add a window here. I'm sorry for the delay here, but this is going to be past. This is going to be, oh boy. this. Okay. Should be able to see both now. Hmm. Got like 17 windows open. That should be a little better. Okay, so today's the 25th. So I feel like the 10th should be long enough ago. So what happened between the 10th and now? Well, once we load it, we'll be able to see. And this is definitely the most efficient way to do this. So with that in mind, I'll probably just take a little screenshot right now of what's going on today as well, so that I can do this next week.
Recording in progress.
Okay. All right. That's Tuesday,
Recording
August
stop.
25th. We're getting there. We are getting there. It's gonna take a minute, a moment. Okay. Oh, by the way, we're live on X, I think. Yeah. Yeah. So somehow we're still not showing most of the screen. really know how that happened. Oh. That's why. There we go. Make this a little bigger. Give me a second. Streaming like 17 windows. Making this a little bigger. All right. So let's go back to August 10th here. Got everything we need here. This was when? Here. Yeah, it's a little cut off, but it's fine. There we go. Okay. Where's YouTube? There we go. APH. I don't even remember what APH does. Yeah. But that thing definitely went down. Someone was definitely a victim of the leverage situation. Sort of the difference between doing 2.5 intraday leverage and then having it be cut down to 2 overnight. And you stop out some of your shares. It's just a mess. And then also I bought this one by mistake because I wasn't paying attention on the dip and then sold out. But it's a lot going on there. What about this copper stock? This thing ripped. Actually, no, it didn't. This thing came down. What else? NEM on the 10th? Maybe was okay, not really. Boeing on the 10th. Definitely came down before it went up. What else? PWR on the 10th. That one hung up there. ETN hung up there. I would ignore that. It's too strong. BRT on the 10th. Yeah, when it bounces up just over the moving averages, that can be a no-go. Also in the same sector as PWR, HD. That rolled over just over the 200 though. Really depends on what the stock is. That's a serious bounce versus like a fake breakout. O'Reilly. This thing definitely rolled over sort of gradually. It's Palantir pulled back, right? On the 10th. Yeah. Not a ton, but enough. And then SAP, this thing was just a monster. So, came back a little, but yeah, definitely stayed up there. So that's it. Okay, NVIDIA has well rolled over, I think. Hmm. This one maybe kind of on the edge working. And then this semi named Sidon on the 10th. They came back a fair bit. But yeah. The edge too. Alright, so that was the 10th. So that was 2 weeks ago. And a day. And then let's look at the 11th. Let's see. 11th. Right in the middle here. SPY did go up a little bit after this. So FCX was still definitely on the docket. Copper's scary, but that did roll over. Mongo. Yeah, it's a good thing I left Mongo alone then. Very strong on that bounce, first bounce there. Microsoft. Definitely was a rollover there. After that top tail thing, and then NEM on the 11th. Hard saying. Definitely wasn't great and had a big run up after that. So gold can be tough. There's NVIDIA again, the 11th. Yeah, that one was definitely trouble depending on the stop. It might have worked, but this one brushed up against near where earnings is tomorrow. So, and then P, yeah, this one was obviously trouble. But fortunately had a tight stop here, interestingly. So it kind of worked eventually. And though I definitely lost money on that. It's interesting. Yeah, the tight stop is pretty stupid when I'm doing one-to-one risk reward. And what else? What is this rubric? On the 11th, and had another leg up. RTX. On the 11th. This one did roll over, but 11, Tuesday, Wednesday, Thursday, Friday. It was like almost 2 weeks. 11th versus 19th. Or not 2 weeks, more than 1 week. So it's a long time. There's SAP again. And then what is this? Definitely had a little bit of a boost up there. Made it not easy. Coming out of earnings. Already was down. And then Unity, so this is definitely held up there as well. Yeah, be careful with those when they're right near that close. Okay, so that was the 11th. Get into the 12th here. How to put people to sleep. Talk about prior stock moves that they were not a participant in, nor even consider getting into. Okay. Twelfth. Thanks, all good. Grab those best 6 AI stocks for August in the description. All right. YouTube is where it's at, guys. People are like, Twitter is like neuroses, as far as I can tell. Definitely has its place, but maybe not during working hours. 8:12. Let's see. APA, what is this? On 12th. This thing kept going, whatever this is. What is APA anyway? Some sort of not mining thing. Oil and gas exploration. Yeah, gotta be careful with these oil things. I mean, came down so little. Cruisers definitely came down more, actually. Even though it was already down quite a bit. Am I even looking at the right stock? Oh, ECL. Yeah, this one probably would have been fine too. This would come down quite a bit. FCX. Yep, still came down here. Gold was trouble. I mean, maybe down a little. Steel company. This was good. Wow. Yikes. Axon on the 12th. Kind of trouble. Maybe not done yet. Not really showing what it's going to do yet. But definitely not ideal. And then this British Airways actually went down a lot more here. So that was interesting. Not like the easiest trail. The other tough thing is that I'm trying to quantify a bit better is pyramiding is advantageous, but and you are pyramiding with pyramiding you are so if you're adding as the stock is going down, the position size, position value, leverage, magnitude, whatever you want to name it, is holding relatively steady as you're in profit, right? As the price is going down, as your share size is increasing. So that's an advantage. And if you do get stopped out on a, a pop-up part of your position, that's okay. That gives you more leverage, more buying power added back into your account for another position. So once you get stopped out once, like let's say here, you can see where I'm pointing on the screen. You take a position on the 12th, like we mentioned, and your stop's above where it went, we're saying, for these purposes. So you actually have a greater magnitude position the next couple of days. But then it comes back to your initial leverage. And if you do add, once you're in profit a little bit and lower your stop, your position size is still equal to where you were initially. So your leverage that you're taking is still the same. And if it works, and you add again and lower your stop again, you're still leaving your total margin for the position intact. which means that it's still not going to affect your other positions. So this is sort of like a tweaking of the dials if you are to shift from say a 55% win rate 1-to-1. Like you win 55% of the time and you win the same amount as you lose. If you tweak the dials so that maybe you win 50% of the time, but you pyramid into, so a win would be you have to classify that as a profit equivalent to your loss, okay? But if you tweak the dials so that you're adding into positions that begin to move towards your take profit level, and lower that take profit level. Or not, maybe not lower it, but lower your stop at least and add into it, such that your average winner is greater in magnitude than your average loser. That's like varsity level. If JV is basically what I'm doing here, which is looking for a 55% win rate with a win magnitude equivalent to loss magnitude, varsity would be looking for a 45% win rate where your win magnitude is greater than your loss magnitude. So yeah, which, as I just mentioned, does not increase leverages per position, so that should be unaffected. So you can still run it, say 1.8 leverage, which will give you enough squeeze power up to that 2 overnight limit, such that if a position moves slightly out of the money or whatever, away from your entry in the losing direction, if it grows in size, in other words, you're still able to hold it without getting part of the position liquidated to stay under that 2.0 leverage. So that's a whole lot of words just to say that fuck, it would have been sick to have added into this as it started to go down. I don't really know how realistic that is, given how rare this is. I mean, let's keep looking. EMR. On the 12th. Same sort of deal here. I mean, you're in the money, add, lower the stop. Like, you don't have to lower the stop that much in order to keep the psychology solid. Keep the win rate like near, not below 45%. You could keep the stop so your total loss is equivalent to your initial loss. But just decrease the win rate a little bit to allow for those that do start to go down and then come out and stop you out. So the win rate will decrease a little bit. So from 50 to 45%, that means, you know, on 20 trades, so maybe that's 1 month. It's pretty frequent trading, but 1 month, you'll go from 10 wins or whatever, not 50 to 45, 55 to 50. You'll go from 11 wins to 10 wins. So 1 out of those 20, or really I should say it like, if you win 11 and you lose 9, 9 of them, the thing goes up and you get stopped out. 11 of them, it goes down and you hit your profit. But if you keep noticing that, if I keep noticing that the ones that go down and hit your profit tend to just go down. Like they don't chop around, go up really near your stop, and then eventually go down and hit your profit, because you don't really want those anyway, because those are the ones that take up all your buying power for like a week. What you want are the ones that go straight down. And so a way to do that is add into them, lower your stop, and that's 1 out of those 11 wins is no longer going to work when you do that, even if you don't lower your stop that much. But the win on the ones that you do that to, which is all of them, will definitely make up for that 1 loss. So let's quantify that a little bit, just to make sure that's totally believable. Everything sounds good until you do it, right? So let's see. I'm just going to duplicate this so that we have a fresh one here. And then let's say your win rate's 55%. This is all going to change, of course. Should be able to even make this big, right? Should be good. Oh boy. J2. Hmm. 60 versus 55% is crazy difference. But let's say it's that, right? I feel like 60 is doable though. But let's say it goes down to even 55%. But your wins are 1.5 times this. Is that reasonable? So at the end of the month, you'll have 34.8 versus and you could say your wins are 1.5, meaning you basically double your size when it's halfway down. Which lowers your stop. Basically to like 1/3 above your initial entry. Something like that. It's definitely good. More realistically, this is 50, right? It's a pretty big difference. Pretty big difference. I think that's basically the only option, liquidity-wise. It doesn't make sense. 36, 18.2 versus 5. 18.2 versus 5. Yeah, so what I don't get is how feasible is that to shoot for a 50% win rate, but your wins are 1.5 times your losses? It's definitely better. But I don't know how feasible it is. Okay. Anyway. Back to reality here. Okay. Where are we at here? So it's EMR, Uber on the 12th. I don't know about that one. Hard to say on that. Adding in that position would have definitely been, I guess if you added a bounce, Zeta on the 12th. Zeta on the 12th. That's still working itself. Not a quick one. Tough after earnings like that. Microsoft on the Wealth. That one's still not really knowing what that's going to do. Rubrik, again, on the 12th. That's a no-go. Pretty impressive extra boost on that. Yeah. And then this thing on the 12th kept going too. Was impressive. AEHR. And then, by the way, the 12th was here. So we did have another little boost in the SPY. AEHR. That thing kept going. 130. Definitely came back quite a bit, but not easy. What else? Warner Brothers. Yikes. Got absolutely rocked after grinding up after earnings. And then, yeah, that's that. Okay. Where are we at here? Let's get our brains blasted with some more Bloomberger.
Edwards. And I'm Tom McKenzie. This is your opening trade. Only on Bloomberg.
Autonomous trucking startup Gatik raised $200 million in its latest funding round, its largest ever, led by deep-pocketed investors, including the Qatar.
Gatik. Oh my God, guys. These AirPods are just useless. Oh, there we go. What are we talking about on CNBC here?
Cases for quantum is something that you really need to start now, because when that advantage is unleashed, it's going to be really hard to catch up to that advantage.
That might explain why so many companies are putting a lot of effort into it even now, Kristen.
It really does.
Yeah. Appreciate it very much. Good to have you. Kristen Milchanowski.
Thanks for having me on. Thank you.
Still ahead, United announcing its largest international expansion ever.
Wow. Crazy. Okay, are these guys gonna talk or just stand here? Something is going on here. want to hear about these auto trucks. Come on. What is going on? Like, yeah. Yeah, we can reload the page. That's fine. So I don't know if we have internet problems or computer problems or both. This thing has 16 gigabytes of RAM. I mean, it'd be fine, right? I would think.
That we are fulfilling for customers like PepsiCo and others.
I know that we're having a very finance-focused conversation, but what are the margins like for you? You know, once you've done the capital expenditures of getting the truck ready and it runs, how does that go?
So one thing to highlight is every delivery that we have done is a paid delivery. You know, these are some very exciting numbers.
Unless we're talking about Tesla, we can just ignore what these people are talking about. What else is cooking here? What is going on here? I just don't want to listen to these guys yap about levels of oh boy. Well, his memory, if they increase the margin, I mean, he's going to be making 9 gigawatts. Should we do fundamental analysis on memory companies, guys? Oh. Sorry, I wasn't even showing the two.
What if you could see the biggest options trades the moment they hit the market? This ready-to-run scanner from Massive strings every U.S. options trade in.
Okay. Let's see.
Up 23 billion. All right, so let's.
We're gonna keep these guys
a little bit,
on a tight leash here.
Just to reduce some of the exposure and get some capital appreciation. There it goes.
What are we gonna do? Guess NVIDIA's earnings? Is that what we're doing here?
Not the amount of size that we want, but slowly starting to uptick for us here, ladies and gentlemen. In Jensen we trust. Los Pollos, absolutely.
Oh god.
And here goes the Nasdaq.
We're live trading the triple Q. Okay. I guess we're going back to Bloomberg. Just really don't want to talk about these trucks. Really do not want to talk about the trucks. Oh, thank you.
Lie to me for my good sake, according to the
Joshua Bengio?
I'd like a future where humans remain in charge, especially about moral choices and societal choices. And we have a tool for this. It's called democracy.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
bringing you up-to-the-minute geopolitical
Oh, you
news
skipped
whenever
that.
and
Sounds
wherever
rude.
it happens. I'm Tyler Kendall in Geneva, Switzerland, and
Ooh,
this is
Switzerland.
Bloomberg.
Welcome back to Bloomberg Tech. Let's get back to that news that crossed earlier this hour. Canada announcing new tariffs ranging from 15 to 50% on $20 billion of US goods.
Who cares, right? Who cares? Who cares about Canada? All right. I know you guys hate it, but I'm gonna look at X a little bit. I can't help it. Probably gonna lose these subscriptions to papers. They're just not helpful. The jalapeno. Hmm. I don't know how much else of this is really material. Oil prices and bond yields are retreating. And then this is the FT doesn't even load. I almost just want to get this. Yeah, we can just ignore this. I mean, it's interesting stuff. It's just not a lot of it. Okay. Wall Street Journal, Bloomberg. What else?
But why that ultra low latency matters.
Yeah, so it is a HBM-based design. It's HBM4. It's one of the first, products that's going to go to volume with HBM4, right behind NVIDIA's products. And it is very low latency. The reason how we got it was really taking a blank slate approach to this design. So my team arrived at OpenAI, and we basically were able to work with the research team to understand where the bottlenecks were in large language models. Right. And with a blank slate design, we figured out that you had to reduce your data movement a lot, and we figured out a way to do it. And so this architecture is different from GPUs, it's different from TPUs and other chips in that nature. It really reduces the data movement, it optimizes the algorithm, and then it basically is able to get this very low latency, which matters for the agentic world.
This just doesn't matter for the market, though. Right? That's the thing. How are these videos doing anyway? Video's doing okay. Because if these videos aren't really getting any views, it's gonna be pretty hard to justify making them, you know? That's what I would say. Content. How do you do most recent content? Oh, advanced mode. Last 28 days. Okay, last 7 days. Sorted by date. Publish date. '24th. So none of these look like they're gonna get any bite of the apple. Wow, that got a lot of impressions. Not really. Not really a lot of impressions, actually. This got 30 times the number of impressions. Kind of begs the question of, is there any point to going live at all? Right? Definitely begs that question. I mean, I know the, yeah. About last 30 days, 90 days. What's the impressions that, just by published date, someone lost a subscriber? Yeah, people are like, you're just gonna talk for 3 hours about whatever you want? Yeah, I'm out. Peace out. This one got, it's kind of the same. This one got a little more. Huh. I mean, I know the videos are bad, but what was this? What was this ordering done here? Hmm. What is going on here? Above typical intros. Interesting. If I'm not mistaken, this video still, oh, it did okay actually in the car. Got a little bit more average views. You thought Friday was bad, just wait. Oh boy. These ones are bad. But this one is bad, but it got a bunch of views. I would just ignore this whole thing. Spikes. It's before acquisition headlines. There was a ticker that was an early alert. The date was Thursday, March 15th. What was this? Just about more than 2 weeks ago. And it was before any of this became obvious to the broader market. The ticker's ONDS. People want to know what this stock is. That's quite illuminating, YouTube. Thank you for that color. All right. I don't know, guys. What do you want to do? What do you want me to look at? I mean, I don't really want to look at most of this stuff. There are definitely potential. I mean, this guy is fucking crazy. Excuse me. Trump admin just went to Russia.
Tariffs, Iran, a shaky economy. If that has you nervous about your portfolio, I have something you need to see. Most
servers declining, an early warning or anything? Maybe, I don't know. Channel demand for servers declining. 6.8. Oh wow, those have really shot up. 33.
Yep, we're predicting NVIDIA earnings.
Hated in being inside of those Russian drones.
Oh,
how did they get? Pretty much,
drones.
we don't really know what came out of that. We just
be many, and again, the true winners are.
She's 41.
We'll figure that recipe.
In case anybody cared. Okay, let's look at the OpenAI info. So what?
Stages.
Yeah, I saw that note as well. It's probably a good time to bring it up. So OpenAI.
Okay.
Bottom-ish during liberation, if we can actually get these directly from the end buyer. And so what else? Ps are always a little bit scary because then what you have to do is like, what's the growth rate going to be after that? Valuation comes down to what's the companies trying to compete.
What is
your
this?
Tokens. I always find it very interesting the projections. Markets. So that's
Nebius?
not great.
Talk about Nebius.
An underpinning.
No, exactly. And these are
U.S. exports to Canada. That's about 20.
In Canada.
Okay, good. Yesterday from Besant was in Russia. Is Radcliffe Associated 30? They're expected to make $15 per share. Whoa.
I don't know about this fundamental analysis on AI storage companies. Just doesn't really tickle my fancy. Okay. It's refreshing to see someone else's thought process taking place in real time and the sources they look at. You going live is an instructive and informative read your methodology. Well, all good names. Yeah, I mean, it's definitely a Truman Show type thing. Just kind of at the point where I don't really know what I'm thinking about. I mean, I get people are going live. I just, like, I don't care about penny stocks, and that's what these guys are up to, I'm pretty sure.
Cancel that one.
Right? Like,
and update that one.
It's got a really quiet voice.
Tesla's looks like it's popping up.
And he's day trading the day trading the big caps. He's good though. There's that. Let's see what he's blah blah blah. Trader Josh? Is this the guy? Oh, this is just an example. Okay. Oh, he's got a YouTube too. That makes sense because I have a YouTube and I'm streaming. Oh, excuse me. He doesn't really have subscribers on here because he's doing his thing on here. That makes sense. Excuse me. I wonder if I've met this person before. Not actually, but you get what I'm saying. And then Wolf is a bunch of different people, right? And this is
oh, it's some sensitivity around that area.
It is
okay. Wiki wick off there. How does this candle close?
Is he sharing his screen?
So dip buys from here down to 92, breaking base over 100. Looks good.
This is like I don't even know what natural gas.
Looking cooked.
Oh god.
All good though. We limited risk.
I'm just going to ignore this too. Because I don't know what's going on there. The jalapeno chip. Yeah, people just want to wait for NVIDIA earnings to happen before they rush out and get all excited. No idea what these guys put all their money in NVIDIA, saying they did. Yeah, I would just pretty much say, I don't know about copper. That's what they said about gold. It's gonna go up, 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 and then it didn't after a while. Like 9 months ago. I don't know if all good was here, so I'll say a word, I guess. I don't know what people want to see. I haven't checked in on Twitter. Are you guys still alive on Twitter? Should probably do a wellness check. I'm not sure anyone's even joining from Twitter. Like at all. Which kind of makes sense because I don't do anything on there. Hmm. Okay, well, Palantir, Hyperliquid, and Amazon. Amazon, not great. Palantir, not great. But the SPY itself is not great, so. And then Hyperliquid coming back. Oh my god. Jeez. What about gold? Gold is pretty strong too. What about copper? Copper is fairly strong. So stuff's strong, guys. The alternative assets are strong. For sure. The ... This person has been around for a while. Yeah, it's pretty much the same thing. That's funny. That's funny. Funny. Okay. That was a while ago. Okay, what we're trying to do here is see if there's anything we don't know about what's going on that other people do know. Yeah, crypto names continue the party. Rare earth and uranium acting well. Wow. That's crazy. Mark
able to do that 50% of the time for each and do it.
What else? This is definitely a story. Although fertilizer stocks don't look super active to me, to be honest. They're kind of just hanging. Like they had a little push, but they came back. Right? Yeah, this is pretty much how I feel about that. Oh gosh, Ray Dalio. Chinese stocks are approaching their worst underperformance relative to the S&P industry. Why would you want to be worried about Chinese stocks? That's what I want to know. Right? Jalapeno. This is definitely a story. OpenAI's Jalapeno outperforms the comparable TPU. It's next reading. First good ASIC outside of TPU and Trainium. However, will likely significantly underperform a disaggregated GPU Trainium plus SVM accelerator setup, especially with AFFN disaggregation. Ah, yes, Gavin, we totally believe you know what all those things mean in depth. Okay. Does this have effects on Cerebrus? I don't really know if this has any bearing on the market, though. That's what I think. Because if we look here, this name that was interesting this morning, ECL. Can definitely take another cruise through here. The whirlwind tour of markets here. This one looked good earlier. Just a little bit of a failure, but market as a whole isn't great, so. I don't know the story behind this chemical name, ECL. Must be something, must be something going on here. Ecolab will host its Investor Day in conjunction with it. Blah, 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 blah. Oh, AI infrastructure by enabling more computing power with less water and less energy. That's a crazy angle. It's pretty interesting. Coolite is liquid cooling. Huh. Interesting. Okay, now it's a little more interesting. The data center wars are definitely heating up.
Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers
and the politics that shape global tech markets.
I'm Annabelle Drulers in Hong Kong.
I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance.
Sorry, I'm just trying to find something worth
shaping
watching.
Markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Thursday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stenovic. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Here's what's at stake today. Bitcoin soaring, hitting its highest level since May. Is the crypto winter over, or is this just a temporary rally?
I'm looking forward to finding the answer to that. In moments from now, Grayscale head of trading and capital markets, Krista Lynch, joins us now on the heels of a new altcoin ETF filing that's sending Zcoin higher.
And we talked a bit Bitwise about their announcement of automated portfolios of tokenized stocks. That is all ahead.
First, though, let's see where things stand. Bitcoin, to Scarlett's point, touching $80,000 for the first time, going all the way back to May. And get this, just in the last roughly 10 days, since August 15th, it's up 26%. Look at that. You go back more than 26%, almost touching $80,000 as we speak. Here's why. Chatter around the debasement trade helping drive inflows as the U.S. Treasury steps up bond purchases. And last week, the OG crypto, we're talking about Bitcoin, of course, saw the strongest weekly inflows into U.S. spot ETFs, Scarlett, in 10 months.
And I'm watching those flows, Tim, because the 13 U.S. listed spot Bitcoin ETFs last week drew in a net $1.92 billion, led by BlackRock's IBIT. That total is the most since last October, when Bitcoin crashed from its record high and ushered in this crypto winter. The inflows right over here, you can see, really represent a sharp rebound from the previous week when spot ETFs suffered almost $390 million of net outflows. Now, so far this year in 2026, Bitcoin ETFs have seen some $2.9 billion drained. Tim?
Well, as we mentioned, we're talking a lot about whether or not this crypto winter is over today, and finding the answers to that. Establishing a new trading range will require sustained demand. We're going to discuss this with Bloomberg's Isabel Lee. Isabel, it seems like the tone has just completely shifted in the last few days. You wrote about how we're seeing to the moon, memes from Michael.
Buying Bitcoin a few weeks ago is crazy. I mean, like, technically, I understand it was going sideways and stuff. There were rumblings, but I don't know if that meeting at the White House was completely, like, straightforward as to how it would proceed.
What is debasement trade? It's the premise that, oh, maybe the fiscal fiat currencies will decrease in value, and that's why there will be value in scarce assets. And Bitcoin has 21 million shares, and that's why people were like, woohoo, maybe this is our time to shine.
Another source of support, I suppose, for spot Bitcoin ETFs in particular, and the net inflows that they've seen over the last week, is a theory that Eric Balchunas has written about, which is that a lot of people lost money through a hack into their cold wallets, and some $100 million, or at least $100 million of spot Bitcoin was stolen. So that's led to a change in behavior where people are like, I'd rather hold Bitcoin through ETFs than the actual
hack did
currency
play a role.
digital coin themselves.
Yes, that did definitely strengthen the case for ETFs, because if you're not really committed to self-custody, and if you're not really all in about, like, I want to hold the Bitcoin myself, why not just give it to a trusted Wall Street asset manager like BlackRock, like Fidelity, all those prominent people who have market makers and custodians that are very white.
Because that goes against the entire thesis of having this stuff yourself.
But
like,
you're talking about Bitcoin.
Get rid of the intermediary here, right?
But you're talking about Bitcoin purists. Some people hold Bitcoin for
Sounds
fun,
like this guy
as a
doesn't hold
diversifier, as just out of a curiosity. So maybe that's why they prefer
And
ETFs.
the investor base has widened as well from the original
from retail
purists.
to institutional, and we've seen huge inflows into Bitcoin ETFs. I think we saw the highest last week in like several years. And Monday we saw inflows of like $400 million spread across 13 spot Bitcoin ETFs.
Bloomberg's Isabel Lee. Check out her reporting on the Bloomberg terminal and, of course, at Bloomberg.com. Well, Bitcoin investors are celebrating this moment in the market. The industry faces a big question. Does it mean that the crypto winter of 2026 is over? And does this moment prove that crypto's worth as a hedge against traditional assets? We're joined by Kiani. She's Chief Operating Officer at Monarch Asset Management. She also serves as a faculty professor at NYU Tandon School of Engineering, where she focuses on teaching and researching in blockchain and distributed ledger technology. It's good to have you on the program.
Thank you so much.
We'll start with the easy question. Is the crypto winter over?
I think the bottom is in, and
I don't know about, like,
is it to the rise? I don't think
DCA
so.
into
I think
Bitcoin
we're
here.
still
If you're
going to see
pyramiding,
some
that's
choppy
different,
markets
maybe.
in the near future until we see crypto finding its own landing ground all over again.
What is Bitcoin's role in the debasement trade? Isabel told us about how the dollar was weaker, treasuries sank as well, pushing yields higher, and the fact that Bitcoin continued to make gains around the same time that the Treasury Secretary announced plans to increase purchases of long-dated debt. Talk to us about Bitcoin and its specific utility in that kind of scenario.
So it basically, softer dollar and like lower yields on bonds, right? And anyone who was basically hedging completely against Bitcoin started, racking it up and buying it all over again. That's why we saw one of the largest short squeezes like last week, right? Close to 4 billion. And part of the reason is because we thought that, the Bitcoin narrative had muted down. The industry overall has moved towards the infrastructure layer. We've started seeing activities around stable coins and, as you just mentioned, more towards institutional and ETFs. But that particular softer dollar, lower bond yield basically triggered Bitcoin market all over again.
I want to go back to something that Scarlett mentioned with Isabel, and that's the cold card hack and the vulnerability. And I'm just wondering, from your view as somebody who teaches classes on this, if that really changes the narrative around the safety and security of self-custody.
Absolutely, yes. I think the self-storage, the hard wallet, self-storage days are quite over.
Really?
Yeah. I think it's
regardless of the product that you're using.
Absolutely.
I mean, we had the folks from Ledger on saying here's why it wouldn't happen at Ledger. You think a Ledger would be vulnerable too?
I think everyone is going to come around and say that their product is better, but I think that markets have become efficient enough, informed enough to basically say, hey, look, I'd rather be in a product like, Coinbase, which is, onshore US, right? Or ETFs, or basically, exchanges all around, or, even the DeFi wallets like MetaMask or Phantoms, for instance, then putting it cold storage. I've been in the industry for 10 years. Do I trust a cold wallet at this point? I'm scared for myself.
So TradFi is like celebrating right now.
This is why you're smiling. I mean, this is like the end of the
I'm not smiling. I'm just saying that this is interesting.
Because you talk a lot about the melding of sort of TradFi and DeFi, and you brought it up earlier, just moments ago, Scarlett, this idea that, with institutional involvement, and the reason that, more people are getting into ETFs because institutions are.
All right, this guy is not sounding legitimate. Might as well listen to NVIDIA talk.
Calls you today and says, okay, we missed the rally from the bottom to above 80,000. Should we get in? What would you say to them?
Definitely yes. And I would say that to our investors, for the longest time, we've always said, hey, always, allocate close to 2 to 3% of your AUM into Bitcoin or Ethereum. And we've been doing this for almost 9 years at this point between the two funds. The mandate has remained the same, that, between 2 to 3% of your AUM should be in Bitcoin.
Okay.
I have one more question, actually.
Okay, go ahead.
Crypto assets fell about 36% in the first half, but you look at crypto equities and they've gained 23%. That feels like a contradiction. How do you reconcile that? Who's right? Who's wrong?
So while Bitcoin and Ethereum was taking a breather this, year, I would say, the institutional layer picked up, right? And that's where we're headed. We're headed for like larger blockchain companies to become public. We're becoming more of infrastructure at this point. We're seeing payment rails. We're seeing a lot of convergence. So that's why crypto equities is going to be a new emerging and probably more promising market for us in the near future.
Aisha Kiani, it's good to see you. Thanks for stopping by.
Thank you.
That's Aisha Kiani from Monarch Asset Management. Coming up, Zcash joins the crypto party as it enters a rally of its own. That's after Grayscale on Friday filed to convert its Zcash trust.
Oh, let's listen to this trader guy.
Joining us next to discuss that filing is Grayscale's.
Sorry, I was playing Bloomberg while we were watching CNBC. It's going to be confusing, isn't it? There we go. This should be a little more.
Half of many NVIDIA shareholders, institutions, and
Listenable.
individuals. Please reinvest into robots, automation, get involved in space, anything but paying me a 0.5% dividend. What am I supposed to do with that? What are we collectively going to do with that?
I think the most important thing on the conference call is the earnings path to $15 a share by 2027 and eventually getting to $20 by 2028. And what happens to gross margins in that scenario? Do they stay in the mid-70s, or if they decline? If they decline, the market is not going to like that.
They talked about raising price, right? Wasn't that
Sorry
story
about the
yesterday?
buffering.
Right, that's why I don't think that that's the case, Scott. The reason I bought this thing is because it's 18 times earnings, growing 85% with gross margins in the mid-70s, period.
Raise prices, defend margins.
So I think so, and they can raise price. That's really, but I want to get a little more detail on the earnings power, because my goodness, $20 in earnings power by 2028 makes this even cheaper than 18 times.
Care?
Well, I was just going to say that everybody knows this is going to be a great quarter. What we really need to hear is what he's thinking about the third quarter and what he's thinking about next year. And if we can do a guide that's 110 billion revenue plus for Q3, that possibly could move the stock. If there is something that really excites the market, which has not generally been the case, as Josh pointed out, there are many people who don't own NVIDIA even close to the market weight. They might not own it. They owned it. They sold it when the stock was down. There were a lot of sellers during that period when everybody was saying, oh, kind of it's washed up, and you've got all of these low-cost suppliers and competitors. So competition is going to be a question people want to hear him discuss, and what's happening. Can we get to 110 billion or higher in the third quarter? And will that maintain the gross margin because the customers are willing to pay the price?
Do you think that all of those things that we put on the list are genuinely what's riding on this report tomorrow evening? Obviously, for NVIDIA's next move, how could you say otherwise? But the semi trade itself hasn't been great.
Yeah, I think that the semis are a slightly different animal right here. Everybody knows that this is going to be a good report. Is it going to change what happens with other semiconductors, with Micron, or look at TSM, think about AMAT, all of the whole universe of stocks that have been up anywhere from 50 to 500%. Is that going to change because of this NVIDIA report? I don't really think so. I think it just got overheated and tired. It's a little tired right now. It could ignite, but I wouldn't be betting on it.
All right, so let's then move to Marvell. What Steffa says is the second most important report this week. I think that's fair. I do. That's Thursday. The target to 300 at Rosenblatt, the target to 265 at Susquehanna. The stock's up like 170% year to date. So there's a lot, Steph, riding on this. Then Joe after Steph.
Yeah, I mean, there is a lot riding on it. And that's actually one of the reasons why I sold a lot of it to begin with, because I made a lot of money in it. But I still like it very much because I think at the end of the day, this company has a chance to get to $10 in earnings power, not only from optical, but also the custom chips. There's two ways you can win with this company.
Hey, let's clarify something real quick, too. When you were on yesterday with me on Closing Bell, you said, when I asked you which would you rather own for the next year, Marvell or NVIDIA, you said, well, I own both. Our audience knows of you as having sold Marvell in your main fund,
but I have another
you still
fund.
have it.
It's small though,
okay.
But I still have it because I want to participate in.
I just want to make sure we're all on the same page here.
Oh, sure, absolutely.
So you still own it,
yes,
albeit in the smaller fund, a smaller size than what you originally.
Yeah, I think I'm going to pass on the Marvell analysis. Bitcoin is the story.
Hey, Jamie? Jamie?
So yeah, I would look at NVIDIA first. Definitely want to look at NVIDIA closely. Really, a surprise. Wow. It's continued bullish sentiment for Hyperliquid.
The future of money to others.
All right.
We see crypto's trillion-dollar swings.
Why don't we play sound?
The end of
That
jobs,
could be good, right?
or the end of human
See
struggle.
if these guys are done talking
We see
about
the endless funds fueling the AI hype.
Marvel
While
calls.
others follow the noise, we follow the money.
Okay. Let's see.
Inflation. And it
Inflation.
will be good, we believe. It'll be a relief to the market if the Fed removes that obstacle and pressure. Right now, they have to go out and borrow, and there's pressure to raise rates in the private market, which is what's been going on, which is why you're seeing some of these stocks like Broadcom and Oracle.
Well, right. Broadcom's
feeling
up
that
4% year to date. Oracle's, decidedly negative, obviously.
Oracle also has negative free cash flow.
Yeah.
Broadcom has $40 billion
Hugely
in free
positive,
cash flow. That's growing, right? And they're going to do $56 billion in AI revenue, which is going to be up 180%.
Why is the stock
this year.
then? Why is the stock done what it's done?
One of the reasons why Broadcom is under pressure is because of the relationship with Alphabet and TPUs.
100%.
And now
That's why I mentioned Marvell, but Marvell is not taking market share, 100% market share from Broadcom.
Not directly now, but potentially in the future they could take market.
The market could also just sell off after NVIDIA earnings, even if they're good. That's what happened last time.
Okay, so Broadcom has a 5-year deal with Google, with Alphabet, until 2031.
Yes.
So you're going to all of a sudden start selling the stock today because maybe the deal that doesn't get extended in 2031. I mean, I think that they have a lot going for them. Why has it lagged? It's like the same thing. Why has NVIDIA lagged? I feel like they both got very overowned. They had phenomenal years last year, and I think there's other things to do in the semiconductor space,
The buyers have
like
bought.
Micron, like Applied Materials or Lam Research or Marvell, et cetera, et cetera.
You and I could disagree with the price reaction for sure, but there clearly is an obvious one to that relationship that was announced between Alphabet and Marvell.
Josh?
Guys, this is not complicated. Marvell is coming on I know Stephanie knows that. I know she
Whoa.
wouldn't argue. Marvell was not in this company's lane as recently as 3 years ago before the AI pivot. It's $91 billion in debt in an environment where the cost to continue that is going higher, probably not going lower, even if it just stays static. It's a decent-sized debt load relative to how well this company's doing. And it's 30 times forward, and I can buy NVIDIA for less.
This guy's
I think that's why the stock is struggling. Those are not reasons to sell it.
Makes my setup
but
look
if you're asking why is this company
like,
a laggard in the space, considering how great their business is, those are the three factors.
I mean, he's wearing a
more
suit.
competition, very high debt load, and a challenging valuation for people to get bowled up on it at today's prices relative to other stocks they could buy.
Hold on. You guys worried about? I want to talk about data center related stocks like the power players now.
Yeah.
Are you guys at all?
That's what I want to
worried
talk
about
about.
the backlash on data centers and
Yes.
existential
100%.
threat of some kind?
And the water thing that isn't real, but everyone cares about.
Listen.
Because, by the way, let me just say, over the last week, Quanta's down 14, Vertiv's down 13, Vernova's down 12.5, Eaton 10, and Cat, if you want to place it as that, it's down 8.
So the market trades off perception. A lot of times it doesn't trade off reality. So you and I are going to agree on this. I think the reality of the conversation in the long term, I think we're going to land in the same place, that it's not an obstacle. I think over the next couple of months, it's going to intensify dramatically the conversation, and I think companies like NVIDIA are going to have to address it. In particular, how fast the growth has been for data center construction in this country. I'm not saying that that's a negative. I think it's actually economically a positive thing. But there is this element of not in my backyard.
It's going to get built elsewhere. 11 states have restrictions. 11 states.
Yeah, but
it's going to get built elsewhere.
It is growing.
But where the states accept it, they'll continue to be building in those states.
I know.
Yeah, there's plenty of space.
Opposing it that you at the beginning wouldn't have thought that they would be on the list.
So the companies are going to pivot. In fact, I think it's good news in a way because it extends the cycle. You're not going to overbuild. If you can't build in 11 states, maybe it goes to 20 states, maybe it goes to 30 states. I don't know.
That's the other thing people are saying. It's going to solve the bubble.
One of these things, and $40 billion, by the way, to build these things. This is why the hyperscalers are spending crazy. But at the end of the day, Quanta Services is still up 45% year to date. Vertiv is up 60%. GE Vernova up 43%. The backlogs are enormous and growing. Margins are accelerating. Earnings are growing in areas and growth rates that I've never seen. Earnings growth at Quanta Services at 70%. That's huge. That's huge. So my point is the pullbacks are a buy in my mind.
So I own all the names that
I know, we do.
We're on the same page. Yeah. But is there justification? Can I make the assumption that potentially a lot of the commitments that have been made to build out data centers, because of the regulatory backlash and the conversation that intensifies growing into election day, we get a pause on that?
We're getting a little bit of a pause right now from these companies. They are pulling back.
Right, but I think Steph's point is...
All right, maybe we'll check in on that in a second, actually. There's no need to be totally live all the time, right? We're not day traders. We'll do a little breakdown. Because this company's interesting and it looks strong today. So we should probably get this out before earnings, right? I think it's a good idea. All right. NVIDIA reports earnings tomorrow, and that one number is going to move more than just NVIDIA stock. It's going to move sentiment across the entire AI trade, and today I want to walk you through why and where I think the real opportunity is once the dust settles. Let's put it simply, NVIDIA makes the chips that train and run most of the world's AI models, so when NVIDIA tells the market how much demand it's seeing tomorrow, every other company connected to AI gets repriced based on that answer. Chip makers move, cloud companies move, power companies move, even water and cooling companies move. And most people never think to watch those. That's the piece I want to unpack today because I think it's where the real money is going to be made this year and almost nobody's talking about it. Before I go further, the only thing I ask in return for the work that goes into a video like this is that you hit that like button and don't forget to subscribe. Every time you do that, YouTube pushes this video out to more people. And with an earnings report this big landing this week, it helps me get more people positioned and informed before it happens instead of after. Let's talk about why this week matters so much. The AI build out right now is the biggest capital spending story in the market. Companies are pouring hundreds of billions of dollars into data centers, chips, and power infrastructure, and NVIDIA sits at the center of almost all of it. But NVIDIA isn't the only company building silicon anymore. That's part of what makes this earnings report more interesting than usual. OpenAI just announced its own custom chip called Jalapeno, built with Broadcom. In testing, OpenAI says Jalapeno actually outperformed NVIDIA's current GB300 processor in two categories: how much AI work it can handle per unit of power, and how fast it returns a response, which is a big deal. It doesn't mean NVIDIA is in trouble. NVIDIA's chief strategist himself says NVIDIA is a critical partner, and Jalapeno wasn't even tested against NVIDIA's newest generation, which is Vera Rubin, apparently is what it's called. But it tells you something important about where the industry is heading anyway. So everyone building serious AI infrastructure is now also building or buying custom silicon on the side because the demand for compute has become so large that no single supplier can fill it alone. OpenAI's own chip chief said it directly. The demand for compute is so enormous that they've signed up many different providers, and that's going to continue for a long time, which tells you a lot about where capital is flowing right now. It's not flowing to one company. It's flowing into a whole ecosystem, not necessarily a circular one, but chips, power, cooling, and water, because none of those work without the others working. You can have the fastest chip in the world, but if you can't power it or cool it, it doesn't matter, which is the part of this trade I think most people are missing because they're only watching the chip names. And look at what's already happened around this build out. Amazon's cloud division, AWS, just posted $42 billion in quarterly revenue, up 37% from a year earlier. That's its fastest growth in 18 quarters and its fifth straight quarter of accelerating growth. AWS is now running at $169 billion in annualized revenue. To put that in perspective, if AWS were its own standalone company, it would rank 24th on the Fortune 500 list by itself. And that growth isn't happening because more people are ordering packages faster. It's happening because companies are renting cloud compute to build and run AI models, and that demand keeps climbing every single quarter. At the same time, you're seeing real strain show up elsewhere in the supply chain. Apple's outgoing CEO warned investors that iPhone growth will slow to a mid-teens pace next quarter, and Apple shares fell as much as 8% on the news. He described current supply constraints in memory pricing as something close to what he called a 100-year flood, which isn't really an Apple problem alone. It's a broader signal about how tight the physical resources behind this AI boom have become: chips, memory, power, water. They're all being pulled in the same direction at once, and companies that solve those physical bottlenecks are becoming just as important as the companies designing the chips themselves. I'm currently offering a free report on the best 6 AI stocks for August, and it comes with a list of my recommended market newsletters, all available at selfadvisors.com/newsletter. If you click that link in the description, all you need to do is enter your email and the report gets sent straight to your inbox. You also get access to daily market research, which matters a lot this week because NVIDIA's numbers are going to set the tone for this entire sector. And I don't want you finding out what it means for your portfolio a week late. So where does the opportunity actually sit heading into this week? I don't think it's in trying to guess NVIDIA's exact number. Plenty of people will spend the next 24 hours trying to do exactly that. Most of them will be wrong because guessing a single data point isn't a strategy. The real opportunity is in understanding what happens after the number comes out, regardless of which direction it goes. If NVIDIA confirms that AI demand keeps accelerating, and I think it will, given everything we just walked through with AWS and the broader spending trends, capital doesn't stop at NVIDIA. It keeps moving outward into the rest of the ecosystem that has to support all that compute. That includes power generation, that includes advanced cooling, and that includes water management, because none of those massive data centers can run without enormous amounts of both, even though the water circulates. And if you want to stay ahead of a shift like this before it's obvious to everyone else and not find out about it after Wednesday's earnings has already moved the market, in my opinion, you shouldn't be navigating this week and others without a framework and a daily newsletter that's watching it every single day with you, because markets move on capital flows and data surprises like PCE tomorrow. And the investors who do well over time aren't the ones reacting fastest once the number comes out. They're the ones who already understood the setup underneath it because they were positioned before it became the story everyone's talking about tomorrow afternoon. That's the difference between chasing the story and reading the market in advance. It's the entire reason I built the newsletter in the first place, because I got tired of watching people find out about a move 3 weeks after it already happened. Now, before I name the company I think is one of the most overlooked plays in this whole build out, I want to come back to something I said earlier because I think it's important context. In times like these, the best way to protect and grow your portfolio isn't to panic when chip stocks go down. It's not to go to cash. It's also not to trade every piece of news that comes out regarding PCE or Jackson Hole. The market's complicated right now. There's real excitement about AI spending, and there's real anxiety about supply constraints and valuations. Trying to predict every twist of the market is a losing game. The better approach for this story is figuring out where the genuine strength is building underneath all that sort of noise in the system and positioning yourself there before everyone else catches on, which is a research process. It's not a guess game. And it's exactly what I try to lay out every day in the newsletter at selfadvisors.com/newsletter, along with that free report on the best 6 AI stocks for August. So here's where I land. The AI build-out has a physical problem that isn't going away, no matter what NVIDIA says on Wednesday. These data centers generate enormous heat. A single AI query can use nearly 10 times the electricity of a normal search. And that electricity has to go somewhere once it turns into heat. And by 2030, the electricity needed just to run large language models globally is projected to hit 327 gigawatts, which is roughly 70% of everything the United States consumed in electricity back in 2024. It's almost unbelievable. And it means power and cooling are not small issues in this story. They're central to it. Some operators have tried waterless cooling to avoid the optics around water use, but that approach misses something basic about physics. Water still carries thousands of times more heat than air, and it moves that heat over 20 times faster. So trying to cool a modern data center without water usually just means burning more electricity to do the same job less efficiently. And given the power constraints we just talked about, it's the opposite of what these companies actually want. So the smartest operators are leaning into smarter water use, not away from it, and that's created a real opening for the companies who know how to do that well. This is where Ecolab comes in. Ticker ECL, I think it's one of the most overlooked names tied to this entire AI infrastructure story. Most people who know Ecolab know it as an old-time cleaning and water treatment company. It's been around for over 100 years, but over the past year, it's quietly become one of the more important companies in AI infrastructure, largely because almost nobody outside the industry is watching it. Ecolab's CEO, Christophe Beck, put $7 billion to work over the last 6 months addressing exactly the water and cooling problem we just walked through. The centerpiece was a deal to acquire Cool IT Systems, a Calgary-based liquid cooling system company, for $4.7 billion. Cool IT uses closed-loop technology that pulls heat directly off high-intensity chips without spraying water into the air or letting it evaporate away. In the CEO's own words, were that the goal is making these data centers water neutral, not water free, water neutral. Water goes in, does its job, comes back out instead of disappearing, which solves a real practical problem operators are facing right now. Communities are increasingly pushing back on new data center construction because of water and power strain on local infrastructure, and a recurring large facility can circulate millions of gallons of water a day, and residents notice that. Ecolab's pitch, backed by real numbers, is that a 100 megawatt data center, when properly optimized with the right cooling technology, can use less water annually than a single 18-hole golf course. It's the kind of claim that can actually get a stalled project approved instead of stuck fighting a single community for years. And it isn't a new, unproven idea for Ecolab. Its 3D Tracer monitoring platform, which uses real-time sensors to track water chemistry inside cooling systems, already delivered more than $11 million in documented annual savings for data center customers, while cutting water use, energy use, and emissions at the same time. And this isn't an advertisement for Ecolab. There's an active pilot right now with Digital Realty running across 35 data centers in the US, targeting a 15% reduction in water use. If it hits that target, the companies estimate it would keep more than 120 million gallons of potable water in large local watersheds every year. This is water that otherwise would be pulled straight out of the ground. So bringing this back to NVIDIA and this week, none of this AI build-out happens without power and water problems getting solved first. If NVIDIA's number this week can confirm what AWS and the broader spending trend are already telling us, that AI demand keeps climbing, it's not just a win for chip companies that everyone knows about. It's a win for every company solving the physical bottlenecks sitting underneath the chips. Cooling and water management are some of the biggest of those bottlenecks, and Ecolab, through this cool IT acquisition, just bought its way into a much bigger share of that market using the stock ticker ECL. If you want to, again, take a look at it yourself. So I want to be honest with you here. I'm not telling you this stock guarantees a certain move on any particular day. Nobody can promise you that. And anybody who does is selling you something you shouldn't buy. What I'm telling you is that the fundamentals behind this story are real. They're documented. And this week's NVIDIA number is a genuinely relevant catalyst for sentiment across the entire group that Ecolab now sits in. The market is always showing strength somewhere. Even in a complicated week like this one, your job isn't to predict exactly what NVIDIA says on Wednesday. Your job is to find where real strength is building underneath that number and position yourself accordingly. That is the game. If you want help doing that, head to selfadvisors.com/newsletter and that link in the pinned comment for those free AI stocks reports that I updated for August and for daily market research going forward. So that's the video. If it helped you see this a little differently, hit like and subscribe. It generally helps YouTube put this in front of more people who need to see it before this week plays out. ECL. It's interesting. And then we can listen to what these guys have to say about data centers a little more.
2 or 3 months, it doesn't change the story. If it becomes
the perception.
A more durable thing.
I said that at the beginning of my remarks.
I mean, what is Jensen Huang going to say on the call to a bunch of analysts? What is he going to have to go out and do town hall appearances around America?
No, he's not going to
talking about the virtues of
data
centers?
But I think at some point he could offer a degree of comfort about the economics of a data center build out in your backyard. I think clearly he's the one person that could do that. I'm not saying he's going out around the country. No, it's crazy. But he can comfort.
No, I know you're not saying that, but I'm suggesting that that's far different from talking to a bunch of analysts, singing the virtues to the analyst community in Wall Street of data centers. That's talking your own book. What do you think he's going to say?
I think that tomorrow night on the conference call, I'd like one analyst to ask him the question. I'd like him to give me what I expect will be a very confident and comforting answer that maybe offers some relief to the conversation that over the last several weeks is intensifying.
At the end of the day, the hyperscalers are going to spend $1 trillion this year and probably $1.6 trillion next year and probably $2 or $3 trillion in the next couple of years. They're not slowing spending. And we listened to the CEOs of all the hyperscalers, Andy Jassy in particular at Amazon, who has said he would spend even more if he could. And therefore, that is not changing. And if you believe that, then you have to believe what we've talked about. The whole food chain will benefit. The data center builders, the grid manufacturers, the power companies, we don't have enough power. So all of that continues as long as we get the spend. The biggest risk is if we don't get the spend. But that's not what the companies are saying right now.
And the cost of capital doesn't rise significantly.
Josh,
that's
real quick, make your point because I got to take a break.
I'm with Stephanie on this. All of us on the desk have been around a long time. They did the same thing with the cell phone towers. It was a huge political backlash. It was in every district, every state. There was for, there was against. In the end, there was federal legislation that stopped the madness. We built the cell phone towers. People didn't grow a third ear on the back of their head, and life went on. I don't think that you'll really be able to stop the spending that we're expecting. You might just have to move the venue.
All right, let's do this. Let's take a break. We'll come back on the other side with several moves. A couple from Steph. We got one from Carrie. We'll document them next.
I almost wish they would just show commercials and show that screen. would be great. Ooh. Tokenize stock portfolios.
Such an ugly shirt, but knows he can do more with his money.
Sorry guys,
Ryan
playing
opens
without
his
audio
Fidelity
again.
app, sees
Really,
his
we got two problems
opportunity
going on.
and takes it.
We have a computer
Ryan.
that is too slow, even though it's pretty good. It's from 2021. And then we have an internet that's only 100 megabits. So, that's why we're streaming like it's 1995 or whatever here. Luckily, there is other stuff to look at. It's just, yeah, it's kind of, everything is just slow as molasses here. That's all. President Trump participates in Rose Garden event. No, we want YouTube. Yeah. There we go. Okay. What is going on here? Trader TV Live? That's what this is. MTS. Ah, boy. TVPN is leaving like a glaring hole, guys, in the media landscape. That is for sure. There's just not that much alpha out here. This is interesting. 4 hours ago. All right, Bloomberg. What you got?
Downing Street.
Bloomberg has you covered.
Andy Burnham arriving.
For all the context and clarity you need.
A broad vision here from the new Prime Minister.
Hear it first on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hordern in Ankara, Turkey. This is Bloomberg.
We're just about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, the Canadian loonie moving in the session as Canada escalates its trade fight with the United States, doubling tariffs on U.S. steel to 50% from 25%. Prime Minister Mark Carney also unveiling new measures to help businesses weather the impact. Meanwhile, an ETF of Canadian stocks is moving higher as investors weigh more than $5 billion in government support for businesses and workers hit by the tariffs. Back in the U.S., stocks rising as investors digest the latest read on consumer confidence, which fell for a second month in August, and look ahead to Jackson Hole still later this week. But before we hear from Kevin Warsh on Friday, investors are also bracing for NVIDIA earnings due tomorrow after the closing bell and search for clues on whether the AI outlook remains intact.
This one is good.
Those are your midday movers. I'm Nora Melinda.
All right, today Bitwise launched automatic token portfolios, which lets investors create model stock portfolios directly in.
We don't care about that. No. Thank you. And we don't need to know about some random pharma company either. What's kicking around on good old X here? I hate to say it, but sometimes this is where news breaks. Okay. Jalapeno. OpenAI. That's a big one. 100%. All right, Bloomberg.
Tokens themselves lost about 36% of their value. So at what point does the data just say, buy the stocks and you can pretty much skip the tokens?
Yes, Scarlett, that's a great question. I think that points to the ever-evolving crypto market that we find ourselves in. It used to be that crypto and crypto equities kind of all moved in tandem, but what we're seeing today is that crypto equities, which are the publicly traded crypto companies building the infrastructure and providing the services that service the crypto industry, they're moving a bit different, being driven more by idiosyncratic developments at the company level, by the financial profiles of these companies, whereas digital assets are driven more by technical developments, the regulatory environment, which I know you've spoken about a lot today, and other drivers. So they're driven by slightly different catalysts. I think ultimately, the tide is moving in the same direction, and investors that we speak to at Bitwise, which we speak to, investors every single day, want exposure to the broad crypto spectrum in portfolios that give exposure to equities and crypto assets. So I think investors want exposure to both of these things over the long term.
So what's the case then for owning the underlying crypto when companies built on top of it are massively outperforming?
Well, there's been periods in crypto's history, Tim, where the crypto assets have outperformed the crypto equities. It's like different thematic
it might be the last week.
Outperforming others.
Maybe the last week, for example.
Yeah, the last week's a great example. We've had a massive rally in crypto assets. Bitcoin, Ethereum, Solana, Hyperliquid have massively outperformed over the past week and are catching up to crypto equities. But that's the dynamic we're seeing here in this ever-evolving market is you have different drivers and different performance profiles. And so investors who want exposure to the entire crypto stack can get that in crypto equities and crypto assets.
Ryan, tokenized real-world assets just hit a record $33 billion, a pretty big number, and you've called this the next big wave. You're not the only one. Others in the industry have as well. But I look at what's going on in your firm. Bitwise just cut 14% of staff. So a skeptic might ask, if the thesis is that strong, why is your firm not growing and instead perhaps shrinking?
Look, Bitwise has grown tremendously this year. We saw $2 billion of inflows into our products across the stack in the first half of this year. We're expecting billions more through the end of this year. I think as all startups do and all fast-moving companies too, we're positioning ourselves prudently for the future. And we believe this wave of assets moving on chain, you mentioned 30 billion in tokenized assets on chain today. 3 billion of that is stocks. The rest are other assets like bonds. And we think this stock movement of traditional assets, traditional equities on blockchains is going to be the next massive leg up. And it's not just us, as you mentioned. The largest financial institutions in the world are talking about this. Regulators at the SEC and CFTC have made this a main priority. The president mentioned this in his speech last week. All signals point to traditional assets moving on chain. And Bitwise has been around for 10 years. We've been pioneering ways for investors to access crypto products and crypto strategies since then, starting with index ETFs, then spot ETFs, and today ATPs. We're excited to be here for investors through this next bull market.
All right, Ryan Rasmussen, Bitwise Head of Research, thank you so much for joining us. Coming up next on Bloomberg Crypto, Bitcoin was created to protest central banks flooding the market with money. So, if that's the case, why are central banks now considering their own digital currencies? That conversation up next with our own Jonathan Levin. This is Bloomberg.
Some see heroes. Others, only egos.
Okay. Security stocks. All right.
Looking for the long-term bond fund to at least get back to levels last seen the first week of July. And by the way, related, in Bitcoin fund IBIT today, calls are still outpacing puts, and in GLD, with today's pullback, calls are almost 5 times puts right now, Scott.
Okay. Oliver, good stuff. Thank you. See you at 3 o'clock. Oliver Rennick coming up. An earnings mover tracking for its worst day ever. Steph owns it, which means we need to hear from her.
No, we don't need to hear about Derek's sporting goods. No, we don't need to hear about it. Okay. What else is cooking here? Okay. Of course. Of course. That's funny. Oh, man. That is funny. All right. This thing is cooking. Last 3 days. Okay. Anthropic sees an opportunity. Anthropic IPO, blah, 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 blah. Who's this Brian Feroldi? And I just scared. What does search here? Brian Feroldi. Let's see. Tech investors. Whatever. Sure. Uranium names. Well, let's see. Oh, yeah. UEC. DNN. They're kind of gone though. Maybe. Kind of already went up. The government is printing money. Blah, blah, blah. Okay, Bill Ackman's fund has crashed. I think we can just ignore this. Uranium is basically the story. Let's see. There's not really much cooking on here. Okay. Anthropic expected to tell investors it sees over 30 trillion in potential revenue. Yeah, we still don't know if it's even going to go public. Right? Hmm. Well, as usual, there's nothing real new. I don't know that ServiceNow looks great yet. That's interesting. If true. Hmm. Druckenmiller, Besant, and Warsh. Definitely interesting. But a little bit inside baseball. For sure. What else is cooking here? Who's this guy? That's a lot of money. Norleaf. Huh. I mean, gold is exciting. Don't get me wrong. I don't know how much fundamental information there is about it continuing to go up, if any. Right? The bond market is definitely a concern. Um, hmm. Whoops. It's getting too meta here. Let's get back to some Bloomberg here before I start watching myself.
Prime Minister had telegraphed as much. He did make good on his original threat to match the tariffs dollar for dollar, but just by the fact that we have seen a flurry of posts from President Trump today out on Truth Social in regard to the conflict with Canada and trade, in part saying in one of them, I deal with many countries and Canada is easily the most difficult and unreasonable. Of course, our own reporting has indicated that Canadian officials have alleged that the U.S. was changing the, quote, goalposts when it came to the differences in the trade agreement that ultimately derailed the deal getting through. But Joe, I think evident by the fact that Canada's reciprocal tariffs are expected to go into effect on September 8th, the next round of escalation by the U.S. January 1st could lead to some negotiating room going forward.
Well, those two dates are awfully important. So this is clearly not a case closed. But your point about the Truth Social posts, I counted 27 since 6:58 a.m., Tyler, and one of them includes this idea the president is floating now, the U.S. giving serious consideration to changing the name of Lake Ontario to Lake America, he says, and that we don't expect doing much business with Ontario any longer. Is this a joke?
I would take the president probably at his word. If you're joining us on the television, you can see the map that he is issuing right there. We'll have to see how this ultimately goes from here. Of course, there are a lot of different leverage points, negotiating points, but this does play into the broader idea that there have been escalating tensions between President Trump and the Canadian Prime Minister, Mark Carney, in particular, keeping in mind that Mark Carney had campaigned on basically countering President Trump and the tariff war a couple of years ago, and we have seen just escalating tension since then, whether that was his address at Davos, whether that was President Trump threatening tariffs over wildfire smoke, and this appears to be the latest escalation in what is essentially now a pretty sudden reversal. We thought we were getting very close to a deal. We had sources familiar telling us here at Bloomberg some of those levies were going to be lowered, but at the end of the day, it just couldn't get over the finish line.
Wow, really something. Tyler, I need to ask you about President Xi quickly. We're going to be talking in just a moment with the vice-ranking member, House Foreign Affairs Committee. Congressman Amo is with us from Rhode Island. So we have geopolitics on our minds here. President Xi, pretty clear about the idea of secondary sanctions and knowing that China would have to be part of this for the so-called D-Day, or I guess Operation, what are we calling it again? It's Operation Scofflaw or Outcast, that's what it is. The relationship with Iran, quote, should not be disrupted or undermined. China will take all necessary measures to safeguard its interests. What now, Tyler?
Seeming to imply that China is prepared to retaliate if the U.S. does make good on its threats to hold those countries that still have financial ties with Iran accountable. The backdrop here being that China remains the top importer of Iranian crude to the tune of 90% of Iran's oil exports go to Beijing. The Treasury Secretary was asked yesterday multiple times about whether this would apply to China. He didn't.
If you want a professional-looking live stream without needing an entire production team, you need to start using
the people that I'm speaking to here in Washington don't believe that the administration thinks that China is going to cleanly cut financial ties with Iran, but perhaps this is seen as a negotiating tactic to help lower some of the leverage here, that China could maybe reduce its imports of Iranian crude, not cut them off completely, and that would still help the U.S. in its push to get Iran back to the negotiating table.
Tyler, thank you. Bloomberg's Washington correspondent with us live on the North Lawn of the White House. We'll let you know if there's more posting on Truth Social, because we haven't heard from or seen the president making public comment today, at least not yet, about these issues. But it is a great opportunity to spend some time on all of these issues with Congressman Gabe Amo back with us on Balance of Power here on Bloomberg, straight from Rhode Island's 1st District, the Democrat who is in fact vice-ranking member, as I mentioned, of the House Foreign Affairs Committee. It's great to see you, Congressman. Welcome back to Bloomberg TV and radio. From the great 1st District, from Woonsocket all the way down to Newport, as we've discussed, you are the epitome of the K-shaped economy in so many ways. And I want to get to some of these issues domestically. But as far as these go here, from your perch on the House Foreign Affairs Committee, have you been briefed on Operation Outcast? Did you hear that these Canadian tariffs were coming? And what should be Democrats' response?
Well, look, Congress has been on a
district work period.
Yes, of course.
So I know as much now as I am at home, as I do when we're here generally, because this administration has put Congress in the back burner and has not emphasized collaboration, cooperation, and really getting the consent of Congress to carry out its actions on the global stage. And what we see is governing by Truth Social and chaos to our north and certainly in Asia and across the world when the president continues this war in Iran that is raising the costs on the lives of the American people.
Well, the cost issue is a real one, and we'll, I'm sure, get into affordability with gas prices on the rise, food prices on the rise. But are you encouraged to see the president turn from military action to economic coercion? Is this the direction we should be taking?
Well, look, I'm not going to praise an arsonist for trying to put the fire out that they started. And the fact of the matter is, we are here because the president abandoned diplomacy with Iran and decided to go forward with an illegal war with Iran that has done nothing to make the world more stable and has only made the lives of Americans worse off. And so we were told about an economic D-Day.
That's right.
I don't know. I haven't seen one. I haven't seen anything of that nature. And in fact, as you just shared, China remains resolute in its vision of what should happen.
So should we be
forward.
putting secondary sanctions on Chinese buyers of Iranian oil?
Look, I think
what does that cause?
I think what we have is more piecemeal strategy from the administration instead of trying to understand what we're trying to get. We've had shifting rationale from the beginning, whether it was an imminent threat to dealing with a nuclear weapon on the horizon, to now, because of the situation that the Trump administration created, a Strait of Hormuz where we get unreliable reports about the level of openness it currently has.
Yes, right.
So again, taking this piecemeal instead of a macro strategy leads us to a situation where they are reaching and grasping at straws.
I'm glad that you mentioned the Truth Social. The president announcing today that the Strait of Hormuz has officially been demined. He made that announcement last week. Do you know what he's talking about?
I have no idea what he's talking about.
So was it mined and has it been demined?
And this is something that I'm seeking answers to immediately from this administration. Look, Congress will, at least the House, will return to town next week. And I'm demanding alongside my colleagues a full briefing and update on their activities, including the cost of their activities. I joined a letter with dozens of my colleagues asking for a full accounting of where we are, why the American people are feeling the pain that they are feeling at the gas pump, at the grocery store, as they're doing their back-to-school shopping.
You mentioned affordability, and of course, we look at gas prices every day around here. We're at $4.09 a gallon, nationally speaking. In the great state of Rhode Island, you're at $4.05. What the president is doing with Canada now, we're told, could make prices even higher. We took a look to just get a sense of Rhode Island's trade relationship with Canada, because so many northern states have a robust one. And sure enough, more than 1,400 jobs at some 45 Canadian-owned companies doing business in the state. Cross-border trade, and this is really what we're talking about here, supports more than 25,000 Rhode Island jobs, according to the Canadian Consulate General in Boston. When you hear dollar-for-dollar tariffs, realizing they're not in place yet, what does that mean for home?
Well, it means that the hardworking people that I work for in Rhode Island are going to feel pain. I think about all the fishermen. That's a big one of our exports in Rhode Island, especially calamari, the calamari comeback state, as we were once referred to. That means a lot. All of these people who are working every day with higher costs because of this administration will suffer. And then what might not be reflected in those numbers is the impact on tourism. You know, you mentioned I have Newport in my district. I have the birthplace of the American.
When's the last time you saw a Canadian walking around?
Well, they're around, but I'll say the numbers are down. I've spoken with the tourism councils. I've spoken with leaders there who have said that the bad feelings, the animus between our nations has yielded less interest in coming down. You see it in tour bus numbers. You see it at all of our sites. So there is a secondary set of effects with the lack of good feeling between our nations. When you have the president saying that he wants to rename Lake Ontario.
Let's not get too caught up in present stuff. All right. We can listen to this guy for a second. So boring. Sorry. Let's see. Here we go.
For moves
Don't buy into it,
in a
but
normal time, but aren't now.
When you're back next week, it's going to remind us of so many things left.
The Canada thing is just not
Rita, we appreciate you jumping on. Thanks very much. And Rita,
Thank you.
All right. Staying sort of with the Middle East, the Trump administration threatening Iran, quote, with economic D-Day. That may mean, though, there is more financial firepower at stake here than actual firepower. And as such, defense stocks have sold off a bit. In fact, the defense ETF ITA down nearly 8% since the ceasefire expired last Monday. But let's be very clear about something. The need for defense and drones and rockets and reusable rockets is only long-term going to go one way, up. And that is where Ursa Major comes in. It's a privately held company, for now, that makes rocket and engine systems. It just went faster recently than Mach 5. That's fast. Chris Spagnoletti is CEO of Ursa Major and joins us now. Chris, welcome. I think that's like 3,500 plus miles per hour roughly.
Yeah, I don't think we need to hear about another SPAC. Personally. But let's do a little breakdown here. And yeah, we'll go from there. How's that? How is that? Okay. Definitely interested in this company for sure. Been a minute, but should work. Okay. It did have a little bit of a moment in late October of 2025. This company, Mercado Libre, ticker MELI. Back when Milei was first elected, I think, or re-elected. There was definitely some rumblings in the Argentina stocks. So, seems to be another moment, possibly, for this one. So let's jump into that. Yeah. Okay. So we'll do that. This setup only happens once every 50 years. And it's happening again this week. One date matters more than any other on the calendar. Friday, August 28th, that's when Jackson Hole wraps up. And it's the moment that tells us whether the next move in this market is real or just talk. So let me back up, explain why that matters, because it's not complicated once you see it. Jackson Hole is where the Fed chair and central bankers from around the world get together once a year in Wyoming. They talk about interest rates, they talk about inflation, and what they say there tends to set the tone for markets for months afterward. Money moves in big waves before and after this meeting. It's just how it works year after year. This year is no different, except for one thing. There's a specific trade sitting right underneath this macro moment that most people aren't connected yet. I'm going to walk you through it, and I'm going to give you the ticker before we're done here. Before we dive in, the only thing I ask in return for all the work that goes into making a video like this is that you hit that like button and don't forget to subscribe. Every time you do that, YouTube pushes this video out to more people, which helps us prepare more people for what's happening this week. It costs you nothing, and it takes 2 seconds, and it genuinely helps this channel keep doing what it's doing. Okay, so let's get into it. Peter Thiel doesn't move his money around casually. He's one of the most closely watched investors in the world, not because he's a flashy person, but because when he builds a position, he tends to be early. Late last week, a regulatory filing showed that Thiel's hedge fund, Thiel Macro, holds close to 1.2 million shares in a company called Vista Energy. As of the end of the second quarter, that stake was worth about $76 million. But here's the part that should get your attention. Vista is the only non-US company in his entire portfolio, the only one. Everything else he holds is American, and the size of this position ranks second only to his stake in Amazon, which is not a small allocation. It's a statement about Vista Energy. It's an Argentine oil and gas company. It's become the country's largest oil exporter. Right now, it produces the equivalent of about 160,000 barrels of oil and gas a day, and roughly 70% of that gets shipped out to buyers around the world. The company sits on top of something called the Vaca Muerta, one of the largest shale formations on the planet. For years, people doubted this basin would ever become a serious global energy source, and that doubt's fading fast. Production out of Vaca Muerta has now crossed 1 million barrels a day across the region, and it keeps climbing. But here's why the timing matters right now and why Thiel isn't the only one paying attention. Argentina spent close to 2 decades under heavy economic controls. Foreign capital stayed mostly away. That changed under President Javier Milei, a libertarian economist who took office promising to tear down those controls and open the country back up to international investors, whatever you think of his politics. And we'll get into that in a minute. The market has responded. International capital has started flowing back into Argentine energy and infrastructure. New pipeline and port projects are being financed and built. One of them, called VMOS, is a shale oil pipeline and export terminal that Vista holds a stake in. It's set to be finished next year. Once it's online, Argentina will be able to move far more crude out to global buyers than it can today. That's the setup. A resource base that's finally proving itself out, a government clearing the path for outside capital, new export infrastructure about to come online, and now one of the most closely watched investors in the world building a position that sits at the top of his portfolio. I'm currently offering a free report on the best 6 AI stocks for August that comes with a list of my recommended market newsletters at selfadvisors.com/newsletter. If you click that link in the description, enter your email, the report gets sent straight to your inbox. You'll get access to the newsletters I personally read every day today, on top of moves like the one we're talking about right now, plus daily market research that breaks down what's actually driving price action, not just what's trending on YouTube. It's free, it takes 30 seconds, so go grab it. Now, Thiel isn't the only sign here. Chevron has been expanding its footprint in the same shale region. Harold Hamm, the billionaire who helped build the US shale boom, has also started moving into the area. So when multiple large independent players start showing up in the same basin around the same time, that's usually not a coincidence. We're seeing capital reorganizing a resource that's finally ready to scale. But here's where Jackson Hole comes back into the picture and why Friday's meeting is the deadline that actually matters for this trade. Emerging market energy plays like Vista are extremely sensitive to what the Fed says about interest rates. Here's why. When US rates are expected to fall, the dollar tends to weaken and capital tends to flow out of the US and into higher growth opportunities abroad, including emerging market energy names. When US rates are expected to stay high or rise, the opposite happens, and money tends to flow back into US assets and away from names like Vista. Jackson Hole is exactly where the Fed chair tends to signal which direction that's heading for the months ahead. That's why this Friday isn't just another day on the calendar. It's the moment that could either accelerate this flow of capital into Argentine energy or slow it down. If you want to stay ahead of a shift like this before it's obvious to everyone, you shouldn't be navigating this week without a framework and a daily newsletter that's watching it every single day with you. Markets move on capital flows and central bank signals, and the investors who do well over time aren't the ones scrambling to react after Friday's remarks already moved the market. They're the ones who understood the setup underneath it because they were positioned before it became the story everyone's talking about on Monday, potentially. So that's the difference between chasing headline sentiment after the fact and actually reading the market ahead of it. And it's the entire reason I built the newsletter in the first place, because I got tired of watching people find out about a move 3 weeks after it already happened. Now, I do want to be honest with you about the other side of this, because a responsible investor looks at risk too, not just opportunity. Argentina's president, Javier Milei, has built his entire political career around being loud and combative online. He's called a former finance minister a Soviet criminal. He's mocked a major industrialist by name after that company lost a government contract, calling him, quote, Mr. Scrap Metal of the expensive little pipes. He's called sitting lawmakers, quote, fiscal degenerates. This style helped him win an election in 2023 with almost no political machine behind him. But now that he's actually governing, that same style is making it harder for him to build the coalitions he needs to pass legislation. His approval rating has recently fallen to its lowest point since he took office. His chief of staff is facing allegations of illicit enrichment, and prosecutors are actively investigating Milei's own role in promoting a cryptocurrency token that later collapsed and wiped out investor money. Sound familiar? None of that means the Vaca Muerta story is fake. The oil is real, the exports are real, the pipeline is real, Thiel's position is real. But political volatility in Argentina is a genuine risk, and anyone putting money into this basin needs to understand that Milei's ability to keep the country open to foreign capital depends on him holding together political support he's actively alienating with his own online behavior. That's not a reason to ignore the opportunity. It's a reason to size your position with your eyes open. Before I name the ticker, I want to come back to something I said at the start because this is important context. In times like these, the best way to protect and grow your portfolio isn't to panic. It's not to sit in cash waiting for certainty, and not to trade every single event that crosses your screen. Your job as an investor is to identify where real structural strength exists underneath the risk sitting next to it and position yourself sensibly ahead of the catalysts that move capital. That's what we're doing right now with this setup. And if you want this kind of research delivered to you every day, that's exactly what the free report and newsletter list at selfadvisors.com/newsletter, and that link in the description is for. If you go to your email, you get the AI stocks report sent to you immediately, and you get access to daily market research and the newsletters I personally rely on to track setups like this before they're fully priced in. Okay. The ticker is Vista Energy. It's VIST. It's on the New York Stock Exchange. And you've heard that ticker before, but the one that's adjacent to it is also Mercado Libre, the e-commerce company. It's ticker MELI, and it's called the Amazon of Argentina. The setup is you have a government that opened capital markets back up after 2 decades of restriction, even if that government's own communication style is creating political friction. Again, sound familiar? You have new export infrastructure, the VMOS pipeline set to come online next year and unlock significantly more capacity to sell Argentina's oil to the world. And you have Chevron and Harold Hamm building positions in the same region around the same time as Peter Thiel. Layer Jackson Hole on top of that. If the Fed signals lower rates are coming, capital tends to move towards exactly this kind of emerging market story. And Vista and MELI, Mercado Libre, sit right in the middle of that story. So if the Fed signals something more hawkish, that flow is going to slow down, positioning ahead of Friday matters a lot more than, after it, which is why this week specifically is the window I'd be paying attention to if you're looking to build a position in one of these tickers, particularly MELI, which is the more liquid one. I'm not telling you to go buy a stock. I'm telling you what the filing shows, what the production numbers show for that stock, what the infrastructure timeline shows, what the calendar shows, and I'm letting you and also helping connect the dots to information that Thiel's fund has made public with this stock that has also had euphoria and sentiment making it move in the past, which is Mercado Libre. Your job isn't to predict Argentine politics. Your job is to find where the strength's building, or my job, understand what could accelerate that or slow it down, and then position accordingly. That's it. That's the game. So if this kind of research is something you want in your inbox every day, head to selfadvisors.com/newsletter. Enter your email, get that free report on the best 6 AI stocks updated for August sent directly to you, and get access to the daily market research and newsletter recommendations I personally use to track setups exactly like this one before Friday, not after. If this video helps you understand what's actually happening in the market right now, do me a favor and hit that like button and subscribe before you go. It generally helps this channel reach more people who need to see this before Friday, and that's the whole point of putting this together. I'll see you in the next one. There's multiple Argentine stocks as well that could sort of catch a bid here. Is it the Postal Service? Care about the Postal Service? Or, you know, whatever the heck is going on over here. I can't even tell what's going on over here. Yeah, a SPAC. I think we're going to go with the Postal Service, crazily enough. Audio would be good, right? Could help.
Something that Republicans have used to elect Republicans for years, particularly throughout southern states. In your state of Arizona that you worked in with John McCain for so many years, the president himself voted by mail. The extent to which he's seized on this, if we did everything that we wanted or that he wanted here in limiting mail-in ballots, would it not hurt Republicans?
Yeah, I think it hurts the system completely. And in many states, first of all states are different, right? That's the blessing and curse of our political system. We have 50 states and they all have their own rules. That's the point. And in a state like Arizona, you learn how to deal with it. And frankly, Republicans were winning enormous amount of elections because they were able to identify their voters, track the process through mail-in ballots, and know whether they voted or not. And in many states, like Arizona, the vast majority of people who vote are voting mail-in. I mean, probably 60, 70% of Arizona voters, and a lot of those, if not more than half, are Republicans. And so there's not a political operative in the country who doesn't love mail-in ballots, because you actually can track the process of voting and you don't have to wait around for election day and hope for the best.
Wow. What's the Democratic answer to this, Jeannie? Do you sit back and watch it happen knowing that it might hurt Republicans more than your party?
You know, I think, sure, the Democrats can, but I think this is broader than either Republicans or Democrats. This is the president creating a problem that does not exist. The whole predicate for this is the president keeps telling people there is fraud in mail-in balloting. And the fact is, there is not. As you mentioned, he himself votes by mail-in ballot, as did 47 million Americans in the last election, 1/3 of all ballots. It is so rare, Joe, that the Brennan Center for Justice determined that you're more likely statistically to be struck by lightning than to commit mail-in or voter fraud. The Brookings Institute did an extensive study, and they found there were only 4 documented cases of fraud in 10 million mail-in ballots. So this is what frustrates Americans about our government and, quite frankly, this president. We have so many issues to be addressing. Swap cameras, whether it's data centers, whether it's a war in Iran, whether it's inflation, jobs, the list goes on. And you are talking about a problem that does not exist. Again, 4 in 10 million ballots of documented fraud. And that, to me, is really the real frustrating part of this, whether you're Republican or Democrat, quite frankly.
Boy. This is pretty amazing, Rick, and I don't know how the rank and file manage this. If the president continues to denigrate mail-in ballots and refer to them as the basis of fraud, what do you do if you're a Republican House member running for re-election? If you're a Republican senator hoping to get the votes that you need, in many cases through the mail this November?
Yeah, I mean, it's cringeworthy to see the president's posts on social media and comments in the public, because these are the people who actually have to rely on their voters. And a lot of Republican voters are in rural areas where getting to the polls are not easy. And so they have to, hide behind the president on this. They're not going to argue with them. You don't see any Republican backlash from elected officials, but every single day they're out there, whipping their campaigns to try and make sure that absentee ballots get to their voters and get turned in. And literally every week you get the update from the county election office tells you who's voted. I mean, you can't get a better system than that as far as accountability.
How about that? Rick Davis and Jeannie Shanzano break it down, as always, our Bloomberg Politics contributors. When the court rules again, assuming that it will, we'll let you know here, of course, on Balance of Power. We've got much more to follow here. In fact, former Congressman Kevin Brady is going to join us. The latest standoff between the U.S. and Canada. It's all ahead here on Balance of Power.
Some see heroes. Others, only egos. We see the era of billionaire athletes.
How many billionaire athletes are there? And do we really care about the SPAC thing?
Hype. While others follow the noise, we follow the money.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing.
Oh, okay.
Right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole
this stuff. Okay, what else is going on here in the markets? I'm kind of interested in what these guys are up to. This was actually a while ago, but whatever.
This nefariously, and it's going to be so easy.
Yeah.
I think that what we're watching is just them saying to themselves, hey, this is hard. And, it's okay. We can all admit, hey, this is hard, but also say, and you're wrong. Right? Like,
Just
two
gonna
things can be true.
Food, guys.
And I think in this case, they probably are.
Once every 4 hours.
Cool, for sure. I'm sure you've heard about the HBO produced Satoshi documentary. I don't know if it's out yet, but I know it was leaked. That the guy they claim is Satoshi Peter Todd. He's coming out. He's vehemently denying it. I guess. Have you seen this? Like, do you know who Peter Todd is?
I do know who Peter Todd is. He's very vehemently denying that he is Satoshi.
Yeah. Who is you mind just giving us like a little background on him, because I wasn't aware of who he was.
Yeah, so Peter, he's one of the early Bitcoin developers. He's been around for a very long time. they essentially in the document. I haven't watched the full documentary, so I'm kind of paraphrasing here from some of the summaries I saw. But my understanding is that they went back and they saw a couple of messages where they're trying to draw a line of like, hey, it looks like maybe somebody got confused at which account they were using. He made a comment to having destroyed Bitcoin in the past. Obviously, Satoshi's got a lot of Bitcoin that can't be accessed. And I kind of come at this whole conversation is just like, who cares?
Mm-hmm.
Like who Satoshi is doesn't matter, right? It's the classic, like we are all Satoshi. If Satoshi came back, they can't do anything different than you or I. Maybe the only difference is they can move their 800,000 Bitcoin, but other than that, like Bitcoin has become bigger than Satoshi, which I think is part of the beauty of Bitcoin. But also, two things can be true. People love a good mystery.
Yeah.
They love a good conspiracy theory, right? They love a good, HBO doc that identifies the richest person that no one can identify or whatever. And so I think that's probably what we're watching is more that than anything.
For sure. I was glad because when I first heard that, I'm like, oh my God, I hope this is like not like good journalism or like they really got it. Like I think it's best for him to stay anonymous. And I think it's just great for like the lore of Bitcoin and all of that. And like you said, the mysterious access as well. So as far as inflows have gone, Pomp, I believe the BTC, like the ETF launches were the most successful in history, if I'm not mistaken. Are you surprised that the price hasn't moved much since, or maybe even gone down a little bit, and also considering that we've had the halving as well?
So it's funny because the ETFs were approved in January of this year. Bitcoin has gone up. I think at one point it was up as much as 70% post that ETF approval. It hit a new all-time high. All-time high was like 69,000. Went to like I think 73,000, somewhere around there.
Yeah.
And then it drew down. I mean, it was back in the 50,000s. Kind of over the summer at one point. And we're sitting, kind of low to mid 60,000s now. And so Bitcoin is still probably up 50% year to date, give or take, which obviously is good. I think it's the best performing asset class, and kind of all the traditional asset classes. But
Whoa. Edit, save it, play it back, and then post it, brand it, own it, link.
If I had told you, hey, the ETF's going to get approved, tens of billions of dollars is going to flow in, we're going to get the halving, all that, I think people are like, oh, why isn't it not up, 300%, 500%? Right. I think two things are important to know. One, in halving years, so every 4 years this thing occurs, usually the price has not kicked off kind of a upwards movement until Q4 of that year. So you go back to 2020, I think the halving occurred, it was somewhere in the 8,000s. By the time that we actually started to go up, maybe Bitcoin was at 10K, but it was, really in Q4, kind of late in October, early November. And then it went from, call it 10,000 to 64,000 by March of the following year. So kind of in a less than 6 month time period, it just ripped 600%. And so I'm not saying it's going to go up 600%. I do think that towards the end of October, sometime in November, we will get price to start, kind of moving upwards. But I think the second thing that's important to understand is generally as an asset gets bigger, the volatility goes down. And so we have seen Bitcoin's volatility dropping over time. That does not mean that volatility is going to go to, stock market returns of 8% a year, but it's probably not going to be, 200% annualized returns. And so where do we end up there? My base case is it's lower than people expect, but it's higher than kind of other assets. And so
it's a good way to say it.
To that argument is these Bitcoin ETF options that recently were approved. They're not out yet, but they've been approved by the SEC. Those options have the potential, not the guarantee, but the potential to add more volatility. And so I had this guy from Bitwise on, Jeff Park, who kind of runs their alpha
trading. Guy who was just on Bloomberg.
Very, vehemently believes, hey, these options are going to lead to more volatility. If that's true, it could be a fun kind of Q4 of this year and Q1 of next year. It's just unclear right now, how volatile will the asset be. But I do think time-wise, we're starting to get towards a period where we're going to see this thing, move upwards.
Yeah, for sure. Yeah, and guys, definitely go listen to that. What was his name again from Bitwise? That was good. I was listening to that.
Jeff Park.
Jeff Park. Yeah, we man, we had on when they first launched the ETF, we had Hunter Horsley on from Bitwise as well. Really, really love those guys and what they're doing there. Pop, how do you envision the future of DeFi? Do you think this like continues to seep into what they call, I guess, TradFi, traditional finance?
It's a good question. I don't think that the DeFi story is as strong as maybe the fintech story. And again, if you look at it as like almost look at like you were evaluating it from an investor base, right? There's like finance is the biggest bucket, and then you can drill down into like fintech, which is like all the technology that's intersecting with finance, and then you can drill down even more specific, and you can say, okay, there's like centralized and decentralized financial technology. DeFi obviously works. People are using it. There's things that are very interesting there. But to me, what I think is kind of the bigger investment theme is the fintech story. And if you were to pick a theme that I think is really interesting inside of fintech, it would be automation and this idea that like DeFi is kind of just a subset of automation happening in finance. What you're really doing, let's say with a decentralized exchange, is you're essentially stripping out the centralized services, the people, et cetera, and now you're using software to have an automated system. That happens with decentralized systems, but it also is happening with centralized systems as well, right? And so the ownership structure, there are differences, but it's the automation story inside of fintech that I think is really going to drive the majority of the value. And so, the machines are coming. Right? Like they are going to be here. They are going to be able to allocate capital. And I think that people are very stuck on this idea of decentralization explicitly because frankly, it's cool. It's kind of a middle finger to the traditional markets, right? It's kind of like you don't control us. And I think that there is an element of everyone in finance who likes that. But I also think that there is an importance to understand that there's trade-offs with decentralization. And so I always use the example like if
all right. Let's cruise around. Really don't care about Canada right now. Why don't we just look at some charts for a bit? See if there's anything bubbling up here. Yeah. Let's do that. Okay. Charts. I don't even know. Yeah, okay. So buys down a little. Crude is sort of holding. Bitcoin is pumpy pump. These guys are not. Oh, Chipotle is coming back. Dash a little. Yeah, so what else is sort of building here that's compelling? Not sure there's a lot. There's definitely something. So, yeah. Ecolab got stuff so far. This copper looks pretty strong. I mean, could definitely, you know, up there already, but I don't know. Copper and gold. Pretty crazy strong here. So wouldn't count those out. Yeah. Hmm. Hard saying. A lot of stuff that just sold off pretty heavy after a gap up, though. Wow. Hmm. This NDSN is holding up. I don't really know what they do. I guess we could take a look. Um, I think they might be related to AI infrastructure. Everything else is pretty much. I don't know. Durable electronics. Semiconductor packaging. Yeah. Semiconductor packaging. Okay. Yeah, this one has been sort of kicking around for a minute, and it appears to be holding, so would keep an eye on this one. NDSN. Let's see what else they do. It's definitely going to be affected by inflation, but not a lot of news stories about them. pretty much at all. Kind of under the radar. Let's see. Yeah, really under the radar. NADSN. Heat worries U.S. wheat farmers. North Dakota Library. Oh, it's Nordson. It's not North Dakota. Yeah, there's no news. This is a little undiscovered gem. Possibly. Possibly. Very under the radar. I hate to look at Twitter, but gonna do that here. Oh boy. Um, VST. Now it's going to be confused with Vista. Where is your existential urgency? Hmm. Yeah. Nordson. Yep, that if earnings definitely happened, that was definitely a big deal. But I'm not sure what the story is around this. Aside from it looking great. Wow, this was like 10 years ago. Okay. Um, yep. They definitely had earnings. Interesting though, no real chatter about what they actually do. There we go. Like what? Like why now? Latest. Why Nordson? Why now? Oh, big price target increase. That was after earnings, right? Those price target increases, depending on who gives them, can be a doozy. Sometimes they are very good. Let's see. It's at the mercy of the AI trade. Interesting. Catalysts. Beat expectations. No one's talking about it. As far as I can tell. So definitely seems interesting. But yeah. Nordson. Okay. Well, still talking about Canada here.
.8%. Again, repeating the earlier headline we just brought you, country singer Dolly Parton, dead at age 80. Nora and Tim, that's a Bloomberg Business Flash.
All right, the loss of a legend. Charlie Pellet, thank you for that update. Well, it's a top story on Wall Street. It's one of the most read stories on the Bloomberg terminal. Billionaire Stanley Druckenmiller out with some harsh words for Treasury Secretary Scott Bessent. Druckenmiller writing in a Wall Street Journal opinion piece, quote, "Governments defending prices against fundamentals always lose. The only variable is how much they spend before conceding. The U.S. shouldn't put itself on the wrong side of that trade, not with the most important price in the world, and not when that price is trying to say the one thing Washington most needs to hear. Let the bond market speak."
Everyone's talking about it.
Coming off the back of Treasury last week, announcing an increase in purchases of long-dated bonds. It's a move that markets are interpreting as an attempt to push down yields. We knew there was one person we wanted to talk to about this because it was just a year ago that he had the Bloomberg Businessweek cover story about the Treasury Secretary. You can see the cover right there if you're watching us on TV or on YouTube. And for that story, he interviewed Stan Druckenmiller. That's Eric Schatzker. He's the editorial director of Bloomberg New Economy. He joins us here in the
Sorry, guys, looking at
Bloomberg Businessweek studio. Eric, I want to get into Druckenmiller's history with the Treasury Secretary, with George Soros.
Sure.
Before we do that, why is it such a big deal that he went to the Journal with this opinion piece?
Well, first of all, the Journal is the place that Stan Druckenmiller typically goes if he wants to make a public statement. So that part of it is not unusual, but he does not do this very often. So pay attention when he does. And why do we pay attention to Stan Druckenmiller? Because few people would argue that he is the best investor in modern history. Never a down year when he was running Duquesne Capital Management. He was George Soros' chief investment officer. He hired Scott Bessent in 1991. He sent Scott Bessent to England. It was on the basis of information, partly on the basis of information that Scott Bessent was providing, working for Soros Fund Management in the early 1990s, that Druckenmiller and Soros decided to bet against the British pound. They shorted it and broke the Bank of England. And it is that fundamental truth that governments defending prices against fundamentals always lose, that was proven there, and which Druckenmiller argues will once again be proven here.
Yikes.
So take us to today, and well, actually to last week, because
okay, so we do need, for the benefit of many, to review what sparked, right, this disagreement,
yes.
At the very least, or this right post from Stan Druckenmiller, which, by the way, you cannot not look at as anything but a harsh scolding, right? The mentor publicly admonishing his protege. And I would also add, for those who haven't read it, go and read it. If you're lucky enough to have a Bloomberg terminal, it's simple, NH space WSJ, put in Druckenmiller as a keyword, it'll come up. You can, of course, read it in the Wall Street Journal. You will look
Wall Street Journal.
long and hard to find a piece of writing this savage and this devastating. I mean that. So, last week, the Treasury announces that it is going to double the size of its long-term bond buyback program from $2 billion to $4 billion.
He doesn't say what to do.
And then Bessent doubles down effectively and says, well, we might spend more.
He can't really critique it.
And Druckenmiller says $4 billion understates the gravity of this mistake. And I have, for my own purposes, broken it down into 4 component parts. This is how Druckenmiller dismantles the argument behind a long-term bond buyback program. Number one,
this guy's dramatic.
It's unwarranted. There is no crisis. Yes, yields are rising, but that is the market functioning the way it is supposed to function, right? Pricing in the growing risk of 2 things. 1, inflation, or more inflation. We have some already, obviously. And 2, the growing possibility of a U.S. government default. This is what the bond market does. This is not March of 2020. This is not the 2022 crisis in UK gilts, right, that cost Liz Truss her job as prime minister. There were, as Druckenmiller points out, no failed auctions, no dealer balance sheet seizure, no forced unwinds. Number 2, it's hypocritical. Who was more critical of quantitative easing, but few more vocal and more aggressively so than Scott Bessent? And Druckenmiller points out that this is effectively a version of QE. And so what you have, the other thing he hated about QE was that, Bessent that is, he made the case that it was a blurring of the lines between fiscal policy and monetary policy. And here you have the Treasury Department, the Treasury Secretary, usurping the authority of the Fed chairman. Number 3, going back to this idea of fundamentals, it violates one of the cardinal laws of the financial universe, right? Governments will always lose when they try to fight fundamentals. Again, I mentioned that this is exactly what Druckenmiller and George Soros proved when they bet against the Bank of England. And as Druckenmiller says, this is another useful quote to draw from this essay. Once markets believe Treasury is defending a price, every rise in yields becomes a test of official resolve, and the operations must grow to survive the tests. Well, that raises an inevitable question. If it's a fight, effectively, between the policymaker and the market, how much ammunition does the policymaker have? Not enough ammunition to defeat the market.
Well, it raises the question, and the journal piece doesn't go into this, but it raises the question about why the Treasury Secretary would do such a thing right now. You describe it essentially as out of character given his past comments, and I think it's fair to say, given his hedge fund history as well, why do something like this?
Well,
they all do this. That's what Bill Ackman does too. It's fun.
That it's becoming awfully expensive for the federal government to issue long-term debt. The federal government needs to finance its deficit and its debt, and doing so means issuing Treasury bonds. Well, issuing Treasury bonds when your yield is at 470 is a whole lot more expensive, a whole lot more costly to the government and ultimately to the U.S. taxpayer than it was when yields were at 370. We could do the math, but let me just put it in Druckenmiller's words. The real problem is the fact that the government is running an outsized deficit. In fact, the nominal rate of growth, right, is actually higher than the yield on the 10-year Treasury. And he says that historically is an accommodative circumstance. If anything, the market should be pricing yields higher because it fuels, that financial accommodation or economic accommodation fuels inflation. And the reason this is the most read story on the Bloomberg, and the reason that this is transfixing Wall Street is because of the implications. And this is the fourth reason that Druckenmiller cites, or at least my interpretation of his reasons, is that it's hazardous, right? The long-term Treasury yield, as Stan says, is the most important price in the world. And furthermore, it is underpinned by central bank independence, the independence that was enshrined in the 1951 Treasury Fed Act. It is the bedrock of global financial markets. And Stan says, again, in this piece, U.S. policymakers built the wall between debt management and price management for a reason. This intervention, he is specifically referring to the buyback program, this intervention starts dissolving it. So it's not just like we need to think about this in something other than just.
They're not even talking about his writing style.
Will not win in his effort to bring down long-term yields. There are much bigger questions and much bigger implications at issue.
Well, when you think about Bessent and you think about Washington, do you think that Washington is remotely prepared for the economic and the political pain that would come with potentially allowing the bond market to set
You
the
know
price
the
at
answer to
long
that
end?
question. No, of course, because it probably means cutting spending, right?
He makes the point in the piece that neither party does it.
Right. Yes, exactly. Both Republicans and Democrats are guilty of this. Everybody has been kicking the can down the road. But now, with bond yields where they are, interest payments exceed the amount of defense spending. And defense spending vastly exceeds the amount of discretionary spending. So where can you cut? The only place, arguably, and I'm certainly not advocating for anything one way or the other, but the only place, arguably, to cut, says Druckenmiller, is entitlement reform. Nobody wants to undertake entitlement reform because it's so politically perilous. Yet where else do you cut if you need to reduce the deficit and restore fundamentals to a point where people have confidence in yields and aren't, gently, or maybe in some cases, not so gently, driving them higher.
Or, and I'm going to say something crazy, Eric, maybe increase revenues.
Well, that's another way of doing it. Of course, it's restoring fiscal balance to the equation. But there's no doubt here that, and Stan has been consistent on this for years and years and years, that he would prefer that the balance be restored by a spending cut. once upon a time, you had options. Now, effectively, there are no options other than entitlement.
I want to make sure people go back and read the cover story for Business Week that you did on the Treasury Secretary a year ago. And reread it if you haven't read it in a year. But given your experience reporting that out, were you surprised to see this move from Treasury last week? And given your understanding of Scott Bessent's investing history, who he worked with.
And I'm reluctant to opine because opining sounds like editorializing, and that's the last thing in the world that I'd like to be accused of. That he wanted to be an unconventional Treasury Secretary was, to me, self-evident. And thus, some of the announcements that he's made and some of the things that he has done are consistent with being an unconventional Treasury Secretary. He was almost in a unique position, coming from his background as a hedge fund manager and becoming a policymaker the way that he did. There's very little precedent for that. And as a macro investor, right, you're constantly wrestling with these kinds of questions, and you're constantly questioning, you're constantly doubting what policymakers do, playing the role of armchair quarterback and thinking to yourself, I could do that better if only I were in that seat. Well, now he's in that seat, and he is running some unconventional plays. There is no question about that. But some of these plays come with risks of their own. The thing that I do want to mention about this piece that I found so, as I described it earlier, right, as savage and devastating, it's because of that foundational relationship between Druckenmiller and Bessent, which you can't ignore when Stan chooses to write an essay about Treasury policy. And that, to me, what I read between the lines is a profound sense of disappointment. And Tim, you and I were talking about this earlier because it's really something that, maybe I'm overstating the case here, but we've all been in a mentor-protege, teacher-pupil relationship in our lives. There's always been someone whom we've looked up to. And the hardest thing in the world to take is the moment when that person looks you in the eye and says, I'm really disappointed. And that's what I read here.
Eric, there's a reason we wanted to talk to you about this. You are the guy who wrote the story, and you've spoken to both of these men quite a bit over the past few years. Eric Schatzker, editorial director of Bloomberg New Economy. He joins us here in the Bloomberg Business Week studio. Check out his story from last year in Bessent We Trust, on the Bloomberg terminal and at Bloomberg.com. We stay in Washington, where the war in Iran is front and center, and weapon stockpiles front and center as well. We go now to Kayleigh Lyons. She's the Bloomberg Balance of Power co-anchor, in conversation right now with Northrop Grumman Chair, CEO, and President Kathy Warden.
And when you have an expectation to very dramatically increase capacity, one company trying to do that across multiple weapon systems obviously has limitations. So the government has sought more sources. And for tactical missiles, Northrop was not a primary provider. And we're getting the opportunity now to become a second source supplier for solid rocket motors in that area. We had focused more on strategic missiles, think bigger solid rocket motors. And now we are getting qualified to produce some of the smaller ones for products like PAC-3.
Do you see more room to grow in the munitions space specifically, since it seems that that is an area of acute focus for the Pentagon right now?
Yes, we believe that's going to be one of the fastest growing parts of our market, if not the fastest growing market. And we are positioned with capacity. I mentioned that 2 million square feet of manufacturing space. Some of that is dedicated to solid rocket.
Yeah. What the heck?
And there will be one day where we can just
What stuff?
not have news and sort of think, you know what I mean? Because it's every day, and I say that tongue in cheek, but not really. It's every day. It's a new headline. It's a new headline. It's a new headline. Does this headline mean anything to you? Because again, these are two countries that, let's be honest, I'm glad they're talking, but they don't have any control over the Strait of Hormuz legally. In Kuwait and Bahrain, those countries are going to be like, no way. We're not paying anybody to send ships through?
Brian, it's noise. It's noise every day right now. We've got two sides, essentially the U.S. and Iran, that are very diametrically opposed to how the Strait of Hormuz should run. And so, no, I don't think this news is necessarily needle.
Pretty boring too, to be honest. So, yeah. Let's do a little bit of breakdown here. And we'll go from here. I forgot how much of a joke the notifications were, too. I just got one that Dolly Parton died. I mean, on Bloomberg. It's like, I'm watching it, but it's because you have to watch something. All right. We're going to talk about this company. It's pretty interesting. Pretty interesting. If you ask me. I don't really get. I mean, I'm not going to want to see if Bloom Energy's up. If it's still up. Because semis are getting wrecked. Yeah. There's action there. All right. Let's share a little bit about this opportunity. Okay. Yeah, we'll do a little breakdown and then we'll, I don't know what we'll do. Whatever. Probably check on oil. Okay. The entire financial system is breaking in real time, and most people are only watching a piece of it. Tomorrow, NVIDIA reports earnings. That single report will move the entire AI trade because NVIDIA's data center revenue is the clearest read anyone has right now on whether hyperscalers are still spending at full speed on AI infrastructure. 2 days after that, the Fed Jackson Hole Symposium wraps up, where central bankers from around the world will say more about where interest rates go next. And underneath both of those events, there's a fight happening in the bond market right now over how the US government manages its own debt, one that tells you a lot about how much room the Fed and the Treasury actually have to maneuver. So there's 3 big stories this week, and I want to walk you through all of them because by the end you'll understand why one specific unglamorous industrial company just put up one of the best quarters of any name I follow. No one's talking about it, but it sits right in the middle of the AI build-out that NVIDIA's earnings are about to put back in the spotlight. And before I get into it, the only thing I ask in return for all the work that goes into making a video like this is that you hit like and subscribe. Every time you do that, YouTube shows this to more people, and that helps this channel reach more people who want research instead of headlines. We'll start with the bond market because it is the part almost nobody outside of Wall Street is talking about. It does set the mood for everything else this week. Earlier this month, the 30-year Treasury yield touched its highest level in 19 years. In response, the Treasury Department announced it would double the size of its long-dated bond buybacks from $2 billion to at least $4 billion per operation, running from early September through early November. Treasury called it liquidity management. The market didn't buy that explanation. Yields dropped for a few minutes on the announcement, then round-tripped right back above where they started by the next afternoon. So it's a market shrugging off an intervention quickly, and it's telling you something. This wasn't about fixing a broken market because the market wasn't broken. It was orderly. What the Treasury was responding to was a price it didn't like. And here's why that price matters. The US is running a deficit near 6% of GDP at full employment, with inflation still running above the Fed's target and the national debt having just crossed $40 trillion. Net interest payments on that debt are on pace to exceed $1.1 trillion this year, more than the entire defense budget. A 30-year yield pushing towards 19-year highs isn't the bond market being irrational. It's the bond market doing the one job nobody else in Washington seems willing to do, which is put a real price on how much this level of borrowing costs. So that's the backdrop heading into Jackson Hole. The Kansas City Fed Symposium has been a venue where Fed chairs signal shifts in policy before they're formally announced, going back decades. This year, the Fed's trying to balance an economy with above target inflation, full employment, and a bond market that's already pushing back on the idea that Washington can keep spending like this indefinitely. Whatever tone the Fed strikes there will ripple through every asset class for weeks because it shapes how much investors are willing to pay for future earnings across the board, including the AI trade, which brings us to tomorrow. NVIDIA reports its fiscal second quarter results after the close, and Wall Street's own numbers show what's at stake. Guidance around $91 billion in revenue, with consensus sitting slightly above that. The real question isn't whether NVIDIA clears its own bar, it's whether the hyperscalers, Microsoft, Google, Amazon, Meta, keep signaling that AI infrastructure spending stays at those elevated levels until next year, or whether there's any sign of digestion. That single data point sets the tone for every stock tied to the AI build-out, not just NVIDIA itself. If you want to stay ahead of moves like this, instead of reading about them after the fact, that's exactly why I built the newsletter. I got tired of watching people find out about a rotation weeks after it happens, once it's all over financial media and the easy money's gone. That's the whole reason a daily research habit matters more than watching one earnings report a quarter. So here's where I want to bring this together. Everyone's watching this earnings report for NVIDIA because it's the front door to the AI CapEx story. Fewer people are watching what happens 2 or 3 steps behind the chip itself in the actual manufacturing process that turns a design into a working piece of hardware you can put in a server rack. That's where Nordson comes in, ticker NDSN. Nordson isn't a chip maker. It makes the precision equipment that applies fluids, coatings, and protective layers during chip and circuit board manufacturing, the exact steps that determine whether an advanced chip package actually survives production at scale. And this company just put together one of the strongest quarters I've seen from any industrial names this earnings season. Starting with top line, the total revenue jumped over 10% year over year to an all-time quarterly record of $800+ million, beating Zach's consensus estimate. It's a kind of growth in a company this size, this mature, that says demand is leading to massive volume, not just some minor pop. And when you look at earnings, adjusted earnings per share was at a record $3.25, which beat Wall Street's consensus estimate of $3.10 by more than 5%. Reported GAAP diluted earnings per share went up 20% over year, and total adjusted EBITDA was an all-time quarterly record, with corporate EBITDA margins at 32% of total sales. So this company is generating a third of every sales dollar in EBITDA while still growing double digits. It's an extremely efficient operation. Now, the part that connects directly back to NVIDIA's report tomorrow is Nordson's Advanced Technology Solutions segment. They build equipment for electronics and semiconductor manufacturing. They posted 31% organic sales growth, bringing in $220 million in revenue for the quarter alone. Importantly, fundamentally, it's a segment feeling the direct pull of this denser silicon integration and the AI-driven demand for more advanced chip packaging. OpenAI produced Jalapeno today. As chips get more complex and packages get denser to keep up with AI compute demand, the equipment that applies protective coatings and precision dispensing during manufacturing gets a lot more critical. And Nordson's electronics division just launched a new equipment for exactly this shift. It's a system built for panel-level packaging, which lets chip makers produce more advanced AI-grade packages per production run than the older wafer-level approach. So they're showing that off this week at SEMICON Taiwan, one of the largest semiconductor equipment trade shows in the world. It's timed directly into the same AI infrastructure build-out that NVIDIA's earnings tomorrow will put a spotlight back on. Management didn't just beat the quarter and move on either. They raised full-year fiscal 2026 revenue guidance to a midpoint of over $3 billion, above where Wall Street had been sitting, and lifted full-year adjusted earnings per share guidance to a range of near $12. So when a management team raises guidance on revenue and earnings in the same quarter they just beat, it's a lot of strength that is likely to continue. Wall Street responded the way it usually does to a quarter like this. Oppenheimer raised its price target from $335 to $370. KeyBank raised its target from $335 to $360, and Baird raised its target from $328 to $351. These are three major firms making the same move in the same week. It's a shared reassessment of the company. Now, more broadly, I'm offering a free report on the best 6 AI adjacent stocks for August, along with my list of recommended market newsletters at the link in the description, selfadvisors.com/newsletter. If you enter your email, you get the report sent straight to your inbox along with daily market research. But with this company in particular, there's more underneath the top line numbers. They generated $200+ million in free cash flow in the quarter alone. Imagine that, in AI, free cash flow. They used that cash to pay down over $250 million in gross debt while still returning capital to shareholders. So they're deleveraging, rewarding investors, and the order backlog they have is up 30+% compared to the prior year period. So they have real multi-quarter revenue visibility here, heading into a period where a lot of industrial names are just not doing great. And it's not just the electronics segment carrying Nordstrom. Medical and Fluid Solutions has an all-time record quarter of its own, plus 200+ revenue, up 10% organically. So these are complex medical components that give them a high margin business outside of semis. They're not quite as exposed to the Leopold potential future continued drama. They also have operating margins expanding to 27%. So this isn't a single quarter. It's from actual execution across their legacy medical businesses too. Now, I want to be straightforward with you about how all these pieces connect, because it's more useful than pretending there's just a clean story about how Jackson Hole and the bond market sets the multiple investors are willing to pay across the entire market for a company like Nordstrom. NVIDIA's earnings tomorrow does set a tone for the AI CapEx story, and Nordstrom's own numbers, the sales, the record EBITDA, the raised guidance, the massive backlog growth, the new product built for exactly this AI packaging shift that we're seeing with the OpenAI jalapeno story, they're what makes this company worth knowing, independent of this week's events. But with a week having NVIDIA and Jackson Hole and the bond market still playing out, the instinct in general is to try to predict every single move. So I would push back on that, because nobody consistently calls every rate decision, of course, or every earnings print. In fact, a lot of companies sold off after NVIDIA's great earnings, including NVIDIA last quarter. But what you can do is find where there's demonstrable strength backed by real numbers and position around that. And Nordstrom's quarter, their record EBITDA, their 35% backlog, raised guidance is what that looks like. The market's always showing strength somewhere, even during a week this crowded. Your job isn't to call the macro. Your job's to find where the strength is, and that's the game. It's what I try to do here every day. It's, if this approach makes sense, grab that free report at selfadvisors.com/newsletter. It's the approach I've used for those AI stocks from August. You also get daily research and newsletter access. And if this video helped you make sense of a complicated week, hit like and subscribe before you go. It helps this channel reach more people trying to find ideas and learn this the honest way. Thanks for watching, and I'll see you in the next one. All right. It'd be great to hear a little bit more about like the data center water thing with numbers, not just like, they use water, I drink water, you know what I mean? Because it is strange that Ecolab company that does like water circulation,
and including in space-based interceptors, as you mentioned, critics would say this may be more technologically possible now, but it still may not be cost-effective. Is the juice worth the squeeze? Is this something that the U.S. can afford at scale?
We believe it can be cost effective. And you made an important point in the way you framed the question. Technology today has advanced to a degree that what may not have been possible, or I would argue was possible, but very expensive 10, 15 years ago, is much more affordable today. And that's the new information that needs to be incorporated into those who are analyzing space-based interceptors and the solutions that are being, and the is being taken on Golden Dome is to allow for that prototyping and then demonstration before the government commits to a particular solution. And that makes a lot of sense.
As we're thinking about what the government is committing to or what it would like to be able to commit to, Golden Dome, things we've already discussed, building out more munitions capacity, investing in the nuclear triad. You want the submarine, Sentinel, B-21, as we talked about. Can it do all of these things realistically at the same time, or do there have to be trade-offs somewhere? And if so, where do you expect those hard trade-offs might be?
We believe that industry can provide the capacity and the people to do those things simultaneously. There has to be budget to support
really
it, which is
smart,
why
but
this administration has asked for a $1.5 trillion defense budget. And to the extent that that is funded, then yes, all of these programs fit within that budget request. If that is not funded, then there are going to be priorities that need to be
efficiency is the thing that they are trying to achieve, because if they get efficiency, they get low cost. If they get low cost, they get customers.
There we go.
Right? Most decentralized systems are not highly efficient and high performance. And so it's like, what are you optimizing for with these systems?
Good point. Great point. Tom, do you see, how do you see AI, machine learning intersecting with crypto, blockchain, or I guess you could touch a little bit maybe on DeFi. Are these synergies worth exploring?
I think, again, it goes back to this idea that it's all kind of one big trade to me, which is, this like highly disruptive technology overlay on finance seems to me to be an area that people are almost underestimating because they're so stuck on like the individual technologies. They're like, oh, DeFi, DeFi, DeFi. And they're missing what AI is going to do or machine learning is going to do, or, name your other technology. And so to me, what I try to do is I try to kind of zoom out or kind of look at the playing field a little bit wider and say, Bitcoin is a form of artificial intelligence. It's a programmatic monetary policy. We automated away the central bank, right? So you have AI, you have automation, it's decentralized, right? It's a DeFi, it's the original DeFi product. Like you kind of like see all those technologies wrapped into a single product, and it works. And so I think that is a good example of what we're going to see in some of these other areas, which is you're going to see a lot of the different disruptive technologies woven together. I am a very, very small investor, but a very happy investor in Ramp, which is kind of this corporate card and kind of a finance platform. They use a lot of AI in their platform, but they also use a lot of other technologies, right? They use a lot of automation. They use a lot, like they're just trying to solve their customer's problem. And frankly, they don't care what the technology is. What they care about is, am I solving the customer's problem? I think that's part of the beauty of Bitcoin is like, it doesn't matter what the technology was because it works and it solves the customer's problem. And so how do you find things that really have that product market fit or solving the customer's problem, but understand that a lot of them are actually going to use multiple pieces of this technology? And it's a fintech story. It's not just a DeFi story, an AI story, an automation story.
Awesome. Real interesting. Are there any other exciting trends or maybe like companies you're seeing right now?
Real interesting. All right. Let's see what else is cooking again. Okay.
and technology from a wide variety of partners and embracing them into a solution for the good of our warfighter and the taxpayer. And we are very open to that. Everything doesn't have to be invented in Northrop Grumman for us to bring it forward in one of our solutions.
So is it mostly partnerships with these players then, or could you see Northrop Grumman at one point absorbing them, acquiring them?
We could see ourselves doing that. I'm not sure that in the near term serves the interest, right? There's a big market to be served, and more competition to serve it is a good thing. And we will compete vigorously with these companies while they're offering something different than us. But when we partner together, we will operate as complete teammates. And we know how to do that. It's how the industry works, and we embrace anyone who comes into the industry to do the same, because that's what's best for our customers.
And finally, how are you thinking as a CEO about AI, especially a CEO that has the cyber experience you do? Is this something that will just bring greater cost savings in a way in which you can take advantage of it, or is there a real threat to the speed with which this technology is advancing?
We are seeing it both
Should
as
we
a
make
benefit
some crazy
because
video
we
about
can
Tesla,
use AI.
guys? It's tempting.
A responsibility for us to respond quickly to those who are having to scale our cyber operations. The good news is, in a company like ours, we have had a robust cybersecurity operation for a long period of time. We don't just...
It's killing me. Just wonder how much they paid to be on there. Wow, look at this fire. That looks bad. Look at this fire, guys. Okay. What do we got to navigate now?
Charlie Pellet is standing by. Hey, Charlie.
Hi, thank you very much, Tim. Indeed, NVIDIA
This
reports
guy's been
after the
waiting
bell
for a
tomorrow.
while.
Right now, looking at a gain of 2%. Just talking with the CEO of Northrop Grumman. Interesting day for the defense names. Northrop Grumman down by 1%. Lockheed Martin down by 1.1%. Boeing shares just about flat on the day. Stocks higher. A decline in oil prices sending bond yields lower as traders await NVIDIA's numbers after the bell tomorrow. S&P right now up 18. Gain there of 0.2%.
I don't know if oil prices down makes bond yields go down.
NASDAQ Composite up 0.5%. The NASDAQ 100 index up by 0.5%. The SOX, the Philadelphia Stock Exchange's semiconductor index, up 1.3%. Your 2-year right now at 4.19%. The 10-year 4.64%. Down day for gold, tumbling 0.1%, 46.49 the ounce. While West Texas Intermediate crude, major story, crude selling off. WTI down 3%, 82.42 a barrel. Brent 88.64. Drop there of 3.8%. Cannot ignore the move in Bitcoin.
Gold actually closed. Well, opened a lot lower and closed super green.
United Airlines adding 10 destinations in Europe and Asia to its network next year. Shares of United up 1.5%. Transatlantic rivals Delta up 8%.
Okay. This is... You lost me. I'm lost. What else is looking interesting here, though? Gosh, that Fox A is holding up there, huh? Marvell earnings coming up. SMCI definitely looking interesting a little bit. Of course, would be better if it didn't pop quite that much. But yeah. We'll see. It's definitely on the list. What else? HPE maybe? MSI looks pretty like it's gonna keep going. MSI. Yeah, this looks like it's going to keep going. Motorola Solutions. It was down, and now it's going up. Okay. It might not, but it looks like it could. Yeah. Let's see what's cooking here. Oh yeah, that is the question. Oh God.
The experience that Alexa for Shopping offers.
Listen, if you ever want to talk bikes, just give me a call. I will talk your ear off about bikes. We can do that another time. What in your view is Alexa not doing yet that you want Alexa to be able to do?
I mean, there are, one of the most common requests we get from customers is that they want Alexa more present throughout their day. I think, customers that get used to organizing the household, connecting their different family calendars to Alexa, say, and their Echo Show, and then being able to organize all the sports practices and the pickups and drop-offs and carpools and who has snack when and what days are the
So they want it to be smarter.
Well, I think, this is what Alexa Plus can do at home, but then they want that more present with them on the go. So, I want to be able to have that same experience in my office at work or when I'm commuting to.
Are you building for that?
We imagine that we want Alexa with customers, more and more throughout the day. So I think, we talked about Alexa for shopping. I think it's a good example of how we imagine, certain journeys that Amazon already covers. We just imagine that we could do even more.
Super quickly, I'm also curious about the fact of how people should essentially think about Alexa and think about the idea of purchasing something on there as to whether or not you actually know that what you're looking for, whether it's an espresso machine cheaply, is that actually something that you want, or is it something that Amazon essentially helps its bottom line? Super quickly.
I mean, I think both are true, right? If you help customers with things like complicated shopping journeys, it's great for them because it gets something done and checked off their list, and it helps Amazon's bottom line as well. Here's a data point that'll help. Customers that try Alexa Plus attach to Prime 25% more. They subscribe to Prime at 25% increased rate. So good for both.
Arash, Vice President Alexa.
Oh, God.
Echo at Amazon. Daniel, always good to get you on the program. Please do come back soon. We appreciate it. Daniel joining us from Seattle. Coming up next on Bloomberg Business Week Daily, we're talking stocks on the move and, of course, check on these markets. This is Bloomberg.
Are IT teams ready for agentic AI? 87% of business leaders believe AI will redefine roles and responsibilities at their companies within a year. Agentic AI's
Everything is going haywire. What is going on here, guys? What is going on here? Oh my God. There's just not enough internet to go around. That's what's going on. That's interesting.
Two public companies. Number one,
That's interesting.
shorten your earnings release. There should be almost no data that is machine readable in it. If it's 500 words that says we reported results, you can find them here. Thank you, goodbye. That's good. And number two, report where the volume is. Less than 10% of volume is outside market hours. In the opening and closing auctions is 65% of volume, which is large institutional flow that wants a midpoint. It will mitigate risk. So the ideal is you unhalt right into the opening auction. That's when you should report. I've discussed this with the SEC, FINRA, the exchanges. You know, our job is to, as fiduciaries for shareholders, is to have their best interests in mind, and we need to adapt to the markets we've got.
It's good real world advice, and maybe the after the bell earnings at some point. We hope they don't go away. I'll be doing fast money tonight. We like to have them. It's news, but maybe it's not the best way for the stock. Tim Quast, Modern IR president and founder, and appreciate the compliment. Contessa agrees.
Yeah.
Thank you very much. More power. More.
I need to ditch the Mutual Admiration Society here.
It's a great. I'm an inaugural member. More Power Lunch right after this.
That's a good idea. I mean, Dick's Sporting Goods just got hosed. So, yeah.
WD, I mean, those shares are down about just under 3% at the moment, 2.9%. So still a software story, but a very different story because it is that part of software that has been immune to this SaaS apocalypse, right? It's all about cybersecurity products and services. And even though it's down today, its stock is up like 58% year to date. So it's done really well. It might just be
I was about to say Bloomberg's buffering better,
a little bit of a lofty expectations heading into earnings tomorrow. That's kind of weighing on it, right? Because they are expected to post annual recurring revenue growth of 24.4%. And that is going to be the biggest increase since the third quarter of 2025. And Bloomberg Intelligence also noting that the stock is very expensive compared to the rest of its peer group. But, you know, that does reflect confidence in some of its agentic AI offerings that it has invested in. So we'll see if earnings tomorrow kind of justify already high expectations.
It's a brave new world for cybersecurity when it comes to these agents and what some of these LLMs have shown that they're able to do. Look no further than, you know, sort of the sandbox stuff that's happened, right, in recent months where, you know, they've been able to infiltrate certain competitors and that sort of thing.
Yeah, yeah, absolutely. Yeah. So
okay. Keeps me up at night. That's cool.
Yeah.
So over to Moderna.
Yeah, Moderna, one stock that's doing well. I took your mRNA and looking at the market now, yeah, it's extending to just over 14% at the moment. Look, like there's been a lot of good news from its mRNA vaccine trial that it did with Merck, and that is for its melanoma vaccine. And now Wolf Research has upgraded it to peer perform versus underperform previously. And Bloomberg Intelligence also estimating that the vaccine can generate up to $9 billion in sales by 2040 across the melanoma, lung, and kidney cancers group. And so a lot of promise for an mRNA vaccine that isn't COVID. But on a bittersweet note, though, one of its early vaccine supporters, Dolly Parton, and also country music icon, has died. So very sad day for Moderna a little bit. But I mean, shares are still up.
Yeah. I mean, shares are still up. It's amazing that there's a Dolly Parton connection to this
Moderna.
company. But I do remember in the early days of the pandemic and her work on the vaccine and being an outspoken proponent of it. Yeah. It is also, speaking of COVID, remarkable to see just how even with last week's gain from Moderna, just a massive move up and to the right. It's still down 64% from those pandemic highs. This was a stock that was trading in 2021 at close to $450, and it's still, even with last week's gain and today's gain, up $100 to $160.
Yeah, I mean, in year to date, 440%.
All right. We got serious buffering problems here.
There's a lot. Let me not kind of name companies because everyone will just think I'm like shilling my investment portfolio. But if I just kind of mention maybe the technologies, obviously, Bitcoin. I think that their stable coins are very interesting as well. They definitely have product market fit.
Yeah, YouTube's
I think
fine.
the smart contract platforms are going to continue to have success. I think that AI and machine learning are going to be very interesting. There's like the generative AI stuff, but I actually think what becomes quite interesting is, can you start to automate your personal finances? Can you start to automate purchasing? Can you start to use some of these technologies, not just for saving, but also for spending, for investing, like those types of things? I think there's a really interesting area around information for finance. How do you actually create the information? How do you summarize the information? How do you get the information to the right people? All that kind of stuff. I think that there is a lot of infrastructure in the legacy world that is going to get ripped out or replaced by people kind of disrupting it. I always call that, like, that's the nerd stuff. There's not that many people who really get excited about talking about, 2-day settlement times of the, DTCC and, whatever. But like, there are people who do care about that, and they're probably going to disrupt, some of that stuff. And then, one of the things that is an overarching theme that I'm very interested in, but I haven't yet seen enough people kind of building things where I'm like, okay, these are the solutions, is the machines are going to transact with each other. And when you start to see that, one of the promises early on of like crypto was your car will have a digital wallet and it'll drive over something, and your car's wallet will like pay the toll tax or whatever. And if you think about this, like, the trend is definitely headed that way. We used to pull up to the toll, pull the change out of our pocket, hand it to someone, right? Then we got really smart. We're like, let's just automate the person. Like, you can just throw the change into the little basket, right? And then someone was like, why don't we come up with the easy pass? I don't even have to stop. Like, I just put it on my windshield, right? And then eventually it's going to be like, it just embedded into the car. So you can see like the progress is definitely towards automation and all that kind of stuff. What I wonder is,
that's a good
just
analogy.
like we've seen high frequency trading in the stock market, where else are things like that going to show up? Right?
Let's just see what this guy's talking about. Wow, this is classy.
Imagine being able to build an app with your name on it just by thinking about it. Meet Base 44.
Specific robots can deliver high ROI. Yeah. The trick is to partition
Co-locating
work.
humanoids
Task-specific robots
and
handle the
task-specific
repeatable, high throughput,
robots.
high reliability core loop, while the humans handle the messy edges. Yeah. Totally agree. I mean,
Just yapping about robots
rapid task switching,
as usual.
spaces, whatever. Practical example is last mile delivery. Yeah, I agree with that. Handling at the vehicle stretch a one-armed logistics robot. Okay. Provides high throughput box handling at the vehicle, while the Atlas humanoid handles the last meter tasks around people, doors, and curves. Interesting.
I feel like I
Let's go look at
should
that. So it's
drink water or
Atlas and
something.
Stretch. Atlas
Might be a good
robot,
idea.
Hyundai.
Okay.
Okay.
Why don't I do that?
Picture of that in just a sec. And then there's stretch. I didn't know Hyundai was doing this much in robots, honestly. Ah, see, yeah, that is an interesting combo. I'll show you those in just a sec. I'm just gonna slap them in here. Oh, they had a, well, those are different pictures. Okay. Let's see. Pop open the screening here. Okay. That is Atlas. And then this is stretch. Now I wonder what Hyundai, like, are these puppies, what are they trading for? Hyundai. I don't think I can invest in it out here, can I? Hyundai. Not that I necessarily want to, I'm just curious for valuation purposes. Yeah, no, it's just a 005380. Okay. So this puppy is, I mean, it's been on one heck of a run. 100% over the past 5 years. Basically a double over the past year. But you can see it's come down a lot from some of its peak over here. This is now a, yeah, this to Korean won to USD. Oh, come on. Do the math for me. $71 billion. $71 billion company. Okay. Okay. Task-specific robots. Early stage demand would exceed supply. U.S. humanoid demand outlook is fundamentally anchored in structural labor shortages rather than outright labor replacement. Yeah. Yeah, I could agree with that. I agree. Okay. Wow. Projected to reach a shortage of workers of 1.6 million by 2030. I hope that's not including a recession. I mean, well, or do you hope it is? I don't know. I feel like the number would actually be a lot higher if there was a recession. Because if there was a recession, you know, let's just say recession does 15% unemployment. That would be 158-ish million times 0.15, 23 million. Just for comparison, 1.6 million unfilled jobs to be filled by 2030 in manufacturing. So that, you know, offsets some. I'll just put that over there. That's an interesting estimate. Manufacturing industry. Okay. In warehousing, humanoids operating at $10 to $12 an hour versus $30 for human labor create an addressable pool of 800,000 roles in 2026, growing to 1.2 million with penetration from ramping. The consumer segment offers the greatest long-term optionality, scaling from 10,000 units towards 225,000 units. Assuming humanoids will serve as a complement to human labor rather than a substitute, the full-time equivalent coverage would improve to 1.2 human equivalency by 2030. Interesting.
Audio is important. What I don't get is, what is even the value of having 1,000 people watch you live? Not even really watching you. Oftentimes they're just listening to you in the background, right? Especially if it's the same people. That's what, $5,000 worth of people a month? If you even monetize them well. Sorry guys, I might monetize you. Okay. At your benefit. Let's get looking here. This is how the US will reset the entire debt system. August 26th is tomorrow, Wednesday. On that day, the government releases the core PCE report, and this one number can move the whole market. I want to walk you through why this date matters so much, and I want to show you where the money may flow once that inflation print hits. So let's start simple. The US owes more money than it's ever owed before. The government pays that debt with tax money, but more and more of that tax money now goes just to pay interest, not to pay down the debt itself. That's the trap. And tomorrow's report plays a direct role in how fast that trap tightens or loosens. Here's the bigger picture behind that trap. Back in the year 2000, the debt the public holds sat at $3.4 trillion. Today it sits above $32 trillion. Back then, that debt equaled about a third of the entire economy. Today, it's larger than the entire economy. The cost to service that debt has also grown. In 2000, interest payments ate up about 11% of tax revenue. Today, interest payments eat up over 21% of tax revenue in the first 10 months of the fiscal year alone. That share keeps climbing every year. The government has a choice. It can raise revenue, it can cut spending, or it can lean on the Fed to lower rates and let growth and mild inflation shrink the debt over time relative to the size of the economy. Right now, the administration keeps pushing the Fed toward that third path because long-term borrowing already costs so much. The Treasury leans harder on short-term borrowing to fund the government day to day. It's basically a reset. Nobody declares it. Nobody names a day it starts. It just happens a little at a time, deficit after deficit, year after year. Spending cuts have been tried and mostly stalled. Big pushes to trim the budget have come and gone without making a real dent. Tax cuts passed in recent years took a large source of revenue off the table, and no new tax increases are planned right now. That leaves growth and rate policy carrying almost the entire weight of this problem. Treasury officials keep talking about deficit reduction, but the actual deficit still runs close to 6% of the economy, roughly double the level officials once promised. So when talk and results drift this far apart, markets stop waiting for a fix and start pricing in the drift itself. This is a big part of why gold, Bitcoin, and defensive positioning have all picked up this year, well before Wednesday's report even comes out. But before we dive in further, the only thing I ask in return for all the work that goes into making a video like this is that you hit the like and subscribe. Every time you do that, YouTube pushes this video out to more people, and that helps people prepare for what's happening before it shows up in their own portfolio. Now, why does tomorrow matter so much inside this bigger debt story? Core PCE is the Fed's favorite inflation gauge. It strips out food and energy so policymakers can see the steadier trend underneath. A cool number gives the Fed more room to cut rates, which helps the government finance a mountain of debt more cheaply. A hot number forces the government to slow down, and that raises the cost of every dollar the Treasury still needs to borrow. This Wednesday isn't just a day-to-day for traders, it's a day-to-day for the whole debt story I just walked us through. Every basis point moves the math on trillions of dollars, and that math touches your portfolio, whether you trade actively or just hold the S&P for the long run. Markets already sense this. Stocks sit near record highs. Gold trades above $47 an ounce, which tells you investors want protection against currency and debt risk. Bitcoin went above 80K, another place investors go when they worry about the dollar's long-term value. The dollar index itself has drifted lower this year, and the US 10-year sits well below 4.5%, which keeps the government's own borrowing costs elevated even as officials push for relief. None of these moves happen really by accident. They happen because large pools of capital already positioned for a world where debt keeps growing and rates keep adjusting to manage it. And Wednesday's report either speeds that positioning up or slows it down for a few weeks. That's why the date matters so much right now and why I wanted to get this video in front of you before tomorrow morning rather than after. Other countries face a version of the same pressure, just built differently. Places with older populations and generous retirement systems need people to work longer before they can fix their own numbers. Places that already tax high earners heavily need to widen who actually pays in. The United States has its own version of that puzzle. An aging population, drawing more from Social Security, Medicare, and veterans programs every year, alongside a tax base that brings in a smaller share of the economy than it did 25 years ago. If you put those two lines on a chart, moving in opposite directions for 2 decades, and you get exactly the debt path we're living through right now. Wednesday's report won't undo that trend in a single release, but it'll tell us how fast or how slow that trend keeps building over the next few months, and that pace is what actually moves your portfolio. I'm currently offering a free report on the best 6 AI stocks for August that comes with a list of my recommended market newsletters. At selfadvisors.com/newsletter, if you click that link in the description, all you need to do is enter your email to get the report. It gets sent straight to your inbox, along with daily research and the newsletters I personally read every morning before the open, if you select those. So let's talk about where strength actually shows up, because this ties directly into tomorrow. Take a company like Motorola. It just posted a stronger quarter than Wall Street expected. It raised its full year guidance for earnings and revenue. Its profit grew from a year earlier. It's not an exciting name, but its adjusted earnings beat estimates by a wide margin. Sales in its software and services business grew by double digits, and its products business grew even faster than that. This isn't the Motorola of a decade ago. Part of the beat came from a refund tied to tariffs the company had already paid, money that came back to the bottom line this quarter, which matters more than it sounds. It shows how trade policy and government cost decisions ripple straight into corporate earnings, the same way debt and rate policy ripple into markets in general. The company also is flagging rising memory costs tied to the huge wave of AI infrastructure spending pulling memory chips away from other buyers, which tells you two things at once. Demand for AI build-out keeps coming, and companies that supply mission-critical tech to governments and public agencies keep growing, even while costs rise around them, Motorola's customers. That kind of resilience is worth paying attention to heading into a week where the debt and rate story could shift again. Management also raised guidance for the current quarter and for the full year, and Wall Street's own estimates for next quarter now sit close to double-digit revenue growth. Shares still traded down slightly the day of the report itself, then jumped after hours once investors had time to read through the numbers properly. That gap between the first reaction and the following reaction happens a lot right before a big data week. Traders often need a beat, a raise, and a full data cycle like tomorrow's report before they really go real size into a name. So it's the kind of setup worth understanding early rather than after they do that. If you want to stay ahead of a move like this before it's obvious and not find out about it after PCE comes out and may move the market, you shouldn't be navigating this week without a framework and a daily newsletter that's watching it every single day with you. Markets move on capital flows and data surprises, and the investors who do well over time are not the ones reacting fastest, although some traders do. Once that number crosses the PR wires, they're the ones who already understood the setup underneath it because they were well positioned before it became the headline everyone's talking about on Wednesday afternoon. So that's the difference between chasing news wires and actually reading the market. And it's the entire reason I built the newsletter in the first place, because I got tired of watching people find out about a move 3 weeks after it already happened. So let's connect this back to the debt story, because this government's carrying more than $32 trillion in public debt, with interest costs eating a growing share of tax revenue, and it needs low rates far more than it needs high rates. That gives every inflation report outsized power over policy, and Wednesday's core PCE won't fix the debt problem or break it in a single day, but it'll tell the Fed and every large investor watching the Fed whether the path toward lower rates stays open or narrows a bit. Either way, capital moves. It always does. Your job's to know where it tends to move first and be already positioned before everyone else catches up Wednesday afternoon. Now, before I get into MSI, that's the ticker, my Motorola, I want to come back to something I said at the start because it's important context. In times like this, the best way to protect and grow your portfolio isn't to panic, isn't to go to cash. It's not to trade every piece of economic data the moment it comes out. Wednesday's report will get plenty of attention for about 6 hours. Then the market moves on to the next thing. What matters more is understanding the structure underneath these moves. The debt load, the rate path, the areas of the economy still growing, even as the government's finances strain. That structure doesn't reset every Wednesday. It builds over months and years. And the companies tied to durable essential spending tend to hold up best through it. That kind of thinking is exactly what goes into the free report I mentioned earlier, the best 6 AI stocks for August, along with my recommended newsletters, all available at selfadvisors.com/newsletter in that description. You get daily research on setups like the one we're discussing right now sent straight to your email. So you're not starting from scratch every time a report like tomorrow's comes out. But here's the stock I want to leave you with today. Again, it's Motorola Solutions. The full ticker is MSI. And I bring this up because its revenue comes from an interesting place. It does look like an obvious AI trade on the surface, but a large share of its business comes from public safety agencies, government contracts, and mission-critical communication networks that cities, states, and federal agencies rely on every day. It's not, exciting AI CapEx spending, but the government spending doesn't disappear when rates move or concerns about the debt worry traders. These are police departments, fire departments, emergency response systems. They buy and upgrade their gear regardless of what the Fed does tomorrow. At the same time, the company sits in the middle of the AI infrastructure build-out, believe it or not, through rising demand for the memory and components that go into its hardware and video systems. So you have a company tied to two of the biggest flows moving through this economy at once. Steady government spending, which keeps growing even as the debt itself grows. This isn't some flashy AI unicorn. But you do have the AI capital spending wave that's pulling resources across the whole tech supply chain. MSI raised guidance, it beat earnings, and its tariff cost recovery point to a business managing this environment well rather than getting squeezed by it. And it's a mix of durable government demand and AI-driven growth that's the kind of setup worth understanding before tomorrow's PCE, where that inflation report can shift how capital moves across the whole market. And think about it from the other direction too. A soft reading nudges the Fed toward cutting rates, and cheaper borrowing tends to support more government and infrastructure spending, which flows straight into companies like this one. A firmer reading would likely slow that cutting path down, yet it would barely touch the underlying demand for public safety, tech, or AI infrastructure build-out, because governments and cities still need to fund and upgrade those systems either way. I mean, the flock cameras are at the center of this concern, basically. But this rotation is what is worth watching heading into Wednesday, regardless of which direction the number breaks, is the point. And the broader points, the market's always showing strength somewhere. Right now, gold, Bitcoin, and companies tied to government spending and AI infrastructure are telling a similar story about where capital wants to sit. So your job isn't to predict every twist in the PCE or Friday's checks in the whole meeting. Your job is to find where the strength sits, position around it, and play the game. That's what I try to lay out in the newsletter and the ones I recommend. But one last thought before I go. Wednesday will come and go. By Thursday morning, most people will already be talking about something else, which is normal. Markets always move to the next data point. But before I let you go, the underlying story is a growing debt load, a Fed under pressure, pockets of the economy still expanding despite that, and it's not going to reset itself on a weekly schedule. It's going to build quietly in the background, and the investors who track it steadily tend to make better decisions than the ones who only pay attention to the loud things like the exact moment PCE comes out. My goal with this channel, with the newsletter, is to help you build that steady habit so days like tomorrow feel like a confirmation of a plan you already have rather than a scramble to figure where it fits in. If any of this helped clarify why tomorrow matters or gave you a new way to think about a name like Motorola, technically Motorola Solutions, go grab the free report on the best 6 AI stocks for August at that link in the description, self-advisors with the E/newsletter. Enter your email, get the report sent to your inbox, get access to daily market research along with the newsletters I personally recommend. And before you go, hit that like button and subscribe if you haven't already. It genuinely helps YouTube put this in front of more people who need to see it before Wednesday. And I've been putting out 4 videos a day. So conceivably, someone will see this one. Thanks for watching, and I'll see you in the next one. All right. What do we got cooking over on CNBC? Why do we care about the Dow? I'm sorry. I'm sorry.
These are some progressions here that they are projecting. I mean, projections are always funny because they're estimates. They could be way off. I expect humanoid market to develop first in industrial. We saw that. Customer willingness to pay is anchored into hundreds of dollars per month. Safety, trust, digital AI. Good data is all you need. It doesn't have to be great, is what you're saying. Large motion tasks. Dexterous hands. Okay. That's a little boring. The rest of this is a long thing. Holy smokes. So they use AI to write all this? It actually doesn't read like AI.
That is the question, though.
All right. What are we over here?
Do people care that Druck wrote that thing about
equity
that?
market. That also changes the disciplines around diversification. In the Great Moderation era, which gave rise to simplistic allocations like 60-40, because you had that relationship. I think we may be, in a more secular way, looking a little bit more like that period from the mid-60s to the mid-90s.
Well, I mean, some are debating the viability of the 60-40 now, right? Just given where bond yields are, where bonds seem to be trading. There's a lot of cash on the sidelines, too. You know, by some estimates, $8 trillion in money.
But that's money markets, offsetting savings accounts. So I don't know about how much money there is actually on the side.
Even individual investors that are not ultra wealthy have access to asset classes to a much greater degree than anything we have seen in the past. So we've sort of democratized asset allocation and the education around that. I also still think bonds are deserving of a home in portfolios that might still be dominated by equities. But as far as the cash and money market mutual,
If you're running your own business, you need Symphony. Just tell it what's on your plate, and it jumps right in. Analyzing ways to move your business forward, and gathering the right team of agents to get it done. It syncs your whole world. Every tool, day one.
All right, everybody.
Then the agents.
I think you mean Boston Dynamics, right? Did they buy it? Let's fact check that. That's interesting. Hyundai, Boston Dynamics. Oh, 88% ownership. You're right. Hyundai Motor Group, HMG. Wow. That is very interesting. Okay. Let's see. Okay.
Available to individual investors, people who are on the Schwab platform that probably never had an opportunity to invest like some of their hedge fund counterparts and what have you. So I'm glad you made that point, and great insight as always. Lizanne, we'll see you soon. Thank you.
Okay,
Lizanne
thanks,
Saunders of Schwab. Joining me now, Capital Wealth Planning's Kevin Simpson, Newberger's Shannon Sakosha. Shannon's a CNBC contributor. It's good to have you both. Okay, so Josh Brown would tell you we have two Fed chairs speaking this week. The real Fed chair, Kevin Warsh, on Friday, but the AI Fed chair, Jensen Huang, on Wednesday.
Jensen
matters more
right
now.
You know, that's a tough question, and it shouldn't be. Historically, we wouldn't even have this debate, but I think that the earnings report tomorrow from NVIDIA supersede everything else that happens this week. And that's not to discount Kevin Warsh's speech on Friday, because it's huge, and I think where interest rates are headed are probably more important than where earnings are going. But what Jensen Huang talks about tomorrow in that earnings report, and you said it earlier, I think the beat is a given. That's the price of admission. Yeah. But what he says about the report, the margins, the Rubin, and really the whole ecosystem, I think to me that's more important, because this market is trading on the AI trade, Scott, more so than it's trading on interest rates at the moment.
We're not suggesting that, what he says won't have a direct impact on NVIDIA. Of course it will. But the way that stock tends to trade around its earnings, in the immediate aftermath, and the way that other parts of the market have traded, I just feel like it's the hundreds of other things that are potentially at stake, which carries maybe more weight in terms of what he might say and how those other things trade, and then how people view the trajectory of the market from here.
So I totally agree with you, and I think this quarter more than ever. But one of the reasons that NVIDIA tends to not have this enthusiasm post-report, I think is in their choosing to report so late. That we get a lot of the run-up, a lot of the anticipation from the other companies, so that you're sort of thinking about what NVIDIA is going to do because we've seen so much from it before.
Yeah, this thing's running down into the print, right? After this really nice rebound. This has been down 7 straight days. Heading into today, okay, it's green now, but it hasn't looked good lately.
Well, from a price perspective, I think you can buy it before the print, but who knows? We know the implied move tomorrow is going to probably be 5 or 6% one way or the other.
Yeah, probably. Okay, let's listen to this for a moment. I'm kind of curious about this. There was a section here in the Sam Altman. Let me see. I think I saved the time of the clip. Oh, I was looking for Sam Altman. I accidentally wrote Scam Altman. Kevin.
We got to GPT-4, which was back in 2023, I think. That very quickly after that, there was going to be much more disruption in software business being up for grabs.
I'm not going to watch
right away than it turned out to be. And the thing
Kevin
I think
listen to an interview with someone.
In terms of the speed,
I'm going to listen to Kevin listen to Sam Altman.
People keep doing the same things they're doing. They keep buying from the same.
And draw the line somewhere.
Company. They keep sort of wanting to use their tools in the same way.
Okay. Consumer confidence. That's not very fun, is it? What are we talking about over here on CNBC?
This is my guess. I've not talked
Oh yeah, drop.
to the secretary about this, but my guess is his approach was in part to get ahead of a potential problem so that there isn't a crisis, so that the machine, as Stan said, continues to function freely and
what if it doesn't? What if it doesn't work? And in part, whether it's Mr. Druckenmiller or Citadel, which was speaking on this topic yesterday when they say, quote, this amounts to financial repression at the margin. The real issue here is a Congress that seems wholly, and an administration, just because they're the administration there now, that seems wholly unwilling to deal with the $40 trillion deficit that we do have.
Yeah, but this is true on both sides of the political aisle, Scott. There's no political will or capital to meaningfully cut government spending. So, this is something that we've lived with regardless of party. And as you probably know, the Congress's approval ratings are lower than any one individual's in most cases. But again, to say that, you mentioned another firm, we're talking a 10 basis point range in the 10-year note over the past week. I mean, come on, this is nothing. This isn't a big deal. Why are we getting ourselves so worked up over this?
It's not about the movement in the yield itself. It's about the statement that this whole thing makes in and of itself. It's a statement that if we don't like where interest rates are going, we will intervene to try and deal with that, rather than let market forces deal with that. That's the crux of the argument. It's not 10 basis points.
But I think people are confusing a fundamental story with a technical operation, because I think interest rates are going to rise. But if they're going to rise because the demand for capital in the U.S. is so strong because we're doing so well. You mentioned housing is 3% of the economy. The remaining 97% of the economy is doing extraordinarily well. You've got a CapEx boom. You've got very strong consumer spending. This morning we had retail sales from the prior 52 weeks up over 9%. So, again, I think people are saying, we're trying to intervene in the market and make it do something it's not supposed to do, and so we've lost the price mechanism. I just think that at this point it's just really hyperbolic and overstating the reality of what's happening. I mean, let's see over the next few quarters where rates are, what happens with inflation. Do you get this supply side boost from the president's policies and deregulation and tax cuts and things of that sort? But I just think right now we got to take a deep breath. And I understand where Stan was coming from. He wrote a very good piece. But I understand what the Treasury Secretary is trying to do. And it's not unusual for people to disagree about these things. This is what makes markets. And there are a lot of great investors who have different views of how things are supposed to operate. As you know, you see it in stock prices all the time.
We'll leave it there. Joe, thanks for the time. I appreciate it.
Thank you, Scott.
It's Joe Lavorgna. We have news crossing on OpenAI. Kate Rooney has that for us. What do we know here, Kate?
Hey, Scott, we're just learning that OpenAI's head
Jalapeno.
of data centers is leaving the company. This is according to the Wall Street Journal. We have reached out to OpenAI. No comment yet. The Journal citing people familiar with the matter. Chris Malone is the name of this gentleman. He joined this company around the time where they launched Stargate. If you remember that massive, very ambitious data center effort with Oracle and SoftBank, he was leading this entire multi-billion dollar effort over at OpenAI. But it does add to a string of recent departures. We've talked a lot about Denise Dresser, Chief Revenue Officer. You had Brad Lightcap, Fiji Simo, all left for a variety of reasons. But it is the latest example of some of the executive turnover and volatility at a time when this company has filed confidentially to go public. From what we're hearing, it could be closer to 2027. But strategically, a very important part of the business as they really try to ramp up compute, try to get more access to compute, and spend a lot to do so. But
I don't know
again,
how
Chris
this
Malone
affects
reportedly leaving OpenAI.
markets, though, to be honest. Public markets.
And then what we just showed on the wall that we made of the recent departures from the company, is it a stretch to suggest that this feels like a company in some degree of disarray or not?
Yes, Scott, from people that I'm talking to, but part of the deal when you invest in OpenAI is a certain level of volatility, whether that's executive volatility, whether that's management volatility, the growth of the business, the speed of the business. And from what I've heard from sources, it is a place where they hire quickly, but they also fire quickly. Again, we don't know what happened with Chris Malone, if he left in his own volition. If he was fired, we don't have details in terms of his exit. But you compare that to their largest rival, Anthropic, which still has its 7 co-founders that are still there. This is sort of par for the course when you talk to OpenAI investors who say they might have been surprised by certain departures, yet they have come to expect this. And as long as the key people, meaning Sam Altman, Greg Brockman at this point, and the CFO, Sarah Fryer, are still at the helm ahead of an IPO, they're comfortable with it. But it does highlight, I mean, compute is such an important part of their business. So in a vacuum, this might not be a headline, but given everything we know about the company lately, it is significant.
I mean, is it wrong to think that this in and of itself would be something that could just delay the IPO, despite, Sam Altman and Sarah Fryer being there? These are key people who have left recently. That you don't normally see that in a company that is fast approaching what we think would be an offering.
Unprecedented, I would say, is the name of the year when we talk about any of these AI companies. And I talked to somebody close to OpenAI last week who said, again, if this were just your average software company, or if this were, an airline or something going public, where it operated in a much more traditional way, a lot of these would be red flags. But the people that are close to the company say they just have come to expect this. And you have that volatility, that turnover, in a way that is just completely uncommon at other competitors. In terms of the timeline and just throwing anything off, I would say no. I mean, the bigger bear case for OpenAI is if for some reason they weren't able to build that compute. If there was some sort of huge bottleneck that we didn't know about that was a part of this story, that would be the bigger issue and the bigger hang-up, meaning that compute is so directly correlated to revenue. The more compute they build, the more they can grow their revenue. So if that were a hang-up and that were part of the story here, but I think in a vacuum, this one executive likely won't have much of an implication when we look at IPO timing.
All right, Kate, thank you very much. Kate Rooney coming up. United Airlines shares taking off. It's revealing today its largest international expansion ever. New planes, new routes. Our Phil LeBeau, he has the latest coming up.
All right. Why don't we take a little break from rotting our brains? How about that? Could read some institutional research. Eh? Do you know what that means? I certainly don't. Let's see. So X is like CNBC and Brian Lee delayed. This guy writes a lot. Okay. What else? Slop. This almost seemed interesting. Huh. Okay, I fear we may have degenerated into the Twitter black hole again. So, yeah. That's not good. Nobody wrote it and nobody will read it. Writers are triggered here. Hmm. Okay, this is why I need to get off Twitter. Okay, yeah. As soon as I go on Twitter, everyone pieces out. Okay, JP Morgan humanoid research. I don't know, guys. This seems pretty crazy. Kind of would rather just look at the markets, right? Could also go, no, yeah. Or hear what people are up to. I don't know. No. Let's see. Two more hours of this crap. Videos are good. Do more of these sizing things. It's crazy. Yeah. Guess what I want to investigate is something. Yeah. Jackson Hole on Friday. Oops, not 10 trillion. A little more than that. 40. NVIDIA. This crypto thing. And the pepper. And this chart here. Yeah. How are we doing in August? We got Mondays still in August, technically. So, It's possible to do this. This is the... Oh, I just got a newswire. Canada is doing counter tariffs for 700 products. But again, unless you own like a wood chips company or a I don't know, whatever they make hockey sticks out of, that like plastic stuff, carbon fiber. It's just hard to take it seriously. Peace out. It's all good. Yeah, I want to investigate position sizing here. For sure. So maybe I'll do another little practice sheet here, just to make sure that don't mess anything up here. Yeah. So let's see. I wonder what Barkin said this morning, FOMC guy. So if this is
Trading connection
a little worried about my level of leverage as well.
Market data connection reestablished.
But I think operating a lower leverage is better, just so I don't get stopped out repeatedly, which has been an issue. So let's see. This is kind of just seems pretty theoretical, but what actually happened again? Got this going on here. Let's see. Oh yeah, the trade's loaded. %50 win rate in the past month. Yeah, that sounds about right. Sounds about right. Yeah. So, what about today? I think anything happened today. All right. What do we got cooking here? Let's see. August 1st. Or whenever this thing started. Cipher. What happened on Cipher? Yeah, I mean, it's interesting. That was an ad. Pretty much this one was the first one. Here. I don't know what happened with this. Oh yeah, this is where the leverage thing was an issue. So RTX here. Yeah, what's crazy is I could actually map out the leverage I was using here, because that's where it's going to get interesting. So, yeah. It's a little crazy because they're like overlapping. Right? But basically, let me just do the numbers first. Okay. It's about 10 days into the month. Definitely had some losses. And the gains definitely, let's see. It's hard to say exactly what could happen, but yeah, if I started with this, we'll just say this. And then you do this. This is pretty much where we're at, right? Oh, not really at all. Maybe it was more like this. It's not right either. I don't know. I don't know. Uh, is that not it? Something like this. Boy, this should not be this complicated. I'm just adding like two numbers. Literally. So I'm getting up there towards 25 like I sort of expected to make, which is a lot, right? It's like one a day. Even though most of them don't finish in a day. But that's pretty much where it's at. And equals anyway, how many? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we're just barely sitting above 50%. But then the average win equals average of this, where how to do this. Yeah, just fix it. You know what I'm trying to do. This is dope if this works. This AI thing. Yeah. Okay. Wow, this thing is very slow. Wonder if it's purposefully slow. I don't know. Oh my God, this is ridiculous. Google Sheets, average of positive values in column. Isn't that pretty much what I did? I didn't do the parentheses. Oh, it's like average if, right? Average if. Okay. Average if negative. That ain't right. Oh. Less. Yeah, so that's the problem. Interestingly, yeah, win rate. Count. Count if. J. Should be an average, right? %60. Makes a big difference. Count if J to J is greater than 0. Or L to L is greater than 0. I want a percent. Why is this percent number? Okay. Oh boy. Less than 0. Oh, this was L to L. L to L. Okay, this thing is going ham here. I don't know what this thing is doing. Get out of here. Okay. Put these notes back. So this is what we got cooking. Is that right? Oh, it's because this is a number. L3. Nine. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, okay. So that's good. Now let's just make sure we understand a little bit about what's going on here. So this is dry. This is GM. Oh, nope. This is RTX dry GM Airbnb TPR BA Mongo Target twice JCI ETN Pounder Zscaler. Nope. Fast. Zscaler. Yeah. Okay. So that's where we're at. So, yeah. Something like that. Okay. Yeah. I think what happened here was we'll get into position sizes because there could be some interesting position sizing intricacies here. Basically, mean this. Whoa, something I messed up. R6. Oh, I see. Okay, well, anyway, average win, average loss. Yeah. And then median win. Median loss would be good. Median. Oops. Median F. Median. Oh, that's not a thing. Okay, well, anyway, that's fine. Basically, thing went up. Oh yeah, I should have put with the R. Well, the R would be, how do you do that? This times 3%. 0.03 times that. Something like that. Gee, maybe this was higher. That's what would make sense, right? No, that wasn't right, though. Anyway, for whatever reason, it went a little heavy there. Oh, this is an average. Yeah, whatever. Went a little heavy. Then with the GM, what happened there? Oh yeah, that was the margin thing. Okay. RTX and dry. It's definitely worked. And then GM, that was the margin thing. And then Airbnb. That was interesting. That was a margin thing too, except I got back into it. 151.4. 150.44. Lost like $200. Does that sound about right? Something like that. Okay. And then this one was not good. So what happened here? This is it open? Yeah. Yeah, I think so. So it's just not using a good till cancel order. This was on the 8th, the 13th. Actually fell a bit the day before, but only to 153. Only. No, it's actually. But anyway, that was a problem for sure. And then this was what? This was a little loss. Could have been worse loss. So what happened here? Oh, I think I just sized down a bunch for some reason. Definitely could have gone wide there. And then Mongo was a full-size loss, I think. I did go a little wider there. That was actually, yeah, it came back to bite me there. Okay. And then the first target was this one here, which I guess just got combined. Yeah. I don't get how those transactions fit together here. Be safely taking margin overnight. Yep. So if I look at the target transactions, 216. 216, 10, 8, 1154, 939, 1154, 939, 1154, 85, 810, 810, 10, 10. So that was just a mistake on 810. So what the heck happened here? 85, 216, and then at 149, 147 to 149, be 147. And then this one, so this one is at 937. And this one was, I sold it again. Huh. And then covered that same day. So it seems like I only have it on here once, but I did it twice. So what was going on 8, 10, and 8, 5? 8, 5 was somewhere here. Yeah, it was this, and then we'll see if I do it again on 8. Okay. Okay. Yeah. So let's see, target shows up here. Somewhere here. Okay, where's that? There we go. So it's definitely there. And then on 810, look what's going on here. That was a mistake. How did that happen? Definitely sold it first. Oh, yeah. Yeah. Let's see. Let's see. Is Target going to be on this list? Gonna guess no. But Yeah, it's not on that list. So that's interesting. I basically have no idea. I don't have any, it's not that I don't have no idea, it's just that was an expensive little mistake there. Okay. So, what that means is yeah, anyway, that's what happened there. And then JCI, what happened here? Was pretty normal. Not sure why. Oh, that was over here. Yeah, I'm not sure. Just spook. 149 to 152. Oh, I guess I didn't mean to cover it. I did that at 9:37, 9:39. 9:49 or whatever. 8:07 to 8:10. This is 8:10. This says 8:07. Yeah. It was over a weekend. Okay. Not sure why that was so small. ETN. Was pretty big. Pretty strong. And then P. Kept going after that volume. Pretty crazy price target from somebody on this 12th, 11th. Let's see. So that, yeah, there's definitely a design and supply agreement with a second top 5 Citigroup. Yeah, that'll get you. Undisclosed top 5 hyperscaler for kind of second. And there was some buying before that. Morgan Stanley to 108. And then Citigroup. Okay. And that Citigroup thing came out at the afternoon. That thing came out at, yeah. 11. And then 812. That was 811. That was got rocked on that. This is 812.13. Before we get there, this one was a margin thing. And then this one was a margin thing as well. Not a big margin thing, but a margin thing. And then maybe you wouldn't have gotten off if I didn't go for it. This was 812 to 813. 10 to 1009. 812 at 10. 813 at 10. Yeah, so 812 at 10. Guggenheim to 150 on 813. What the 10 a.m. 10:05. But before that, 812 to 813. So 812 at 10. 13. Definitely after this, which was 3 p.m. on 811. Friday, Thursday, Wednesday, Tuesday. Yeah. I don't know, man. It's just thing went up more. I don't know what to say. Okay. Anyway. Yeah, so that's that one. And then what else here? What's that one? SH. What the hell? WBD. That one was less somehow. The 13th. WBD. Okay. That was what was that? 812, 27, 10 to 814, 28, 958 to 350. 8 to 350. 12, 21, and then 17 here. So anyway, what was going on there? This is 12. Some sort of deal thing. Stay away from deals. Which we'll see what happens here, but Fox. That's the 14th. JP Morgan and Wells Fargo, Deutsche Bank. Okay, well, definitely went up. Oh, it's did it once me? Did anyway, this thing definitely went up. Some sort of deal thing. 11 or 12. California AG says Paramount trying to do blah blah blah. Pretty crazy. Probably shouldn't be doing something that's gonna do it. That was crazy. So I was saying if the deal doesn't go through, Paramount could be moving out of California since October if the company. Yeah, that was crazy. 1,600 times what? They already went on a run though, so I don't know. I don't know. Especially when you look at it that way too. Zoom out. All right, anyway. Did that. And then this was a something or other. Little sell by mistake thing. Oops. And then what? This was crazy though. So this was here. So as it goes lower, it's taking up less buying power, so you can add to it. Yeah. So up here, more of a what? 78 times 1. Well, we'll get to that one. 78 times 117. The small position, I think. 9100. It's pretty interesting. Okay. Yes. Okay. Okay. 17th. That was on the 17th. 14th to 17th. Okay. So that leaves what? It's another one that was 24 times 467. By about 3 times that big. 3 to 6. 3 to 6 times that big. 18. Yeah. So then what? This is a little whatever thing. I don't know what that was. 18. APH on 818. This is just a total mistake. Somehow only was $9. Oh, I see. So that pretty much worked. 8, 8, 8, 10, 126, 8, 12. Pretty much at a margin thing. And then eight. There's a little bit left. And then, yeah, got rid of it. Something like that. And then FAST 820. 813. So that was only 2 more times. Oh, I see. Exercising it. It's not 3%. ZS. Some sort of mistake. 18. Resell. And then buy it. $91. 11.15. This was at what? 11.14. Mistake. Okay, so that's fine. Whatever. 11.15 to 24. Okay. 8.18 to 8.20. 8.18 to 8.20. Right? Okay. And then what else? This. And then this. Okay. Which again, the sizing here is interesting. 824 to, yeah, sizing is interesting. Because what the sizing ought to be is, do want to mention that to Lucas. Where is he at here? I guess this was the one. This was the right window all along. Over here. Yeah. What is going on? Okay. at the blog. Substack. So where's this at? Posts. This is the GOAT chart. $10 years. What's interesting is, for whatever reason, there it is. 12 years, 37%. And those are the guys who did the pyramiding. Schwager. What? Wait. What is going on here? Comment. That was almost a sentence. What were we doing here? Something about I'm not sure we were doing anything else. I don't think. Oh yeah, the 3% bit. So the way that this is getting created is that over this minus this, and this is this minus this. This is this plus this. Is that over this minus this. Okay, so this is nothing to do with, oh, it is though, because this is based on this. And what you want it based on, here's how you want to do this. You have this, and you have this. And then this is account value. Um, account value, which would be F16. F16, whatever the account value is, over $1.3, or no, a lot, 10. Yeah, something like that. So then the risk is this minus this times this. Okay. Like that. And then the position size. Position size equals this times that. Yep. Sounds about right. So F16 is 2941. So maybe instead of risking 10% per position, which is possible somehow, make less positions. You do something like 5%, 4%. Let's do this simpler. Or even 2%. Just right here, risk of account is that part. %, I-20. Like that. Okay. That's what we're trying to do. Something like that. Okay. Yeah. So that mostly makes sense. But you also want you don't care about the percent you think it's going to pull back. You just want an entry of the target. And then how big you can bump the position size based on how much risk you want. So if you want to say, I'll risk 15% of my account, 25% of my account, 20% of my account, by all means, you can do that. But most people would say this is fine. Okay. These are just very big positions. Somehow. KDP, which is 119, 130. What was this? 119. I don't think it was this stuff. 119, 109. Maybe it was this. Pretty much, yeah. This was P. Whereas with the KDP, and that's kind of the giveaway. You're not getting that. So that's interesting. Okay. How are we doing here? So that's going to be a continual optimization. That one. So I can move this over a bit. That's what I was doing. But it's definitely in the cards. Huh. This is weird. Why did this move over? That's what I was trying to do. Okay. What was I doing? Okay. So yeah, this is gnarly. Takes up half of your buying power. It's maybe a 50-50, 55% trade. You can sort of feel it. Maybe it's that, maybe. Maybe but the buying power gets you. Yeah. But if you can find these, those are glorious. So maybe with a tie, go to the one with the lower buying power. I think that's plenty of breakdown on that. Okay. Interesting. So now that I've written that out, then, now, and when. That makes no sense. Let's do that. Then, now, and how. Okay. Great. So, wow, Gary Gensler. Okay. What are we trying to do here? Is this guy still cooking? Okay. He cooked. I still don't really get what he cooks up. Like, does he just talk about is thing still working? Bueller? Does he just talk about potential, like, VC stuff every day? Let's click around.
Stop wasting tokens every session on tool definitions.
YouTube.
We just rebuilt the massive MCP server to cut your AI agent's context overhead, allowing you.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
This is a nice way to start some little something. I could do that crazy intro. Where is it at? View details. Okay. Yeah. Something like this. I don't know how my camera got all the way up. Just, whoa. Hanging, just floating up there. And then also, I guess it would be nice to be able to do that, right? I mean, it's unnecessary. That's fine. Anyway, here's what he's got going on. Okay, so what to do here? Oh yeah, look for that weird intro. Gosh, what is going on here? Animation? Yeah. What do you guys think about these animations? This one's got the disclaimer on it. I like that. I like the looks of that.
This is Sam Putnam.
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 Could probably get rid of that. That's a little aggressive. This here.
This is Sam Putnam.
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 This is Sam
There we
Putnam.
go.
This is Sam Putnam.
Animation end. What was this? I just want animation.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Trade with me. Okay. Animation. And to read. So let's see if we can grab that. So we got a sizzle here. And we're going to find that one. Okay.
This is Sam Putnam.
This
There we
is
go.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam
That's
Putnam.
interesting.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Still not great. Faster internet, faster computer. Didn't really even end up using this one. And then YouTube. That's what we were looking at. So what did this cat do all
Kevin
day?
is very talented, but I don't know if it's going to be him, but he's a very talented guy.
So you're here tomorrow to ring the bell. Oh.
Gotta have like somebody doing the eye roll commentary. 20 is great.
It's just
Not in
adding numbers
2026.
Looking at
CBS
balance
footage of
sheets and stuff.
Chip
Making
component
baskets. I like
manufacturers,
baskets.
Chip components, like LSCCs in there.
Baskets are
plus
interesting.
Many others, Vertiv, etc. Right, but I mean,
as well is quantum. How do you think of it as
lock that? Yeah.
Bunch of stuff.
Let's review this, which is a Blackwell 6000. We've bought a few of these of building out AI software.
And then
5 launch
doing some
complexes
more
with 2 launch
highlighting
pads.
of
I just can't get over
SpaceX stuff.
the look of this place. All right, that was also boring.
NVIDIA's desktop-sized AI computer that is really designed.
And just come over here and say, all right, well, you know, I get it for 40% bigger basket size. That's actually a crazy would exceed
real
supply.
estate.
U.S. humanoid demand outlook is fundamentally anchored in
Where is
structural
this
labor
stuff coming
shortages
from?
rather
That's
than
what I
outright
wanna
labor
know.
replacement. Yeah. Yeah, I
Is
can
this
agree with
really
that.
old? Wow, that quality is very good. Maybe
agree.
it's the same exact quality. That quality's pretty good. Okay.
Okay.
Find this report. Yeah.
Wow,
25
projected to reach a
August.
shortage of workers
GPM.
of 1.6 million by 2030. I hope that's not including a recession.
I just don't get where is this an old report or because when I searched,
I feel like the number would actually be a lot higher if there was a recession. Because if there was a recession, you know, let's just say recession does 15% unemployment.
Right.
That would be 158-ish million times 0.15. 23 million.
Oh, whoops.
There
we go. This.
Million unfilled jobs.
Ran out of.
To be filled by 2030 in manufacturing. So that, you know, offsets some. I'll just put that over there.
Okay.
That's an interesting estimate. Manufacturing industry. Okay. In warehousing, humanoids operating at $10 to $12 an hour versus $30 for human labor create an addressable pool of 800,000 roles in 2026, growing to 1.2 million with penetration ramping. The consumer segment offers the greatest long-term optionality, scaling from 10,000 units towards 225,000 units. Assuming humanoids will serve as a complement to human labor rather than a substitute, the full-time equivalent coverage would improve to 1.2 human equivalency by 2030. Interesting. These are some progressions here that they are
just
projecting.
Only coming out of the left earbud now.
I mean, projections are always funny because they're estimates.
Weird.
They could be way off. I expect humanoid market to develop first in the industrial. We saw that. Customer willingness to pay is anchored into hundreds of dollars per month.
There we go. Okay.
Safety, trust, digital AI. Good data is all you need. Doesn't have to be great, is what you're saying.
Just search it.
Large motion tasks. Dexterous hands. Okay.
Where is this report?
This is a long thing. Holy smokes.
It's long, but I don't know. Asia Pacific equity leadership. JP Morgan humanoids. Where is this from? May 16th. Ideas and insights. Oh boy. I don't understand where this is coming from. These PDFs. This Asia. Okay.
Dexterous hands. Okay.
Huh.
That's a little boring. The rest of this is a long thing. Holy smokes! So they use AI to write all this?
Yeah, see,
That
that's
actually
the
doesn't read
problem.
like AI.
Where did this come from? Where did this report come from? In the line. You don't know where it is, do you? Don't know where it is, do you? That's not good. Oh, it's proprietary. My God. I gotta have this thing be up instead of down. That makes a big difference.
What we got over here?
Growth, not great for the equity market. That also changes the disciplines around diversification. The Great Moderation era, which gave rise to simplistic allocations like 60-40, because you had that relationship. I think we may be, in a more secular way, looking a little bit more like that period from the mid-60s to the mid-90s.
Well, I mean, some are debating the viability of the 60-40 now, right? Just given where bond yields are, where bonds seem to be trading. There's a lot of cash on the sidelines, too. You know, by some estimates, $8 trillion in money.
But that's money markets, offsetting.
He's also just talking, so could just
savings
talk.
accounts. So I don't know about how much money there is actually on the side.
Even individual investors that are not ultra wealthy have access to assets.
Okay.
That's interesting.
So what else?
I wanted to be doing things I can't.
Just gonna
And
watch
then
this.
Silver is not inevitable. How I could services revenue increase 16% getting hit here.
When he's looking into it,
is restructured
balance
ended on.
sheet.
We are expecting margin pressure as the market has become more promotional. Primarily,
and then a random earnings report.
Free cash flow.
NVIDIA is going to do because
I don't think there's any like secret sauce.
And at a
there.
30% margin, you would
Except for
generate
the
a scale of $6.3 billion.
getting super like.
But why would
stoked on
you
Tesla
only
and stuff
use one?
every once in a while?
You forgot it. We might
In the
end up
real estate
seeing
stuff.
from here trading. So
that's
basically
long. So anyway,
7,000
let's
hours.
see if he put out some videos today. Figure out what's going on here. Yeah. Here we go. NVIDIA earnings and Trump doing war. So, what about this?
The Wall Street Journal just reported that Anthropic expects their potential revenue to be $30 trillion at some point in the future. That is like a total redefinition of total addressable market, since that's basically 100% of the entire GDP of the United States in 2025. Which sounds bullish, maybe, for NVIDIA. And that's what we're going to talk about in this segment. NVIDIA expectations for earnings, the new jalapeno chip from OpenAI. We got to talk NVIDIA robotics, NVIDIA open weight, enterprise AI, GPU rental rates. What's the trend that's going on? What is Edgewater telling us about GPU and server demand? Where is server demand plummeting? And where is it taking off? Let's break it all down and let's get started. So first thing that we need to do is recognize that NVIDIA earnings are tomorrow. They are, as usual, after the bell. We do expect NVIDIA to beat. Historically, they always end up beating. Current numbers, just so you have them really quick, on adjusted EPS, you can write them down. So when the news comes out on the Wire service, which you could run that through the Meet Kevin Alpha app if you want, or I'll be live and we'll talk about it as well. So Write these down. Adjusted EPS expectations, $2.09.
I don't
NVIDIA
wanna
beats
watch NVIDIA
7
earnings
out
with
of
someone
8
else.
of the last times.
I guess
EPS is
people wanna watch
expected
it
on a
with me.
GAAP basis at $2.15.
What do you
NVIDIA beats
think on
8
NVIDIA
out of 8
tomorrow?
times on this.
NVIDIA?
Revenue is expected at $92.29 billion with a beat 8 out of 8
Sorry
of
for
the
the
last
echo.
times. Bank of America actually thinks they'll be closer
Just
to
starting to
94
think
billion,
that,
and that ends up being a really big deal for NVIDIA because even though NVIDIA can
maybe
beat on revenue 8 out of 8 times, NVIDIA in the last
having a microphone would be the
4
worst
earnings
thing in the
releases
world.
has gone down afterwards, which is an insult to this business that makes so much money and is so freaking cheap right now. It's crazy. But anyway, $94 billion is the Bank of America expectation. You really have to beat the expectations that are on the higher end. So current expectation on average consensus is 92.29. Usually for the stock to go up, you have to beat the higher of the expectations. It's such a weird like psychology game. Anyway, net $50.98 billion expected, which if you do the math on that, the net divided by the expected revenue means they're taking about 55.2% of the bottom line. Every dollar that they make, 55.2% is after tax profit. It's so good. Anyway, the big focus on this earnings report is all going to have to do with margin, especially since we just saw a 15% price increase, which was actually lower than the 20 to 30% price increase that Edgewater Research was projecting for the third quarter. We had a 15% price increase to offset some of those memory prices. And we've seen some respecking and some rejiggering of some of these leading edge NVIDIA chips, where we're seeing them come in with lower headroom for VRAM, so basically lower exposure to that memory issue, which then makes you wonder, like, why are we creating shrinkflation in chips? Why are we reducing memory there? But it could also be that maybe we just don't need that much memory in these chips. We'll talk about that in a moment as we talk about enterprise AI, which I think is a really important focus, and it makes me really excited about the future and investing in stocks because I feel like we're sort of, as a startup, at the bleeding edge of what enterprise companies are doing with artificial intelligence, which is totally different than, in my opinion, what the Frontier Labs are doing. Anyway, we'll talk about that in just a moment. So, the Jalapeno inference chip was just announced by, OpenAI via Bloomberg. So Bloomberg released this article that says OpenAI claims its new chips can outperform NVIDIA processors in tests. This chip is called the Jalapeno chip. And it beats the GB300 in their benchmarking. Obviously, this is biased, and I'm bringing this up because it is something that people see as a risk factor. Now, this Jalapeno chip is made in partnership with Broadcom. Now, Broadcom is a really interesting play because they are pretty heavily indebted. Their balance sheet kind of sucks, but their valuation is dirt freaking cheap right now. They are trading for under a 1 peg. We just did a big analysis on them in the course member live stream. I always encourage, if you haven't yet, consider joining the Meet Kevin membership, and you can get this analysis on a regular basis. We do have a massive price increase at the end of the week, and we're changing the pricing structure, so existing members will be getting sort of a goodie bag that other people joining afterwards won't get. But, I mean, Broadcom, according to our stock AI, has a $905 price target. The issue is we have a red flag on the balance sheet for the company because they are so heavily indebted. So your balance sheet is a red flag. Valuation is just a clean green flag. They're down like 26% from their peak after their last earnings because of the timing of delivery of ASICs. Okay, so what does this have to do with OpenAI? Well, they're doing the ASICs for OpenAI, and they're also doing the Google TPUs. So OpenAI now, like, hey, we're getting ready to tape these out.
It's pretty loud.
Probably bullish Broadcom. It's kind of bullish the whole stack.
Pretty loud.
But these ASIC producers, so think Marvell and think Broadcom. Broadcom has better margins than Marvell, but Marvell has a better balance sheet than Broadcom. Marvell is also a $11 billion company. It's up about 5.6%. I've got exposure to Marvell. I don't have exposure to Broadcom, but I really like Broadcom. Like, I'm really tempted by it right now. $1.7 trillion company. But these are your core sort of ASIC producers. as inference plays, basically. And that's what OpenAI is saying here. OpenAI is telling you, look, we're making this chip not to compete with frontier bleeding edge training for the next GPT 5.6 model.
That should be pretty loud.
Or, the next Anthropic Fable model. What we're doing is we're trying to create a chip that reduces our cost structure for when we're providing inference solutions, and we're trying to get those wherever we can get our hands on.
Loud.
We can get them from ASICs, great.
Super loud.
From SRAM-based chips like the NVIDIA Grok that was just announced for ultra-fast token generation, super low latency, imperceptible latency for like voice AI, customer service. That's an NVIDIA product. They acquired essentially all of the IP from Grok or Grok, G-R-O-Q.
Really
That's
loud.
another competitor to the Cerebras inference chips, which are really good. I hated Cerebras at IPO. I thought $370 was
really
way too expensive. But now that it's come down a lot, like half from there, I actually think it's a pretty good deal. Just little sidebar notes on where my head is on all of this. You can see there's a lot of from the lab saying, hey,
it's almost too loud.
Just focused on the greatest leading edge frontier
Maybe
chips from
before
NVIDIA,
I do a video,
we're also
turn it
really
down a little
focused
bit.
on how can we fill out our inference stack. And NVIDIA is realizing this. And that's going to be one of the risk factors
Probably want
for
to chill
NVIDIA.
on it, actually.
And it's
I wonder if I can just
probably
get a little
NVIDIA is
closer
selling
to the old
valuation. NVIDIA's PEG ratio right now sits at about 0.69, which is an insult to NVIDIA how cheap this is. This is why our stock AI indicates this has like a 4x upside. At our price target is $886 for NVIDIA at a fair value, just because their margins are so high. Why then are they selling for so much lower? Like, what's going on? Well, let's simplify it and understand why NVIDIA would potentially be selling for this much of a discount. Okay, so first of all, you've got NVIDIA. It unfortunately has this large company deficit.
There we go.
It's $5.7 trillion. It takes a lot for a $5.7 trillion stock to move. So that makes it hard. That's one thing it has going against it. The other thing is, it is not the sole competitor in ultra-fast token generation, because you have Cerebras, who's actually ahead of them. This just entered production with NVIDIA, which it's an NVIDIA product now, so it should do well, but Cerebras is ahead of them. Cerebras just needs to scale up how quickly they can manufacture, which Cerebras expects to get to scale in 2027 and 2028, probably around the time that Grok does. But the issue here is you have almost two equal, I would almost say Cerebras is ahead competitors, whereas NVIDIA has this big moat in the bleeding edge, right? You think about like the Vera Rubin space compute, which in fairness, you've got Elon Musk talking about how Vera Rubin space optimized chips are going to get launched into space in Q4 27 and then scale in 2028. That's great, but that's a bit of a long shot. That's sort of your Vera Rubin for space. I would call it hope right now. It's a little early for that, and so that's getting discounted. Grok is getting discounted. Its size is getting discounted. Like, can this really 2x from here, right? That's the problem. 4x is going to require this being like a $20 trillion company. Based on how much money they make, you could justify it, but can you actually get to it is the other question, right? Then robotics are still very early. NVIDIA is just announced yet another sort of robotics release, if you will.
Pretty good.
It's the Jetson Orin Nano 2 robotics computer for sort of lower power edge computing. That is the future, but robotics, again, it's a future hope. That could be a
now it all makes sense
before we really scale GPU,
a little lighting issue here, but
vision-based training for robotics. You're more
we got much bigger problems than the lighting on the side of my face here.
Now.
So
I should be careful with the word lab, since the frontier labs use a crap load of GPUs, right? Like Anthropic and
Pretty
OpenAI.
much good here.
That should not be confused with
I will see you guys
robotics,
tomorrow.
or very, very early stage. Mostly because you still have issues.
God bless streaming. God bless cameras. See ya.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.